Good morning and welcome. This is NDTV Profit. My name is Harsh Saita and you're watching All You Need to Know. And we'll try to cover as much of the top headlines over the next half an hour or so. We'll try to gear you up for trade today. Let me first start off with where US markets and global Qs were at. US markets off to a weak start. NVIDIA led the tech decline. Concerns over higher valuations seem to be weighing down the stock. Hindalco's US subsidiary Novelis to go public, proceeds from the issue to go to the promoter Hindalco. Now Amazon has entered the Dow Jones 30 index. It will replace Walgreens in that index. And yet another big block deal, Yum Brands likely to sell around 4.4% stake in Devyani International. That's what it holds at a 7.6% discount. Last off, mutual funds pick a large part of Whirlpool's stake. In fact, SBI Mutual Fund has bought 7.5% of that 20+% stake sale. Now, let me first off go to global markets. Well, big tech really dragged US benchmarks. You saw the Nasdaq down almost 1% in trade yesterday. And the drag largely came from a 4% decline that NVIDIA saw. Now, there's some bit of caution turning towards some of these tech stocks, and especially with regard to NVIDIA, there are analysts which are throwing a bit of a caution in terms of their advice. They've seen NVIDIA run up quite substantially over the last year or so, and now there is a more cautious note on that count. You saw the Nasdaq 100 down around 0.4% in trade yesterday. Sticking with the US, the S&P also saw a decline of around 0.6%, and the Dow was down around 0.2%. So some bit of drag where US indices are concerned. I'll switch over to Asia because that is even pouring on to Asian indices and Asian sentiment. Outside of Hang Seng, you're seeing some bit of pressure. The Nikkei is down around 0.1% thereabouts. Shanghai absolutely flat. But you look at the Kospi as well as the ASX 200, both of which are trading lower at the start of trade today. So Asian indices under a bit of pressure on the back of, and they're mirroring where the US markets have left us. Around 0.25% decline on the Kospi, around 0.2% down on the ASX 200. So the Australian index probably the top loser, at least at the start of trade today. I'll quickly move on to bonds. Well, the US bond yields in focus around the 4.3% mark yesterday when we started trade. Today as well, what you're seeing is they've come off slightly from those highs of yesterday, and the dollar index has tracked that. Just below the 104 mark is where the dollar index is at. But nonetheless, the US 10-year is continuing to hold up above the 4.27% mark. That's still quite elevated. Today, two things in focus. One is, of course, the fact that you will have the minutes of the Federal Reserve January meeting being released today, US time. So look out for that because that may have a reaction on both bond yields as well as the US markets. That will be the key. The other one, oil, not much of a change. We're seeing oil just about, the Brent is just about the $83 a barrel. NYMEX crude is on your screen. That's where we are at, where oil is concerned. But that's all with regard to where global markets are at. The global handover in terms of market seems slightly weak. So we'll have to wait and watch as to how our indices open, because we're touching all-time highs. So no complaints on that count. But with that, let me take it to Agam for the FNOQs, because that'll hold the key. Agam, we're at near all-time highs, despite the drag on global indices. What can you tell us about what the FNOQs are indicating?
Right, Harsh, the big positive is that HDFC Bank has started to see short covering, and that perhaps is going to be the driving factor for the markets because of the significant weightage that it has on all the key indices. Now, as far as the Nifty is concerned, another day, another high, advancing coming through, and this time the Nifty has closed near the mark of 22,200. We are seeing a little bit of uncovering though, however, as far as your futures are concerned. In fact, their open interest has declined around 3.4%. Moving on, as far as the Bank Nifty goes, that's where we haven't seen too much change in OI, but perhaps a little bit of decline in open interest and some squaring up of positions. But as far as the index itself is concerned, it's moved above the mark of 47,000, up by around 1.2%. That's a positive. Now, as the Nifty moves higher and perhaps on expected lines, we see more and more puts being written around 22,000, 22,100. And that also brings us to your overall open interest range, which is also ever so slightly shifting higher. And of course, the 22,000 mark strengthens further as one which would give you a little bit of support in the near term. On the higher end, we're seeing a little more writing continuing to build around 22,500, 22,600 calls as well. Let's move on and talk about the Bank Nifty. Now, this one is going to be an interesting one. As we see the Bank Nifty break out of a range it was been moving over the past 7 to 8 odd sessions. Also, the fact that it has moved above the mark of 47,000 and stayed there. That's the reason why we are going to keep an eye on 47,000 at the moment. As you can see, the most amount of traction is around there. And on the higher end, we could perhaps see a little bit more resistance around 47,500. Remember, that's only about 1%. So, it's not too much for the markets to, in fact, scale as much. So we'll be keeping an eye on 47,500 today. As far as on the lower end is concerned, 46,000 is a firm base for the Bank Nifty. In terms of some other key movers, we did see Deepak Nitrite advance. Longs there, but shorts for Balrampur Chini, Hero MotoCorp, Coromandel and Cholamandalam. And of course, in terms of stocks which saw unwinding, we did see short covering in RBL Bank and HDFC Bank, something that I've been suggesting, and longs unwinding Coal India, Federal Bank and Tata Steel. But Harsh, today is going to be the day about HDFC Bank because of the weekly options expiry. Let's wait and watch whether or not the strength that we've seen yesterday converts from short covering to fresh longs. That's something that we'll be watching out for today.
Well, interesting cues. Thanks so much for that, Agam, for bringing us, what the FNOQs are indicating. Lots of interesting names that Agam seems to have covered. The likes of a Federal Bank and HDFC Bank, Balrampur Chini is going to have their analyst call today. So keep your eye out on that one as well. Plenty of movers to talk about, but let me first take it to probably what is likely going to be the largest mover. Was a very large mover in trade yesterday. Z has clarified that it is not involved in any negotiations in relation to the Sony merger deal. Now, this is a simple clarification coming from Z saying that the deal seems to be off, at least. They're not involved in absolutely any negotiations. Stock up 8%, as you can see yesterday. Of course, one needs to wait and watch as to what kind of reaction that will warrant in trade today. But it seems like that could have a negative reaction. But the other one that will be in focus, and it's Hindalco. Now, between last time's high clocked a few months back versus the high clocked yesterday on the Nifty 50, Hindalco is the top underperformer. It is down nearly 15% since the last time, over 15% in fact, since the last time the Nifty clocked its all-time high. Now, we have the US subsidiary of Hindalco, Novelis, which has been the reason why the stock has moved. And the company is set to file a confidential IPO, the proceeds of which are going to go entirely to Hindalco. We have Saloni here to give us more perspective. Good morning, Saloni.
Good morning, Harsh. So yes, Novelis, which is Hindalco's US wholly owned subsidiary, has confidentially filed for the IPO with the US SEC. So what they have said that the commerce shares are expected to be offered by the sole shareholder, which is Hindalco Industries in this case. And Novelis is not going to receive any proceeds from the sale of this, which means that whatever stake that they plan to sell, the proceeds from that will be given back to Hindalco. And the company, Novelis, expects the offering to be done after SEC finishes its whole review of the document. Now, to just give an understanding of what a confidential IPO is to our viewers, it is a draft statement which is issued to only the regulator and is not out to the public. It is to keep the details and the financial information private, till the time the offer actually goes through. Now, when we talk about the confidential IPO, we obviously do not have the numbers as to how much they are planning to raise and what other details that they have. But to just give some context, Hindalco had acquired Novelis in 2007 in a $6 billion all-cash deal, which included debt as well. And now Novelis contributes over 60% to Hindalco's revenue. And as per Prabhudas Leeladar's estimates, based on the March 2026 estimates, they expect the enterprise. They actually value the enterprise value of Novelis to be around 1,200 billion in rupees. So we'll actually have to see how this process goes through and exactly when it will eventually lead to listing, and how much proceeds will Hindalco also get, and how, actually most important question is, what will Hindalco be doing with the proceeds as well?
Right. All of that to be watched out for, of course, going forward. But the immediate stock reaction probably in trade today at the start of trade. Thanks so much, Saloni, for all of that perspective. Now, switching over from Hindalco to IT, my colleague Tushar spoke to Tech Mahindra CEO Mohit Joshi on the potential job opportunities in the tech space amid the advent of artificial intelligence. Here's what he had to say.
Look, like I had said in the session, right, I do feel that this is a wonderful toolkit, and it allows people to really expand their capabilities very dramatically, right? Whether it's in terms of design or the actual coding or testing, it's a remarkable set of toolkits that allows you to perform at a much higher level than earlier. So I do feel it is an overall huge positive, right? Given the workforce that we have, given the young workforce that we have, I feel that the opportunities truly are limitless, because technology or AI is really expanding the size of the pie. I think we have to be focused on just the massive expansion that the global economy is likely to see because of the promise of technology.
Right. Also, while we are on IT, we had TCS's K. Kritivasan, who's the CEO at TCS, and he suggested that next year will be better than this year for the IT giant. So, again, there's been a run-up in IT, but keep your eye out on that space, because some statements which seem to be coming seem to be positive. With that, let's slip into a very short break. More, of course, on the other side. We'll keep giving you updates on what you need to keep your eye out for.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching All You Need to Know here on NDTV Profit, kickstarting your day with all of the news and action that you need to watch out for in markets. We will stick to individual stocks, and we have a bunch of stocks which will be in focus on the back of all the corporate announcements that have come over yesterday, as well as bulk and block. Let me first start off with Anushi. She's joining us with 2 to 3 stocks which she's picked out.
Right, morning Harsh. So not 2 to 3, I have picked out 4 stocks for today. For starting off with Minda Corporation Pricol, which is in focus. Again, over here, the CCI has approved the Minda Corporation stake purchase of about 8.8% stake in Pricol Limited. Again, it is to be noted that the Minda Corp and Pricol saga has been going on for a year now. With, if we look at the past history itself, with it first buying the stake in last year February, but now just recently in Jan, Minda Corp had exited its entire 15.7% stake for a consideration of about 657 crore in Pricol Limited. And now again with this CCI Nord, the stocks would be in focus. Now moving on to Thermax. Thermax has entered into a license and technical assistance agreement with a Flowtech company based in South Korea. This is to manufacture products related to its chemical business portfolio, which would be for a consideration of about $300,000, of which 50% is to be adjusted against the royalty payment for the technological support provided by the company mentioned. Next on the list is Ashok Leyland, wherein the company is setting up an integrated commercial vehicle plant focused on the green mobility side in Uttar Pradesh. With this, the plant will have an initial capacity of about 2,500 vehicles per year, and then they plan to add up to about 5,000 vehicles additional expanded total capacity over the course of the next few years going ahead. And last on the list is GR Infra Projects, wherein its arm has entered into an concession agreement with the Sri Mata Vaishnav Devi Shrine Board in Jammu Kashmir. This is for a ropeway project for a consideration of about 200 crore. So that is on the focus again. But another development in GR Infra is also the share purchase agreement that they have entered to sell about 7 of their wholly owned subsidiaries. So this expected date for completion is again before the 15th March 24 deadline that they have set out, and buyers in this include Bharat Highways Investment Trust. So it is to be noted that the 7 wholly owned subsidiaries contributed up to about 16.5% of the consolidated revenue for the company as of FY23. So these are the stocks that should definitely be in watch out today.
Absolutely. Thank you so much for that roundup, Anushi. Definitely with regard to Pricol and Minda, 8.8% stake is what has been approved by the Competition Commission of India. Need to wait and watch whether Minda makes that move or not, because Minda wanted a majority stake, so one will have to wait and watch as to, of course, approval received, but whether they actually land up making that move. Now that only 8.8% has been approved, they've sold the entire 15.5%. So very interesting piece which is playing out over there. Keep your eye out on that one. Now, more stocks in focus. We have Varsha joining us with the key details on some of the others which are in focus. Varsha.
Good morning, Harsh. So let's start with 2 stocks where we have QIP issues. First is Swan Energy, wherein they're going to raise 4,000 crores through QIP. Base deal size is 3,000 crores with upsides option of rupees 1,000 crores. Now, floor price has been set at 703 per share, wherein proceeds will be used for investments into units and for repayment of debt. Also, then we have Union Bank of India, where it has launched QIP. It launches QIP to raise almost 3,000 crore. Now, approved floor price is at 142.78 per equity share. Now, floor price is at 1.1% premium to yesterday's closing price, and issue is open on Feb 20. Then we have Varun Beverages, wherein they've entered into exclusive agreement to manufacture and package Cheetos in Morocco. Now, expected date to start this commercial production is May 1st of 2025, and production will be from their own manufacturing unit. And for this, the capex is to be done at rupees 100 crore. Now, this appointment is in addition to the existing distribution agreement that Varun has with PepsiCo snacks portfolio consisting of Lay's, Lay's, Cheetos, Doritos in territory of Morocco. Then lastly, we have ABB India, wherein they have come up with their Q4 FY23 results, where you see there's an uptick in revenue of 13%. While EBITDA margin is flat at almost 15% and net profit is up 10%. Now, the growth in net profit is driven by operating leverage, then differentiated offerings and customer preference. Also, if you see order books, so total orders are up at 35%. This is so strong contribution by large orders, and also orders for Q4 FY23 stands at 3,147 crore, while total order for current year 2023 stands at 12,319 crore.
Right. Thanks so much for that, Varsha. We are, we're going to be on the lookout for a lot of those. ABB, of course, among the earnings, but outside of that as well. Let me take it across to Mihika. She's standing by to take us through some of the bulk block deals that we have our eye out on today as well as yesterday. Stock reactions are across the board, so watch out for these.
Yes. So first we have Whirlpool India, where the seller was Whirlpool Mauritius, which sold around 3 crore shares, which was around 24% of the company, and the stake was sold as 1,277.02 a piece. Now the buyers, SBI Mutual Fund, bought the largest amount of 91.5 lakh shares, which is around 7.2%. Additionally, Aditya Birla, Sun Life Society General, ODI, Nippon India Mutual Fund, and other two brought stake as well, and the stakes were bought at 1,276.99 a piece. The purpose of the stake sale was mainly for Whirlpool Corporation to use the transaction proceeds to reduce their debt levels and enhance their balance sheet flexibility. According to an exchange filing back in November, Whirlpool had earmarked around a $500 million loan payment in the December quarter of 2023, and the stock has fallen around 13% since November 30th. Now, Whirlpool's current debt profile, debt as of 31st December stood at $6,414 million, and they target to pay $500 million in Q4 as itself. Then we have Tourism Finance Corp, where the seller was Kopara's Sajivi Thomas, which sold 34.44 lakh shares, which is around 3.81%, and Pansare Holdings PT, which sold 4.7% stake at 209.75 a piece. Now, the buyer was Aditya Kurma Halvasia, which bought a total of 13% of the company at 209.75 a piece. Now, holding prior to the stake, Kopara did have 4.9%, while Pansare Holdings had 8.8%. And lastly, we have Devyani International, where Yum Restaurants India is likely to sell 4.4% stake, and the Yum Restaurants does seek around $98 million via the stake sale, and the floor price is indicated to be at 153.5 rupees per share, which is at a 7.6% discount. And as of 31st December, the current holding of Yum Restaurants was 4.4% in the company.
Right, thanks so much for that, Mihika. Of course, we'll keep our eyes out on Devyani International, that one, a likely mover in trade today. Now, quick update. We'll switch focus from markets. Update on the farmer protest. Now, the protest march is expected to start at 11 a.m. Farmers will resume their Delhi Chalo march today. Ahead of the march, heavy earth-moving equipment, including Pocklane and JCB, that have been further modified and armor-plated, have been acquired by protesting farmers and have been deployed at border locations. Also, as an alternate route, the protesters are trying to make a ramp by putting sacks of soil on the Ghaggar River. Meanwhile, the Farmers Union has appealed to all the Kisan platforms to support their protest in their constituencies. Noida has issued a traffic advisory in anticipation of the traffic snarls in the city. Remember, the farmers rejected the centre's 5-year proposal on MSP as well as other demands. But with that, we're completely out of time on this edition of All You Need to Know. India Market Open will take all of the action forward. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Hello and welcome. You're watching India Market Open. It's midweek, and despite weak global cues, guys, implied Nifty still indicating to a 7th straight day of market gains this morning.
We're defying all odds. We're defying all odds if you look at what's happening around the world. But India is literally on its own trip. Fantastic close yesterday, right in the fag end.
Yeah.
And Agam, you're betting that we're going to continue seeing that momentum?
I don't know if the momentum will continue, but we're certainly going to see the Nifty and the Bank Nifty remain where they are because of HDFC Bank's contribution now starting to come through as far as maintaining these indices are concerned. I'm going to, of course, talk a lot more in detail about this, but HDFC Bank's recovery is a positive for the markets.
So another question is, how much can Shashi talk fuel the change in sentiment on HDFC Bank? All that and more, of course, on the trade setup. But let's quickly take you through what's happening across the world and the global cues that are going to matter. So global cues aren't that positive, frankly speaking. And in US markets, what's weighing down is your tech stocks. Valuations have run up massively, and the key culprit there would be Nvidia. In fact, the Nasdaq closed, nearly 1% down, over 140 points. Now, Nvidia, ahead of its numbers, of its quarterly results, dropped about 4.5%. But put it in perspective, just in 2024, this chip maker has gone up run up 40%. All the mega caps have run up massively. So what you're seeing possibly is a bit of profit booking. You saw in that sense the 10-year also ease off back below 4.3% on the 10-year treasury. So a bit of relief over there. Remember, it's a truncated week of trade as far as US markets are concerned. On crude, an interesting play. Crude has actually slid, and one of the reasons could be where you're not seeing that much firmness, at least in the Brent. You're seeing the NYMEX rates right now, but at least in the Brent, is because gas prices have plummeted in the US. Because of El Nino, they're expecting a warmer winter. You're going to see cheaper gas, and then perhaps demand for crude will not go up as much as well. Asia is the other one that we should pull off before we get to what's going to happen domestically and the trade setup here. Asia across the board is looking mixed in a sense. Japan a little weak because business sentiment index has come in quite lowest since April last year actually. Hang Seng in the green. So mixed cues in Asia. Perhaps we will beat that overall trend and look at a positive start here. At least implied open is showing a slightly positive start, Agam.
Yeah. So a bunch of things that we want to address here. Firstly, that sure, we are at life highs at the moment and we are looking at a little bit of momentum, but the traders around now are not as convinced of the sharp up move because of valuations as well as, well, several other challenges with respect to the market, and perhaps some amount of consolidation is also on the cards. But what is also positive is that the base around 22,000 has been further strengthened, and that's indicated by further put writing. Moreover, on the higher end, your higher end of the range has also shifted higher, and now we're looking at some amount of resistance, perhaps around 22,500, 22,600. And this is not just pertaining to this week, but also perhaps going into the next week. But as I've suggested, a lot of analysts out there are of the opinion that the Nifty perhaps would not move up substantially higher from these market levels, but consolidation is not out of the question at the moment. Now, the big move in yesterday's day of trade and the outperformance came from the Bank Nifty, and that was largely on account of HDFC Bank. The Bank Nifty moved above the mark of 47,000. It also moved and broke out from a certain range it was trading within over the past 10 to 12 odd sessions. And now that it is closed above 47,000, the question is that can we expect a little more short covering? A lot of that was on account of HDFC Bank. In fact, HDFC February futures open interest declined by as much as 8%. And as we know that it was the top contributor as far as the Bank Nifty and the Nifty's advance yesterday was concerned. So we certainly are looking at that little bit of strength building in it. And we are in fact looking at advances for Kotak Mahindra Bank as well, which contributed to the rally along with Axis Bank and ICICI Bank, which have been relatively stable of late. So that perhaps at the moment is providing the bulk of the support to the key indices. The question really is that are we looking at consolidation, and if we are, can we expect the seas of volatility? That's something that we're going to keep an eye on.
Just to bring in HDFC Bank, Agam, you talked about how that was the key contributor and potentially could be a big contributor to the Nifty, even if it has to sustain at these levels. And it's not FIs. For the longest time, we've talked about how FIs are the ones that actually like stocks like HDFC Bank, and the DI interest has largely been across the broader markets. But to just put numbers to this, it's not just the FIs. You had Parag Parikh that increased its stake on HDFC Bank as of the end of Jan statement by about 23% to be precise. You had a whole bunch of PMS, so Unify, case in point, increased their exposure to HDFC Bank. You've had a whole host of other mutual funds, PMS, have actually gone out and increased allocation to HDFC Bank. So this time around, the story about this bank is not about FIs and the love that they have for the counter. I think it's unanimously talked about of how HDFC Bank is attractive or was attractive at 1,400.
So the big takeaway is smart money is back on HDFC Bank, and one way or the other, you're going to see that.
Yeah, and I think it's about time, and I think the management has done whatever. They were very. I mean, they also, I think the streets got to be empathetic now, right? Yeah. They've told us and they've indicated that there were mistakes made, communication was a challenge, and they will fix all that. And I think that's what investors are taking heart from. That's the HDFC Bank story. Talking about the markets, I do agree it's going to be maybe an extended period of consolidation, largely because there are no more triggers left. You've got the elections, which is still a few months out. You've got earnings that's behind us, which have largely been in line. I saw a Citi note this morning that said that FIIs or FPIs are waiting on the sidelines. So while India looks very tempting, there is a strategic story, there is a long-term play that's underway, valuations still look very stretched. So they will be on the sidelines until either there's a price or a time correction. And I think while a price correction, not necessarily, but a time correction at this stage may be warranted. The VIX continues to remain above 16. So while the trend has been pretty solid for the last 6 days, the VIX at 16 is what may give a little bit of room for some easing coming in on the markets. But let's take you through stocks. Lots of counters to watch out for. It's the last few earnings that we've got, and it's ABP that reported numbers. A pretty solid set of earnings coming in from ABP. Revenue was up 13.6% to come in at 2,757 crores versus 2,426 crores. EBITDA was up 14.5%. Margins were also flattish, so they were at about 15.13 versus 15%. Net profit saw a jump of nearly 11% to report a 338 crore profit for the quarter versus 305 that was seen in the same quarter last year. So you want to take a note of that. They also approved a final dividend to the quantum of 23.8 rupees per share. So looks good for ABP in terms of earnings. It would be a stock you want to watch out for. It's been an underperformer over the last 6 weeks, but a little bit of gain could not be ruled out in today's day of trade. The other few that you want to watch is Hindalco. Remember, the stock had lost 12% post Novelis reporting its earnings a week ago. The concern on Novelis was not really the earnings, but the cost and delay in their project, which led to the counter losing over 12% in the last 1 week. What you want to take note of this morning is that its crown jewel Novelis now is going to be seeking approvals for listing on the US markets. Now, what this will mean for Hindalco, we will of course break it down for you and talk to an analyst to understand what this is going to mean. Hindalco, remember, is the only stakeholder in Novelis. Novelis is a market leader in aluminium cans worldwide. It's been a solid performer. The business has also changed since Hindalco took over this company. Big money will come in for Hindalco. Now, the valuations, whether or not this money will be paid out in the form of some dividends to investors, is something we will discuss. And the timelines, of course, are a few other factors that you want to take a check of. But for now, all we know is that they've applied for a listing. That's all the details we have in terms of reporting. Well, Devyani International, smaller one, Yum, which owned 4.4% stake in Devyani, is looking to offload that through a block deal. Remember, Yum is the owner of KFC, Pizza Hut, and Taco Bell in India, and Devyani is the franchise distributor for these products. The business model will continue, but Yum will be making its exit. May be viewed as a positive on the street because 4.4% is not a significant stake, and this overhang may be now finally coming to an end. But we cannot stick our neck out and say that this will move up. There could be a little bit of a negative trade on the counter before which it starts moving up in the medium term. I want to talk on Minda, Corp and Pricol in a minute, but I think we'll finish the other counters and then jump back in.
So just focus a bit on Z, because what whirlwind moves this counter has been having, and we reported yesterday when there was a story that they're looking at renegotiating the Z-Sony deal. We reported that those conversations are ordinary conversations that their lawyers are having. The company then clarified to the exchanges that no such talks are on. But there is another Bloomberg report which might sour sentiments further for the stock, which ran up nearly 8% yesterday, which says SEBI has found a large diversion of funds. They clock it at 20 billion rupees. And remember, that's something that SEBI is anyway investigating. So that might add a bit to the negative sentiment. DLF is the other one that we should watch. And DLF had a pretty good run yesterday on the back of, you had financials and you had real estate performing decently. So the news here is that one of their units has signed a pact with Access Trustee Service. They're going to acquire about 29 acres of land parcels in Haryana for 1,200 odd crores, 1,241 crores. This transaction is going to be facilitated by redemption of bonds that the company is holding, so that's about 775 crores there. And earlier they acquired bonds worth 825 crores via mortgages on land parcels in Haryana. So that Haryana expansion and that Haryana aggressive move might be looked at as positively. Swan Energy is the other one. They're going to raise money, so that's typical of a bull market where you have fundraising. So a QIP, it will raise about 4,000 crore rupees for Swan Energy. Floor price is at 703. For the QIP. Stock is at 751 right now. The proceeds are going to be used for investments into units and for repayments or prepayments of borrowings as well. And Systematics is managing that deal. So Swan is one that you should keep on your radar as well. Agam, what's on your list?
So Swan Energy is a very interesting one because it's grown about 6 times in just 1 year.
Absolutely.
So, of course, it wasn't my radar until you spoke about it. But besides that, we are looking at Deepak Fertilizers. What's really interesting is that we've seen a sharp surge in volumes yesterday. It was up as much as 4%. And, well, a lot of this, in terms of the volumes delivery, we are looking at some interesting moves here because volumes at 16 times 3-month daily average, delivery volumes at 5 times 1-month daily average. And remember that Deepak Fertilizers has seen a lot of weakness of late. And considering the way things have panned out for Deepak Fertilizers and the kind of buying that came through in yesterday's day of trade, the question really is that whether or not we have seen an end of that weak period, and can we now start seeing a little bit of an up move, or are we looking at some amount of mean reversion? Based on that, the support could perhaps currently be at around 480, 490. That's the lows of the previous few sessions. So that's something that we'll be watching out for. And the other stock that I'm keeping an eye on is Sundaram Finance. This one made a life high yesterday. It was up around nearly 8%. It broke out of a near 7 to 8 day range. And of course, we are looking at intraday volumes highest in 3 weeks. Once again, the support will be perhaps at somewhere around a 2-day low of around 182. But don't forget, the company also ran up after its Q3 earnings, where it saw a good 24% growth in its net profit. And that perhaps is the reason why a lot of investors are looking to buy into something like a Sundaram Finance. So these are the other 2 stocks which you can keep on your radar in today's day of trade.
Yes. Just a couple of more that I would add, Agam. One is Wipro. Remember, the entire tech pack was fairly weak yesterday. And Wipro, though, a couple of interesting news points which I wanted to put focus on. One is that it's in a pact with Intel Foundry for collaboration on chip design and process node development. And at least as far as our Indian IT biggies are concerned, how fast are they moving in the direction of an NVIDIA, AI, chips, etc. is going to be on the radar. Second thing is that it's expanding its pact with IBM as well to establish a centralized tech hub to offer new AI service and support to clients. They've launched a Wipro Enterprises AI-ready platform that will leverage IBM's Watson AI and data platform to create enterprise-level, fully integrated and customized AI environments. LTIMindtree had a similar story yesterday where they've got their own AGI for procurement. It's going to cut costs. And the AI play on tech companies is going to be key to watch, at least from a medium to long term. Just quickly a mention on this note from Morgan Stanley on Hero Motor, because Hero Motor took quite a tumble during closing yesterday, and especially in the fag end of it, frankly. So Morgan Stanley says that they believe the share price will fall relative to the Nifty over the next 30 days. So a bout of weakness then. If you look at the line chart intraday, quite a bit of weakness. It closed near its day's lows, 4% down. So the stock has outperformed Nifty by about 13% in 2024 so far, and trades at 21 times FY25 PE. The retail market share is also pretty decent, but there's limited valuation support and slowing sales is a concern. There was Vahan data which came out yesterday, and remember, Vahan data is the actual registration of vehicles bought and sold. So a little different from what FADA and the companies themselves put out. This is actually what people have bought instead of what's perhaps lying in the factories or in the showrooms, and that showed a bit of slowdown. So that muted the mood for a Hero and a Bajaj as well. So those are a couple of stocks we need to watch out for. But the big story this morning, of course, is Novelis, and Rakesh Arora, founder of Go India Stocks, joins us on the phone line now to break down the Novelis IPO news and what it means for Hindalco. Rakesh, very good morning. Thank you for speaking with us ahead of trade and help us understand the perspective on this. Now, the idea is it going to be more than just sentimental when it comes to the Novelis IPO? And I was just looking at a Nuvama note which says that the event could be sentimentally positive, but it's not too clear what Hindalco gets out of it. How do you break it down?
So clearly, the motive of Novelis IPO appears to be value unlocking. Novelis is largely a green business, whereas Hindalco is a little bit of a dirty business. They use coal, and that's why the valuations are much lower for any business which is polluting. So I think because the money is coming to shareholders of Novelis, and so clearly they don't really need money for Novelis itself for growth. So that is one thing is very clear. Number two is Hindalco itself is a cash-rich balance sheet. So they really don't need money for the Hindalco operations also. So I think the main motive is definitely value unlocking, that some ESG funds and global funds who are cognizant of ESG things are likely to flock to Novelis. In India, Novelis is being valued by analysts at around 8 times EBITDA, but I think if it is a pure green play, maybe it can get valued at 12 to 15 times EBITDA. So I think that is what is the motive here. And so let's wait and see how it plays out.
Rakesh, in terms of the negative sentiment around the Novelis news, when during their analyst call, they made it clear that a very large project of theirs, the Bay Minute project, is going to overrun in terms of expenses, up significantly over 60% in terms of costs and time run. And that really hit the Hindalco stock. Do you think that has now been digested and that overhang has been now accepted by the street?
Yeah, largely I would say that, that knee-jerk reaction we saw post the Novelis results is kind of factored in the lower returns potential from the expansion. And so I think the big question here is whether the re-rating in Novelis, which one would expect being a purer green play, would it, counter the holding company discount which will creep in once, you have minorities in Novelis. And also one needs to factor in that all the FIs which are into Hindalco right now might want to shift to Novelis as a pure play. So there could be, some selling pressure from FIs too. So both these things, this, makes it a little bit difficult to think. So sentimentally maybe positive, but, I do agree that from a long-term perspective, we have to wait and see what kind of valuations Novelis is able to, garner as compared to the holding company discount which is creeping.
Right. In terms of what this means for Hindalco shareholders right now, Rakesh, if I were to ask you to break it down simply, Novelis now being listed, is it positive in terms of dividend payout? It's not yet clear what Hindalco will do with all of that money as well. So if I were to ask you to break it down very simply, today, as of this point, what's in it for a Hindalco shareholder?
So one, Hindalco shareholders probably are looking at a better valuation of Novelis than what Street was building in. So that is the first uptick for Hindalco shareholders. Secondly, as you rightly pointed out, this money comes in, and as we discussed, that there's hardly any capex requirement. So whether this money will come back to shareholders in form of dividend buybacks or the company has some plans for large acquisition. We are not sure. So we need to wait and watch whether this money really comes back to the shareholders or not. And so overall, as I said, that immediate reaction should be positive, but once the dust settles down, we'll have a clearer picture. On the margin, I would say it will be positive.
So Arora, it's also Samina joining in. In terms of valuations, would it be possible to quantify it as 6 to 6.5 times EV EBITDA would value it at 12 to 13 billion. There are some analysts who believe that any valuation, any number sub $17 billion may actually not do well for them. Is that the opinion you have? Have you worked out the numbers here? What is a number that would please the street and investors at this stage?
So it's very subjective. As I said that, we have seen some irrational moves in the renewable space where, valuations are very high. Because a lot of ESG funds are vying for the same asset. So we have to wait and see. As I said, that currently Indian analysts are valuing Novelis at 8 times EV EBITDA. Can it be 12? Can it be 15? It is quite possible. Number two is that what could be the holding company discount? The holding company discount normally could be anywhere between 20% to 60%. So this is a wide range that we are working with. So I would say that, near term positive, but, longer term, there are some questions to be answered.
Hish, the quantum of stake that Hindalco will look to liquidate, will that have any bearing on stakeholders?
I mean, till the time it is in the range of, 25-30% at the max. I don't think it will have too much of bearing, And in any case, there was no cash flowing from Hindalco to India. So that again, meaning there's no major change out there.
In terms of the ESG play, something that you mentioned right at the start of this conversation, Rakesh, and I found that quite interesting, that at the end of the day, Hindalco is, from a global ESG perspective, still in a quote-unquote dirty, polluting business. Novelis is the green play, but we've seen the downside risk to it as well in terms of cost overruns, what happened with their engineering and design projections for their huge project in the US, the Minute Bay project. And does that overhang then continue? Because you don't really know what is going to be the ESG model going forward, isn't it?
No, so ESG model is very clear. The question is what will be the returns from that project? Will Novelis be able to push up the margins to compensate for the capex, the higher capex that they have to entail? Currently, they are guiding for $500 per ton. And for the new facility, can they do like 600, 700? Because if they have higher portion of auto, auto already does more than $800 per ton margin. So there are levers for Novelis to improve returns from that capex also. It came as a shock because the earlier guidance was lower. But overall, in ESG investing, and this is a little bit of sentiment driven, people can digest much lower returns than a normal business. So a pure play Novelis can attract higher valuations.
Very lastly, Rakesh, what is your stock call on Hindalco, and if there is a re-rating on the cards, what is it going to take? Will a Novelis listing encourage you to relook at the rating you hold for Hindalco at this stage, and a target price on that also will be useful?
So I would say that Hindalco stock price has corrected post the Novelis results and largely baking in the negatives from the higher capex. So initially there will be an uptick because people will start speculating on Novelis valuation. So the stock has found a bottom, and maybe there could be a little bit of upticks here, and maybe today we have a positive opening. But longer term, as I said, that the equation is a little bit complex, and we need to wait and see how things pan out on a holding company discount and Novelis valuation.
Right. Thank you, Rakesh. It's great having you on the show. That is Rakesh Arora giving us a sense of Novelis seeking approvals to go out and list on the securities exchange. It could be a big boost coming for Hindalco investors. They will be monetizing some percent of the stake. Rakesh indicated offloading about 25-30% is what he's expecting. At 6 to 6.5 times EV EBITDA, the deal could be valued anywhere in the range of $12 to $14 billion. But remember, anything, some analysts believe that anything sub 17 billion may actually not do too well for stakeholders. But for now, it's good news. You could see a bump up on Hindalco, guys, especially after the badging the counter got after it posted its earnings. Even Hindalco's earnings couldn't save Novelis.
Yeah, and it was because of the quantum of change that the management indicated, that they seem to have gone wrong on so many things as far as that Bay Minute project is concerned. Cost override, timeline override, all of it out of whack, and that is a point we were talking to Rakesh Arora about as well. While a green energy play is very attractive, especially to foreign funds, the question about execution still lingers. And Samina, you got some clarity on the valuations as well from Rakesh, and that's the other key, because that's a figure which is not out there yet.
I mean, Rakesh did say it was very subjective, right? So it's only going to depend on what analysts believe, but he did say about 6 to 6.5 times EV EBITDA would be a fair way of, or a fair pricing in the case of that. Also, one more stock that I want to talk about before we slip into break, if that's okay, is Minda and Pricol. I don't know if you guys have discussed that, but
no, but we must. Yeah.
They've got a little bit of a background, and we'll first tell you what the approvals have come in. The CCI has approved Minda Corp's proposal to acquire 8.79% stake in Pricol. Remember, 3 to 4 months ago, Minda owned 15.5% stake in Pricol. They did try and push for a hostile takeover of Pricol, where the CCI came and shut the deal and did not approve for further stake buy in Pricol. Very soon after CCI rejected the request from Minda to do that hostile takeover of Pricol, Minda went out and dumped all the equity they had in Pricol. So they went down from a 15.5% holding to 0 because the hostile takeover was actually rejected by the Competition Commission. Now what we're seeing this morning is they've actually got an approval to go out and acquire 8.79% of fresh stake in Pricol. One way of looking at this is just an approval. Minda may still go out and refuse it, because only 9 to 12 weeks ago their request was rejected by the Competition Commission. They went down to 0. It's an interesting takeover of sorts, with the Competition Commission rejecting, going back on its word, coming back with the lowest stake. It'd be interesting to see how this plays out. But watch both those counters in today's trade. We'll take a break. We'll come back as always at 8:30. We'll get ready for the F&O trade setup, so stay with us.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Welcome back. You're watching the India Market Open. Let's take a quick look at the top headlines at this hour. The US markets are off to a weak start. Nvidia has led the tech decline on concerns of high valuations. The stock was down 4% ahead of numbers that it will put out today. Back home, Hindalco is the big story. Its US subsidiary Novelis will go public. Proceeds from the issue will go to the promoter Hindalco. And yet another big block deal. Yum Restaurants likely to sell 4.4% stake in Devyani International at a 7.6% discount. Citi is bullish on the India equity strategy, says investors view top-down India as attractive, also hails the supportive macro environment ahead of elections. And farmers will resume the Delhi Chalo March today. Unions are demanding the legal backing of MSP and calling for it to include all 23 listed cash crops. So those are the top stories, but of course action now on the F&O space where we're ahead of Bank Nifty expiry. And what moves we've been seeing on the Bank Nifty, Agam?
Yeah, certainly, and a lot of that can be attributed to the strength that we've seen in HDFC Bank yesterday, and that will continue to be in focus today because of the kind of short covering that we've seen as far as the HDFC Bank goes. But let's start off with the Nifty. At life highs, just shy of the 22,200 mark. We've seen unwinding as far as the futures go, and moving on to the Bank Nifty, that will be in focus because the weekly options expiry, and we haven't seen too much change in open interest, even as the underlying advanced by around 1.2% yesterday. Now, to talk about the Nifty options, this is the picture. Unexpected lines, perhaps, considering the Nifty moved higher. We saw a little more writing around the 22,000, 22,100 puts, and this also establishes 22,000 as a little bit of a stronger support now as we move, see the Nifty move higher. Of course, on the higher end, we'll continue to see traction around 22,500, 22,600. Speaking of which, let's pull up, the overall open interest distribution in the options market. As I was suggesting, max OI around 22,000 put, and on the higher end, watching out for 22,600. That's the call. That's where we're seeing a little bit more accumulation. And finally, coming down to the Bank Nifty. Now, the Bank Nifty has moved above 47,000, and we are also seeing a lot of traction there. Perhaps a little bit of, consolidation expected around 47,000. But considering the Bank Nifty broke above that after hanging on within a range of over the past 10 odd sessions, well, there could perhaps just be a little bit more covering on the cards. That's a wait and watch on that one. Let's talk about stocks then. And of course, Deepak Nitrite saw longs, but besides that, Hero MotoCorp, Balrampur Chini, Coromandel International, and Cholamandalam, well, looking at declines with shorts building into the system. And in terms of stocks which saw unwinding in trade, well, we saw short covering in RBL Bank and HDFC Bank, and well, some longs unwinding in Coal India, Federal Bank and Tata Steel. So these are some of the names that we can watch out for in today's day of trade. But what do you make of these markets? Let's get in an expert opinion. We have Ajit Rambia of Ajira Ventures who's joining us on the show. Ajit, good morning. Thanks for joining in. My question naturally at this point will be, the Nifty is at life highs. We're also starting to see short covering in the Bank Nifty as well. How have you placed as far as these indices go? How would you go about them?
Good morning, Agam. Thanks for having me on the show. So as we observe the current market scenario, we have had a very impressive rally. Last few days, the indices are making new all-time highs. So our one-liner will go generally, as the data suggests, in normal markets, the ratio of small caps and the large caps. So the large caps is normally 80% of the market capitalization, and small caps are around 20%. But now the ratio has changed drastically. It is around 55 to large caps and 45 to small and mid caps. So the mid caps and the small cap market are looking overbought and somewhat in a bubble zone. So we suggest our viewers and have a strategy to book profits in small and mid cap stocks and shift to good quality large cap stocks. So that goes for the overall market. Now talking about the indices, my view on Nifty remains bullish with key supports at 22,100 levels and resistance at around 22,500 levels where we see the open interest. And shifting our focus to Bank Nifty, which has a weekly expiry today, our bullish sentiment prevails with the support at 46,800 levels and resistance at around 47,600 levels.
Right. So, Ajit, let's take one of the constituents on the Bank Nifty forward. I believe you do have a trading idea with Kotak Mahindra Bank. Can you take us through that?
Yeah, we have a bullish view on this counter. So we can clearly observe a trend reversal here. So we can initiate a bullish butterfly strategy where we buy 1760 call at 31 rupees, sell 1800 calls at 14 rupees 50 paise each, and buy one 1840 call at 645. So the cost of the strategy is around 8 rupees, and we stay long in this counter.
Okay, long in the counter, and of course you tend to make the most of the profits should you see Kotak Mahindra Bank expire somewhere around 1800 rupees per share, because that's where you are in fact going ahead and selling two options there. But you know, BHEL is the other counter which has been on an upward move, even though it's seen a little bit of a correction of late. What is your take here?
So we see this correction as consolidation, and we have a bullish view on this counter. We can initiate a covered bull call put strategy where we buy a February future at around 231. We hedge it, like we cover it with buying a put, 220 put, which is the support price at 270 paise, and we sell a 250 call at 2 rupees 55 paise, which is our target price. So we safeguard ourselves by buying a put at the support price and covering by selling the call at the target price. So we cover the price of the put bought.
Okay, so not unlike your usual spreads that you place. Of course, in this case, it also involves buying a future as far as BHEL is concerned. But on that note, Ajit, thank you for joining us and taking us through your ideas this morning. And well, with that, it's over to you, Samina.
Thank you, Agam. Those are a few stock ideas coming in from the F&O specialists, and of course, Agam highlighting all the F&O action that we will be keeping an eye on today. Well, there'll be a whole bunch of stocks that'll be moving on fundamental news flow and brokerages. We have a list of brokerages with their calls on Jindal Steel and the oil and gas sector as well. Mika is joining us in one of that. Mika, oil and gas stocks have been on a tear in the last, actually not even in the last couple of months. Stocks like MRPL are up about 60% in a month. What are brokerages saying about the oil and gas pack, and also on Jindal Steel? I believe you've got a brokerage view.
Yes, I'll start with the oil and gas back. We have MK on the OMCs, while the ratings on IOCL is an add and on HPCL and BPCL there's a buy, but the targets do indicate a downside to the current market price. But however, the Q4 refining outlook remains positive for the companies as the benchmark gross refining margins have averaged around $8 per barrel, which does imply a sequential improvement. There's also no build-up of sizable inventory gains for Q4 as it was seen in Q3. Then the gross marketing margins in petrol and diesel have averaged around 9.2 and 4.6 rupees per litre respectively, and that means the overall marketing performance on a Q-on-Q basis is better. They do expect Q4 numbers to be closer to the Q2 run rate of FY24. They also, with increased visibility for FY25 earnings could drive the stocks for a re-rating, and post-election there is more optimism seen in the space. With regards to Jindal Steel, we have Motilal Oswal, which has maintained a buy rating at a target price of 900 rupees. Now, Jindal Steel is currently ongoing expansion, and this will help increase their share of flat steel products to over 55% and also increase their crude steel capacity by 65% to 15.9 million tons. The expansion completion is expected to come around Q2 of FY26, and this will help the company become the fourth largest steel manufacturer in India. The firm is also developing various WAPs on value additional products on the additional capacity, which will help drive the margins, and their focus on their raw material integration will benefit cost synergies and also help during extreme steel and raw material cycles as their raw materials are very price sensitive. And lastly, the Indian steel demand is expected to remain robust mainly on three things. One is the improvements in construction activity, the infrastructure project push that has been seen, and the high automobiles, renewable energy and the consumer demand. And lastly, the stronger steel demand that is seen in Q4 will help the company drive its margins.
All right, thank you for that, Meka. A couple of interesting reports over there, and especially on the OMC space. Samina, the expectation is that the government will, of course, through companies it owns, because technically it's all market linked, will give some relief on excise ahead of the elections, and that's being seen as negative for these companies.
Indeed, but I think, and that's what a few reports are looking at. If you look at valuations as well, and these stocks have been doing exceptionally well from the time of, I think, end October is when the rally started. We're in Feb. There is no stopping some of these names. IOC, HPCL, BPCL, MRPL, Gandhar Oil have all been doing exceptionally well. Valuations, though, many years ago, then IOC, HPCL and BPCL traded at 2 times PE. Today, if you look at those valuations, it are almost over and more than doubled, actually. So anywhere in the range of 4 to 5%, 4 to 5 times is what we have for HPCL, BPCL, and IOC. There is no stopping. 50% of the revenue for OMCs comes in from retailing fuel. But like Tamanna indicated, if there's any change on excise, this will turn out to be a negative, and the rally could get arrested.
My point is that there is no real pressure to reduce rates. There's no real pressure electorally because they are confident of winning. Yeah. So they don't necessarily
maybe that could be the underlying, right? That could be why some of these counters are not relenting.
Absolutely. It seems very obvious that they may, but they may not.
Yeah. In fact, Tamanna, we caught up with Probal last week, and he said he's got to go back to the drawing room almost every 36 hours and go back and revise his target price because some of these stocks have been going up 10, 15% every single day. So that's largely the oil and gas pack. There's a brokerage upgrade on them. We will talk to our analysts a little bit more about this. But the India story remains intact, and as the big picture today, Citi has said that they report on Indian equities. Mahima's got more details on that. Mahima, Citi in its report says that foreigners still love India, but they are on the sidelines. So markets looking expensive, and especially when compared to peers like China.
Right, Samina. So as you rightly mentioned, they've said that there has been increased interest amongst the global ex-US funds as India's weightage has gone up from 2% to 5% in the last 5 years. Now, this is because of the market rally that has taken place. However, they've stated that high valuations remain a key struggle, which is leading to money staying on the sidelines. Now, they've also said why they have a favorable bias towards India. They've mentioned that the secular growth outlook is very relative to its peers. They've also mentioned that expectation of policy continuity post-election outcome seems to be a positive, seems to have a positive impact on the equity markets. They've also mentioned about India's weightage in the MSCI. They've said that India's weightage in MSCI World X US Small Cap Index is at 8.1%, which is increased from around 3% to 8.1%. Then India's weightage in MSCI All Country World X US Index has gone up from 2.4% to 4.9%. Now, they've also mentioned that how a lot of investors are focusing on small and mid cap instead of the large cap funds, and they've seen now this is because they've seen a significant outperformance in the small cap and mid cap in the last 1 year. However, they've also mentioned that the skepticism on continuity of mid performance and what could drive the underperformance is there. Also, they've said that the top-down approach is attractive in terms of valuation. However, the investors are struggling with high valuations, and they've also given an outlook on the IT sector where they've said that they see some kind of improvement by FY25, and they've seen that the pace of recovery in discretionary spending will be a key thing to watch out for. They've also mentioned other things that will be on the key radar to watch out for, like the banking sector challenges, the public capex growth slowing down, the PSU rally, the mid-cap outperformance, and they've also given some stocks that will be in focus like L&T, HDFC, ICICI, Infosys, and so on. So this is the overall outlook of what the city has given on Indian equity strategy.
So it looks good, Mahima, it looks good for us, but of course looks expensive. That's what foreigners sitting outside the country think. Remember, our exposure in the larger piece has actually gone up significantly in funds ex-US, one because of the rally, and second because of stock additions that have happened in the last couple of years. Well, Tamanna, apart from equities, your inclusion on JPM and potentially Bloomberg. So it's not just equities, debt, or rather debt has led the way of India's inclusion, and now of course you've got equities, Indian equities in the global funds that have seen increased exposure.
And you know what's interesting, and we'll speak about it a little later in the show as well, Samina, but to my mind is that you're seeing Nifty at new highs, you're seeing market strength without any real solid FII participation, which is expected, like you said, is on the sidelines. You're probably going to see it coming through once China improves, perhaps an emerging market start attracting more funds, India will get some spillover. So you're already on a good wicket, and with one positive tailwind possibly on the horizon at least. The question is, how much can we sustain? Chandan Tapare and Mayuresh Joshi with us this morning to discuss what the day is going to look like. Very good morning to both of you. Great to speak with you here on India Market Open. Chandan, let me begin with you. And of course, levels, because look at where markets are going, defying gravity. We've closed above the 22,200 mark quite definitively. Where do you see us sustaining?
Good morning. Thanks for having me. Really, the bulls are charged up to get the market on higher note. It recently took higher base at 21,500 zone and now started to form higher highs, higher lows on the daily scale. It managed to surpass previous high of 22,124, 22,126. And the base of the market is shifting higher, and we believe that now till it holds about 22,000, the ongoing momentum could continue to us 22,500 zone. However, we have a positional target of 24,000, but that is for next couple of months. But as of now, we believe with support of 22,000, one can continue with long position for immediate target of 22,500 in the Nifty levels.
Chandan, that's the call on the Nifty. What is the story on HDFC Bank at these levels? Fundamentally, the tide seems to be turning. Technically, charts are supporting and this looking supportive at this stage?
Yeah, so like Bank Nifty started to witness some decent buying activities in last few days, and major contribution is now coming from HDFC Bank. The stock is beaten down and recently it formed the double bottom kind of pattern on the technical scale. We also noticed some sort of put writing activity, which is an early sign of any FNO stocks to bottom out. So I believe the recent bottom of 1360, 1380 already proceeded, and now we believe that some up move could be there. On weekly chart, it has negated its lower top, lower bottom. So I believe some more swing could be there towards 1500. So one can play the bounce with support of 1410 for an upside move towards 1500. And because of that, Bank Nifty also has potential to move on higher side. With support of 46,700, we will continue to be with buy on decline stance in the Bank Nifty as well for an upside move towards 47,500. So bullish stance on SDFC Bank, and because of that, Bank Nifty as well.
Please stay on with us, Chandan and Mayuresh. Just switching gears for a couple of minutes, because somber news coming in this morning, and we must address it because eminent jurist and senior advocate Fali S. Nariman has passed away at the age of 95. And he is one of those eminent jurists that have stood up for the independence of the judiciary, and really, shaped in a lot of ways how respected the Indian judiciary is right now. So he argued several landmark cases, including the NJAC verdict in June 1975. He resigned as the additional Solicitor General of India to protest against the decision of the Indira Gandhi government to declare emergency at that time. Huge contributions to the Indian story, in fact. Kapil Sibal, senior advocate, with us on the phone line now, and of course he's member of Parliament. Mr. Sibal, very good morning. Thank you for speaking with us here on NDTV Profit on a sad day indeed. Just for the benefit of our viewers, do give us perspective of what a huge loss this is and the great contributions of Mr. Nariman.
Oh, absolutely. I don't think that we've had, lawyers like him, stride the corridors of the court. He was one of the greatest sons of India, perhaps one of the greatest advocates that I have met. But apart from all this, he was a fabulous human being, one of the kindest persons I have met. He never had a negative word about anybody. He had enormous wit and empathy. And the most important thing is that he stood by values that he espoused. And he always stood for the independence of the judiciary, standards in politics, standards in lawyering. And he was part of the growth of constitutional law in this country. There are very few like him that I have met. And of course, I was very, very close to him, and for me, it's a great personal loss. The likes of him are seldom seen in the corridors of the court.
Mr. Sibal, it's definitely a tough time, and as you said, a personal loss for you as well. If there is one sort of lesson or learning from your interactions with Mr. Nariman, what would that be?
Stand by your values. Stand up to executive excesses. Do not be afraid. It's time to defend the Constitution and the laws. Democracy is something that we all must cherish.
Thank you so much, Mr. Sibal, for speaking with us. So definitely a huge loss with the passing away of this eminent jurist. But let's turn our attention back to markets. We're about 9 minutes away from pre-open. We had to pause our coverage there to, note this huge loss to India, and a great son of India, as Kapil Sibal described it. Let me come to Mayuresh Joshi, though, on what we're seeing in Indian markets right now. And Mayuresh, those who have been waiting for a correction to come, an opportunity to come in, must have been holding their breath too long. The question that I have for you is whether the turnaround that we saw yesterday in private banks is a flash in the pan, or we're going to see more strength behind an HDFC Bank, a Kotak Mahindra and Axis Bank, which will fuel the next leg.
Morning, Tamanna. Morning, Sabrina. Morning, Chandan as well. Two things here, Tamanna. Clearly, I think for India to grow and industries to grow, the support of the financial system is mandatory. And therefore, I think the banking system has to do really well if the economy has to do well. Having said that, the kind of turnaround that we probably see for the system as a whole, GNPAs, net NPAs have come off quite significantly. You've seen a lot of buffers getting created as far as provisioning is concerned. Capital adequacy looks extremely strong. And all the moves that the regulator has done, I think, commendable on RBI's part on all these aspects, including liquidity management, which has tided us up over even the COVID crisis periods. And therefore, I think my take is that banks over a longer periodicity of time should continue doing well. Obviously, I think the large cap banks, to the likes of HDFC Bank as an example, I was just seeing a tweet where all the memes of HDFC Bank have started coming in, and they're comparing that with the ITC memes in 2020, and you've seen what happened with ITC. So I think not necessarily suggesting go out there and buy HDFC Bank, but generally I think banking should do well. Advances growth should normalize. And in a scenario where rate cuts should start coming in at some point of time by the end of this calendar year, the expectations in terms of advances growth going at a decent pace, deposits coming back into the system gradually, and therefore expectations in terms of stable balance sheet growth is a given. So I think large cap names, in my opinion, if anybody's holding, should continue holding. ICICI, IndusInd, SBI. For HDFC Bank, probably it might consolidate along with Kotak for some periodicity of time. But at some point in the first half, I think the worst should be behind. And as synergies start building in from a balance sheet perspective, I think a large part of the earnings growth should also start coming back. So structurally remain positive on the BFSI space.
Right. Chandan, Mayuresh, stay with us. We'll slip into a break. We'll come back, gear you up for trade, and also continue talking to Chandan and Mayuresh about their top trades. So stay tuned.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Welcome back. We're just a couple of minutes away from pre-open. Are we going to continue? Momentum is the big question. The other big question actually is, what do you do in a market like this? Chandan, let me quickly come to your top picks for the day. You're on mute, Chandan.
Yeah, thanks. I'll focus more on to play the momentum in the sector which are outperforming the broader market. I'll be with selective power energy counters with the view that most of these stocks can rally by 5 to 8%. However, at the same time, we have positive stance on the banking name, including ICICI Bank, Axis Bank, and HDFC Bank has bottomed out. So talking about trading idea, first is buy on NTPC, one of the strongest setup, making high tops, high bottom on the weekly scale, given the recent highest daily close with built up of long position. So one can buy NTPC with support of 337. And here we have a target towards 360 level. Second trading idea, that is buy on power grid. Technically, it completed a pole and flag pattern, which has bullish implication, expecting further rally. So one can buy with support of 282. And here we are expecting a momentum to us, 300 zone in the power grid.
Mayuresh, did you acquire, add or own HDFC Bank? If yes, tell us what your views are. If not, when would you buy it, if you would ever buy it?
So no, not at this juncture. And as I said, I think it might go through a consolidation phase, Samina, for some length of time. Because if you go by the management and their take in terms of how their balance sheet is shaping up, Q4 might be equivalent to what Q3 was. So they are not going to chase growth. They're very, very clear on that. They're not going to chase high cost deposits. And they are going to let the system work in terms of the deposits that they have as legacy from HDFC as well. So as that starts seeping in to the system, and as that normalizes in terms of the cost and revenue synergies, I think Q1 of the next financial year can be a base. And earnest recovery can start from Q2, coinciding with some element of rate cuts that happen in the system as well. So I think it might still go through a phase of consolidation, in my opinion. I think what we continue to hold in our global portfolios are banks like Axis Bank, IndusInd Bank.
Axis, IndusInd, HDFC is still in a void for Mayuresh. Anushi is standing by with the whole host of other counters that will be in focus this morning. Anushi, what do you have? Likes of ABB that reported earnings today?
Right. So coming to the stocks that are in focus is, first of all, I'll start off with Minda Corporation and Pricol, which is in focus. Again, over here, this is after the CCI has approved about a 8.8% stake purchase in Minda Corp. Again, this is after Minda Corp had earlier exited its 15.7% stake for a consideration of about 657 crore. Next on the list is Thermax, which has entered into a license and technical assistance agreement with Flowtech, which is based in Korea, with which it aims to strengthen its chemical portfolio business. Again, this is for a consideration of about $300,000. Ashok Leyland, here the company is setting up a new integrated CV plant which is focused on the green mobility side of the business. Initial planned capacity of about 2,500 cars per year, but they want to expand this to 5,000 vehicles per year. Looking at other on the list is Z. So Z Entertainment, again, a lot of talks over here where the company clarified that it is not being involved in the $10 billion revival plan that with the Sony merger that had earlier been called off by Sony in Jan 22. So that is definitely on watch out. And ABB mixed set of earnings, about revenue growth of about 13.9%, while the margins broadly remained in the similar range. And again, the profit saw some uptick. So definitely these counters should be in focus today.
ABB indicating to a marginal gap up this morning. Mayuresh, did you look at ABB's earnings? They were better than what the street was expecting, at least on the face of it.
No, a little bit better than what the street expected. Absolutely right. And I think this entire pack, I mean, ABB, Cummins, Siemens have done exceptionally well. Now, broad expectation that is being laid out is the next quarter, the orders might start tapering off because of elections, but they should come back very, very strongly from the first quarter of the next financial year. And as execution continues to improve in the second half of the next financial year, the numbers on an annualized basis should be reasonably better as well. So I think if you take a long-run approach for the next 2 to 3 years, stable order flows with better margins, expectations of better execution on these orders, therefore creating an operating leverage onto their balance sheet seems to be a probable base case scenario. Obviously, all these stocks have moved up quite significantly. So I think the valuation comfort probably not there. And if there is some element of earnings miss that probably comes through in any quarter, you might see some element of derating that can also take place. So in a nutshell, I think no fresh buys at this juncture. Obviously, wait for pullbacks. But anybody enjoying the momentum for these stocks at lower levels can continue doing so.
Let's take a look at Hindalco. Hindalco is perhaps going to be the stock of the morning. Pre-open already, you're seeing a bump up because of the Novelis news. Its arm, Novelis, which contributes about 60% to its revenue, is going to be listed. They're going in for an IPO. So obviously in pre-open, you're seeing a bit of volatility in the stock, but definitely a positive sentiment playing out there. Now, what's not clear is the size of that IPO. Of course, the proceeds will go to the parent Hindalco, and what exactly they'll do with the money. Mayuresh, do you see at least the Novelis IPO news retracing some of the negative sentiment which had come with the overhang of this company's large project delaying?
Yeah, so to that point, Taman, I absolutely agree. What is the size of the IPO and exactly the purpose of the proceeds that is going to be used? But having said that, I think some piece of positive news after the huge capex announcement that they did. So yeah, I think that should be taken positively by the street. And the Novelis management itself, if you look at the presentation, is very, very hopeful in terms of the reported EBITDA as well. So they're expecting around $525 in Q4 and taking that up to almost $600 over the next few quarters as well, with solid improvement in terms of both shipments and the beverage can business as well. So the business outlook looks very, very positive as per management speaks say. And therefore, I think if the IPO size is reasonable and if the IPO size proceeds are going to be utilized to a certain extent in terms of protecting their balance sheet, I think the street should take this very, very positively.
Absolutely. Mayuresh, I know you have to go, so thank you so much for joining us this morning. We're looking forward to an exciting opening. Chandan Taparia, though, meanwhile, with us. Chandan, would love your take on Hindalco.
Yeah, so we have seen some volatile swing in the counter. And the setup has slightly turned negative. However, some recovery may be there, but it would be very tough to play the name because volatility has seen a spike and technically it formed a inverted pole and flake pattern. So I'll wait for a decisive move, then only I'll go for buying interest. As of now, 525 is a major hurdle. Above 525 only, Hindalco can witness some short covering trigger towards 545, 550. So I'll only wait and have a conditional trade above 525 marks in Hindalco.
At least pre-open is indicating to an opening of 530 rupees. So about the decisive level of 525 that Chandan was pointing out, 550, 540, 550 is a range on Hindalco. Another counter that's been on the loose has been MRPL. Chandan, 60% gains in a month. This morning too, after a little bit of profit taking yesterday, the stock is back in the green. 276 on MRPL. Is there any more upside left here?
Yeah, momentum is clearly visible, and this stock has really done a great work in last 11 months, continuously making higher tops, higher bottom, and every month-on-month basis, it closing on the positive note. Just a couple of months back, it gave a major yearly breakouts, and momentum looks for the fresh leg of rally. We have noticed delivery volume, which clearly indicates that ongoing up move could continue. Some volatile swings may be there, but one need to hold the positions. We have support near 262, and with that support, the stock has potential to rally towards 290 to 300 levels.
Chandan, I'm wondering if you have your Minda on your radar, Minda, as well as Devyani International and Whirlpool, three stocks which of course have seen a lot of news around them, but I'm wondering if you're seeing any potential on the charts.
Yeah, so if I talk about Whirlpool first, then I'll talk about Devyani and Minda. So talking about Whirlpool, we have seen some sort of negative swings in the counter. In fact, volumes were there when the stock was going down. So here I'll avoid, because weekly setup is negative. We are making lower top, lower bottom. So here I'll avoid. But if you look at the Devyani and Minda, then some positive move could be there. Devyani has from the bottom. It recently corrected from 197 to 147, and now negated its lower top, lower bottom. So with support of 160, Devyani has potential to move towards 172 level. Talking about Minda, Minda has potential to witness some bounce. We have seen decent volume in last 3-4 trading session, which clearly indicates the fresh leg of rally could be there. It is continuously making higher tops, higher bottom on the larger time frame. So one can buy with support of 418 for an upside move towards 450.
Right. Chandan, how does Z look after, of course, I know it's in an F&O ban. It's been on a downward spiral. Did gain a little bit yesterday, now 10% on the counter in pre-open, 174. How much more from here, Chandan?
It looks crazy and it's very tough to catch the movement because trend is negative, but it keeps on moving up and down. So it would be very tough, very volatile counter. But yes, we have multiple barrier near 200 marks. We have witnessed sustained call writing activity. And now, yes, after the previous day recovery, when it's opening down, then again setback will be there. So I'll avoid. And I think stock has potential to drip down towards 165 to 160 levels.
Wow, 165. So the trend very clearly downward on Z Entertainment. The stock was up 10%, 7% yesterday. Now seeing a low circuit or a low hit of 10% on the counter. Well, those are a few names that will be in focus this morning. there will also be names that will be seeing, potentially could see a block or a bulk deal take place. Varsha is joining us with more on that. Varsha, yesterday the day was all about Whirlpool, before that was Solar Vineyards. What is expected today in terms of big blocks?
Actually, Sabina, we have QIP issues too. So let's first focus on that. So we have Swan Energy, wherein on Tuesday it announced opening of its 4,000 crore fundraise through QIP, wherein floor price has been set at 703 per share. Now, pricing of this issue would be decided on Feb 26. Also, this proceeds will be used for investment into units also for prepayment of borrowings. And then we have Union Bank, wherein it launches QIP to raise almost 3,000 crore. The floor price is set at 142 per equity share, which is at 1.1% premium. And then we have Varun Beverages, wherein they have entered into exclusive agreement to manufacture and package Cheetos in Morocco. Now, the expected date to start commercial production is at May 1st of 2025, and production will be from their own manufacturing facility. Also, the capex is to be done at rupees 100 crore, and this appointment is in addition to the existing distribution agreement for PepsiCo snack portfolio consisting of Lay's, Cheetos, Doritos, and in territory of Morocco. So this is all we have for today.
Right. Those are a whole bunch of names that we've got that we're tracking on back of QIPs and fundraising plans on the anvil. Well, the markets are expected to see a flattish start this morning. The day will belong to Hindalco. It'll be interesting to see if we follow up buying on counters like HDFC later on in the day. Well, it's another positive day from the look of it for 197 communication. Another 5% move is what pre-open is indicating to. Chandan, is this a stock you like?
You're talking about Paytm?
Yes, I am.
So again, I believe that it's very risky to comment, but stock has bottomed out, I believe. And advises one need to take only position which, along with the risk management, if someone can do. Looking at the wave theory, I believe some sort of bottom has been made in the counter. So with support of 380, we can see once bounce towards 450 level.
Right, that is the call on Paytm. Maybe the stock has bottomed down is what Chandan believes. Apart from that, you will have stocks like Union Bank, ABB that will be in focus. Either of those calls, Chandan, do you have a trade on? Union Bank on fundraising, ABB on earnings?
Yeah, so we have positive on Union Bank. In fact, we release a note on most of the PSU banks. And Union Bank is one of the strongest counter. If I look at the daily chart, it is holding well above its 50-day moving average and respecting well to its rising support trend line. So after the consolidative move of last almost 16 trading session, it is all set for the fresh leg of rally. So one can buy with support of 142. We are expecting a rally towards 155 in Union Bank. Talking about ABB, yes, major trend is intact. It has recently bottomed out with consolidations breakout on daily chart. It surpasses falling supply trend line. So I believe with support of 4,500, one can look for an upside move towards 4,750 to 4,800 in ABB.
The other set of stocks that we should focus on are the two-wheelers, and let's just see what Hero has done in pre-open. Pre-open rates have, course, settled, and Hero set for a second tough day. TVS and Bajaj is also something we should see. So data is suggesting, Vahan data is suggesting that this could be a slightly slower period for two-wheelers. They were expected to kick off, but that doesn't seem to be the case. And an MS note on Hero is also, voicing some concerns over the slowdown in sales. Chandan, Hero on the charts already, it's seen, I think, in the last couple of sessions, a 3-4% cut. Do you see an opportunity to accumulate here?
So if you look at the Nifty Auto, major trend is intact, but in between we have witnessed some profit booking decline. The stock is down by around 6% in this week, but we believe that the stock will continue with major trend. There may be the down gear, but again, top gear could be there once the consolidation gets over. So as of now, let's wait for further decline or some bargain buying. I believe as of now, it has potential to go towards 4,300 to 4,350, where one can accumulate for next leg of rally in Hero Motor.
Yeah, absolutely. So Hero Motor might see the next leg of rally. The question is that how sustainable would it be? Chandan, at this point, where would you see the pockets of opportunity? Are you looking at anything interesting in the mid and small cap space?
Yeah, so I'll focus on power, energy, oil and gas counter. So Oil India is one name. However, it rallied well. It is one of our strongest recommendation in last couple of days, one of the preferred name. So Oil India still has potential to rally by 10-15%. One can buy near 600 with support of 580. It is potential to rally to our 650 zone. So one can look at Oil India. Apart from that, we talked about Power Grid looks strong. It is all set for the next leg of rally. We are expecting an up move towards 300 zone in Power Grid. I already mentioned about NTPC. So that has potential to move towards almost 355, 360. So NTPC, Power Grid, All India, fuel marketing company could be on radar to deal the markets.
What about on the private bank space? I just want to quickly pull up Federal Bank, which took a beating yesterday, thanks to the top management rejig of a Kotak Mahindra Bank, which may have seen them lose a potential CEO candidate, but that stock up today. What would you like in the private banks, Chandan?
In private bank, before I comment on Federal Bank, let me talk about ICICI Bank, where we are expecting fresh leg of rally. With support of 1035, ICICI Bank can see the momentum towards 1085 levels, expecting 3 to 5% or beyond that in ICICI Bank. And I think ICICI Bank can support the Bank Nifty to move on higher side. Talking about Federal Bank, buy on decline could continue. I believe with support of 100.
Give us a few seconds. We'll come right back to you. Gearing up for market opening, it is expected to be a flat start on the index after 6 straight days of gains. With a positive bias, I think that's the good news we're looking for. 13 points higher on the Nifty 50. 22,200 is being held on the index. The Sensex also trades with a gain of 26 points. The Nifty looking good, 10 points higher. We might slip in the red briefly as we consolidate, but remember, this is uncharted territories for the markets. The sky is the limit from where we stand. So any sort of restrictions now, of course, will be largely imaginary in nature. But for now, looking very, very well placed on the index, 7 straight morning when we've opened with a very clear positive bias on the street. A quick check on the breadth of the market and, of course, the sectorial picture as well that's playing out. Bank Nifty has come through quite strongly in yesterday's day of trade, largely on back of the contribution from HDFC Bank. 48,000 looks like the next stop on Bank Nifty. You've got 120 points added, about 0.3% higher on Bank Nifty this morning. We look at the contributors to get a sense of what's happening, but the Sensex has now slipped into negative territory. The breadth is got a clear bias on the upside. The stock of the morning will be Hindalco. It doesn't look as great, or it's given up some of its market opening, or rather pre-open gains already. It's off 1% or about 0.7% of the day's high point, but still trading high on Hindalco on news that its jewel Novelis will be seeking a listing. Now, with the timing of this is being questioned. Why does Hindalco need to do it? They have enough and more cash on the books, but interesting move there on Hindalco. Metals generally are looking good, probably following the trend where the liquidity in China will help metal companies. Those gains are very obvious in this morning's trade. JSW Steel and Tata Steel both trading with a positive bias. It's the morning that iBank is looking good. OMC is continuing doing well. Adani stocks also trading with a marginally positive bias. On the sell side, two-wheelers, a Hero Motor Corp are seeing a bit of a pressure. Tech is looking like a morning of profit taking. Britannia, L&T, Maruti are some of the other losers. So no consistent or no clear trend emerging just yet. It's largely stock play. Breadth is positive for now, but there could be a chance, Tamanna, where we may spend the morning consolidating, especially after such a solid run that we've seen.
Yeah, I mean, if you look at it, the Nifty is struggling to stay above the 22,200 mark, and we'll have to wait and see if that really happens. Should we quickly just see what broader markets are doing before we get to stock specifics as well? Because while you're seeing a consolidation on the top line, broader markets are not doing too badly relatively. The mid cap up about 200 points. The small cap index also up about 0.5%. So that's where the story is perhaps going to lie. I'm going to start with two stocks we've been tracking consistently only because of the kind of fluctuations they have seen. And Zay, which was up about 8% yesterday, seems to have opened really in a lot of pressure at a 10% low lower circuit because they've denied that they're talking with Sony for finalizing or reviving merger details. But also Bloomberg story saying that SEBI may have found a hole in their books. Paytm, meanwhile, I think this is the fourth session consecutively that Paytm has been on a 5% circuit. What is happening with Paytm? Look at how that stock has climbed up from the depths. Is the worst over? Have they bottomed out is the question. Devyani International is the other one that we should talk about today, a block deal over there. Yum Restaurant seems to have exited its stake, about 4.4% stake, and that stock up 4% as well, 4.5% at 173. Richly valued stock doing well this morning. Swan Energy is raising money. It's raising its QIP at 4,000 rupees. Floor price is at 703, so at a bit of a discount. That stock about 0.5% down. Minda is the other one that's been on our radar. They have some relief from the CCI, been allowed to buy their stake in Pricol, and that stock trading about 1% up. But a lot more excitement in that pack this morning, Samina, especially in the broader markets.
It is. It looks far more action-packed than the benchmark itself. Campus Active is leading the gains, 9% gains on the counter. KFin Tech is also doing quite well, 7.5% up move. Union Bank on those fundraising plans gains 5.5%. Insurance is again looking like a good play this morning, 6% on New India Assurance. ABB on earnings is looking good, like we told you. LG Equipment is up 4%. Hindalco is well off the day's high point as we see it, already trading with a gain of only 2%, so 1% off the day's high point. On the sell side, it's unfortunately Z that's taking it to the chin, 10% cut, 174. On Z, All Cargo is also having a weak morning. You've got SGVA and Jindal Stainless and Power is also marginally off this morning. So all in all, you've got Swan on back of that QIP is also seeing some pressure. If I can quickly get Pricol and Minda, let's see what's happening there with that approval coming in from the CCI on, I believe Taman has already highlighted that. So no movement. It's not being viewed negatively or positively at this stage. Pricol is up 2%, but whether or not Minda goes ahead with this deal is going to be anybody's guess. It is a very clear morning where the broader market insurance play is playing out. Chandan, have you looked at New India Assurance? I mean, the rally there is staggering. Even this morning, a big gap up, 6% higher on New India Assurance is what we have.
Yeah, structure looks quite positive, and we are expecting this stock to even hit to us 20% higher marks. Major trend is intact. We have seen a nice breakout on the daily and the weekly scale. So one can buy at current level near 295, 297. Keep the support of 288. We are expecting this stock to head towards 310 to 315 levels. So expecting further 5 to 10% kind of movement in the counter.
Chakri with us on the phone line now. Chakri Lokpriya, managing partner at Red Strawberry LLP. Chakri, very good morning to you, and it's seeming like a good morning. Nifty is sustaining above the 22,200 mark, just about there. But a continuing weakness here in IT stocks. Banks also not doing too badly. What do you think you are seeing directionally in the market right now? And are you looking at a sustained revival of, say, the financials and private banks?
Good morning. In fact, IT's weakness is probably related to the U.S. Fed's uncertainty about when they'll start cutting interest rates. It was expected that they would do that sometime in March now, but looks like they're pushing it back. So this uncertainty will continue to weigh on Indian IT stocks because of the interest rate differentials that will support valuations. Overall, the market is, in fact, looking very intact. Banks... we were looking at the valuations, after all the run-up, they're still looking very good. Today Union Bank is a good example of raising a QIP and fully subscribed. And after the QIP, the diluted book still trades at a very attractive underbook valuation. So that is the story largely that replicates itself. On one hand, you have private banks, which are kind of not participated as much as PSUs, but I think PSUs are still the place to be.
Yeah, PSUs are the place to be. Anything you like specifically, Chakri? You spoke about Union Bank, and of course that stock doing very well. But an SBI, a Bank of India, anything that you think has more potential right now or you'd like to zone in on?
Both these banks are looking good. SBI in the large cap, of course, it is the largest bank in the country with making 1 in 4 or 5 loans trading at about one-time book. That's a phenomenally good valuation if you compare it to, let's say, the private banks, which are trading at 3 to 4 times book value. Now, its ROEs, etc., have all moved up very strong, and therefore, I think SBI from this level does really well. And the same in the mid-cap space, Bank of India, similar story. Again, a very large bank, even though it's mid-cap, but the bank size is a very large bank. And it's traded at about 0.8 times book. So that gives adequate room for the stock to deliver further returns from current levels.
Chakri, hi, it's also Samina joining in. What is your view on Hindalco? Novelis apparently is looking or filed for a listing. This is going to be a pretty big deal, a big chunk of money coming the way of Hindalco. Does it have a material impact on the stock? Do you even track this one actually?
Novelis is a very good, even the listing happens, is clearly very good news for Hindalco. Novelis being focused on the North American market at a point in time when, the U.S. will start cutting interest rates at some point in the next few months. So cyclical companies do well, so which means Novelis can attract a much higher valuation, so their timing seems to be good. And that will have a positive rub-off effect overall on Hindalco because as Novelis, the cash that is generated from that will help in the balance sheet of Hindalco and strengthen it further.
Chakri, your top 3 stocks that you're incrementally adding to at this current juncture?
I'm tempted to say that HDFC Bank, simply because it has underperformed for a long time. I would still continue to kind of stay away from it. If you're a positional investor, then yes, maybe. But outside of that, I think it is still the traditional, I wouldn't use the word traditional, but the PSU banks are still the place. Now, the infrastructure stocks, even Adani Ports is looking very strong. Even after the run-up, I still think with its current strategy, the company is poised to do well. And with the recent findings the productive link, the story about infrastructure basically. So, which means companies like Nagarjuna Constructions, Patel Engineering within the infra space are also looking very strong.
Right, that's the word coming in on a couple of names that Chakri currently likes. Chakri, what is your feel about oil and gas stocks? I mean, stocks like MRPL have been on a tear. IOC, HPCL, BPCL have been gaining since end of October last year. More importantly, their valuations currently seem doubled. But of course, some argue that the HPCL today is very different from an HPCL maybe 5-6 years ago, right? With elections also around the corner, how would you play these oil and gas stocks? Do you still feel that 5-6 times price to earnings, the counters are still attractive bets?
You got it right, Sabina, and your view is spot on. That is, the companies are today very different from what they were, and they also have clear plans to participate in the green energy, renewable energy space. They're getting in some amount into smart metering and things like that, which provides them a new growth path and also reduces the risk to earnings. So I think the current run is more to do with what a BPCL can do or an HPCL can do in the future. And on a valuation basis, ONGC still is a very attractive stock fundamentally. The biggest uncertainty of ONGC has been, various regulatory pressures that the company would have to face. But I think despite that, I think the valuations are attractive for ONGC.
Absolutely. Chakri, thank you so much. And, great to have you on the show this morning. Let me quickly get a view from Chandan before we take a very short break on where you see this market sustaining, especially the Bank Nifty. Chandan, Bank Nifty, retreating from its opening rates right now, and we're also on expiry day. What is the trend line you see for the Bank Nifty?
Yep. So if I look at the Bank Nifty index, overall, we have seen good run up in the last trading season, but today it consolidating at higher bid. So I believe that 47,000 could act as a key level. Till it holds 47,000, we will continue to be with buy on decline stance. But I believe that in market selective stocks can do well and they can generate alpha. So I think we should focus on the Bank Nifty. let it come near 47,000, then we can again initiate the spread or buying strategy. But stock specific, I can talk about few names. Those can generate some return. So one is buy on Geofinance. The stock has given a consolidation breakout with support of 281. It has potential to rally towards 300 levels. Apart from Geo, one auto stocks or two auto stock could be on radar. JBM Auto looks good with support of 2300. It has potential to rally towards 2600 levels, and M&M is other name. So apart from some consolidative move in the market, we have to focus on M&M, JBM Auto, and Geofinance, and all these three stocks can generate the movement of 2 to 5%.
Yep, absolutely. Thank you so much, Chandan, for joining us this morning. We're taking a very short break at this point, but the coverage continues. On the other side, we're back to talk to MTAR Technologies Managing Director P. Srinivas Reddy about the company's business outlook. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching India Market Open. It's a flat day on the street this morning with stock-specific action continues to drive trade. Well, we have one company that's in focus this morning is MTAR Tech. The counter has been seeing some selling recently post-reporting earnings. P. Srinivas Reddy, Managing Director of MTAR Tech, joins in to talk to us about the earnings and the road ahead. Mr. Reddy, thank you very much, sir, for joining us today on the show. So on the face of it, the numbers seem slightly lower than what the street would have liked. Your revenues have dipped quite substantially. EBITDA has also come in lower. Margins have also narrowed. I do remember in the second quarter, you had revised the guidance on the margin front and on top line. But this time around, even on margins, I think your revised guidance was close to 26. They've come in at about 21%. Can you share with me, is this all part of the transition that the company is undergoing? What's happening?
No, basically, the main issue is with the technology change in the clean energy segment. It takes some time to move from one type of technology or the model to the other, which we're dealing with some of the main customer. And that has taken some time, about a couple of quarters, to stabilize, because it's not only our company, but it's also about the supply chain all over the world. So that's going to be stabilized by end of this quarter, and that's the main issue in terms of reducing our guidance for this year. But we are definitely, the outlook looks very strong. As I mentioned earlier, we're going to move ahead with about 45 to 50% revenue growth next year, and we will maintain a 26% EBITDA margins moving forward. So this has been a correction. It's been a pause for a couple of quarters because of the change in technology, and we are all stabilized right now by end of this quarter, and moving forward, we'll go back to our higher revenue growth for the next year.
That's fantastic, sir. So are we, can I then assume that the fourth quarter of this financial year will see a return to normalcy, or is it going to be from FY25?
See, the normalcy, yes, it will come back to normalcy in the fourth quarter, more or less. But the major, if you look at the next financial year, we'll be obviously doing a much, the growth will be about 45 to 50%, as I mentioned. But in the fourth quarter, we'll have much higher EBITDA margins. So that's why I said that we will average close to about 24% EBITDA for the year, even though we are averaging about 21.5 right now. So yes, you're right in saying that we'll more or less get back to normalcy in the fourth quarter.
So, you talked about this tech change, and a lot of us who've spoken to you, you heard your interviews, don't really understand the technicality of this, right? So if there is a tech change and you indicated that this is for, one big client or one big order, and it's the whole supply chain across the world that's going through this change, tell me, what is the impact of this once the transition is complete? Will it ensure you get more orders? Will it ensure more, increase in value from the same order? Break it down for us. Will it improve operations? We, on the face of it, don't understand very much of it, so it'd be useful if you can break that down and explain to your investors and our viewers.
Yeah, see, what happens is that whenever there's a change in the model, in the design, we work with our customer to actually implement it on the shop floor. So once we do that, it's not only us, but the other suppliers as well. We are the major suppliers, but the other suppliers also have to get up in terms of the various bought outs or whatever they are trying to do for the company. So it's not only the design change, but also implementing on the shop floor. So this would obviously take 2 quarters. There's a great advantage in terms of upgrading your model. We help the customers as well. And that's something which will obviously, as you said, will not only give us slightly more value add, but also in terms of once it's implemented, we'll also have better orders flowing in for the future, because the customer himself will become a lot more competitive, because the tech change would result in about a 30% higher power output for this new model. So that's the reason why it was taken up very aggressively over the last 2 quarters.
Oh, that's fantastic. How much does this customer contribute to your top line, sir?
So this, right now we are doing it about close to, we are up to 70%. Now we are doing probably up to 55 to 60%. But the next FY25, we are growing very well in the other segments, in aerospace and other sectors as well. So if you look at FY25, it will be roughly around 40% and all.
And this will also help you compete for similar orders in the clean energy space, right? So what is the sort of growth in FY25 that you are working with from each vertical? So product mix, if you can give me a breakdown of that.
Can you repeat that? Because
yeah, so I said between aerospace, defense and clean energy, for FY25, what is the increase in contribution expecting from each offering?
Yeah, so as I said, we gave a guidance of 45 to 50%. That's roughly about 900 crores of revenue next year, without considering any kind of upside moving forward. As of today, we have not considered any upside. So we're very clear in that 900 crores, out of which close to about 40% would be specific in the clean energy segment, 40 to 45%, and we're looking at almost like about 20% in aerospace. Then we are also into nuclear division. We're also into defense in a small way right now. So it's a breakup of all this, and that's how we have come up with a figure of 900 crores.
Sir, what does your order book currently stand at? And if you can also help me with what are the conversations you're currently having?
We have a closing order book of 150 or 175 crores. And the major orders, what we're expecting is from the nuclear division for about close to 500 crores of orders coming in. So that we are expecting it to happen by March, but it would really doesn't matter to us because it should definitely happen in first quarter of next year because that's not taken into account for our next year revenues as well. So we'll end up with the orders is not an issue for MTAR. So we are working with a lot of MNCs. We are very strong in domestic nuclear space divisions as well. So we are also getting up to execute our orders in a much faster manner. We are finishing orders with nuclear division in 50% of the time given by the department. So that's how we are moving progressively very well. So the main issue has been the correction in technology, as I said, and there's nothing wrong with any of the other issues.
So I think you're right. The whole industry, I think that is, focused on nuclear, aero, clean, is not struggling when it comes to winning these orders. And you also said that execution is not a challenge for you. Anything on cash flow? What are payment cycles looking like? Are orders that you've been completed being paid on milestones? Give me an understanding of that.
See, most of our, we deal with very specialized kind of work in the niche area, whether it's a nuclear division or the space. So the payment cycles are mostly, they pay also advances of about 25 to 30%. And as we progress with the project or dispatches, they pay the balance 60%. And once we complete the project, the 10% retention money is paid as far as the organizations that we deal with. So we have never had any payment issues with any of the organizations that we are dealing with. In terms of exports, we normally, it works on 45 days net. That's what we work on. So we never had any issues in terms of receivables coming into the company.
Sir, also in the export space, any conversations that you want to tell us? What is the sort of contribution that you get from exports? And in terms of guidance, what percentage of your top line will be coming from exports?
Should be around almost 50% for next year. That's the fantastic thing because we have really worked hard on improving because our gross margins on domestic sectors are much higher, but in terms of exports, our operating leverage is very good, even though the gross margins are lower. So improving on the other segments, that's what you can see in FY25 happening, and even moving forward as well. We'll, as I said, even for the subsequent year FY26 as well, we'll have the revenue growth of 30 to 40% band. That's what we have evaluated. So the more we're focusing more on improving our other areas, other segments moving forward, and that's what is happening right.
Right. Just very lastly, Mr. Reddy, before we have to let you go, any risk, any sort of concerns that the stage of a delay in the transition phase that the company is currently underway in terms of the tech, or any of your orders that that may potentially be delayed? I know there was one big order for about 160 crores that's been deferred in terms of payment to last year. But anything else that we should be aware of as we look ahead?
Look, what guidance I've given for the next year and for the current quarter, we have evaluated very carefully. We have not taken any upside or any kind of chances. We always gave guidance in the right manner. Even for the last couple of years, we've always done better than our guidance. Because of this sudden technology change, there was an effect of a couple of quarters. But yes, I don't see any kind of risk moving forward for the numbers what we have guided for next year.
Fantastic. Good luck, Mr. Reddy. Great talking to you today on the show. That's MTAR Tech. It's been in the news. The company is undergoing a tech transition, and that is the only reason we are seeing the earnings slightly more deferred or behind the guidance that was set out. On that note, we'll take a break. We'll come back. We will be talking to Indranil Sen Gupta, economist and head of research of CLSA, joining in, talking to us about his call on the rupee and the FPI flows.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching India Market Open, and it's looking like the Nifty is hanging on to the 22,200 mark, just about 38 points up. The big loser this morning is definitely the IT pack. Once again, that weakness persists. Infi leading that group, down about 1.5%. Wipro relatively doing okay, flat but doing okay. HCL Tech persistent, some of the others that are showing weakness. I just want to pull up Hindalco and see what's happening there, because Hindalco was definitely the stock of the morning, considering that the Novelis news has been seen sentimentally positively, because they're going to come up with an IPO. That company, that arm, has a 60% contribution to Hindalco's top line. So it's come off the opening sort of spike, but still about 2.5% up at this point. All right, let's talk a bit about FPI flows. Indranil Sen Gupta, economist and head of research at CLSA India, believes FPI flows will go up to 1% of GDP from the 0.4% they are right now. Very interesting note out there. Indranil, a very good morning. Great to speak with you and have you on NDTV Profit. You know, I was going through your note, and it's a very interesting one. I want to understand first the whys and the by when. By when do you see FPI flows coming back? Because if you look at the data just in 2024 so far, FPIs have been selling, at least in equities, about 29,000 crores in equities have been sold versus a 60,000 crore plus purchase just in December. Why do you think the tide will turn?
Well, I think you should not look at it month on month, but over the fiscal, in which case you have almost $30 billion including debt. So I think that in the next few years, next 2-3 years, we will see FPI flows average about 1% of GDP. I mean, it's not every year, but 1 year maybe much more, 1 year maybe much less, but we are in that zone already.
Right. Let's talk about the why. Let's talk about the rationale for why you have seen this. Looking at, and I saw this figure in your report that you had FPI flows go down to about 0.2% of GDP between FY15 and FY23. Of course, that's a function of the rupee and a weakening rupee. So is it safe to assume that a reversal in rupee will also fuel these flows?
Exactly. So, if you think about it, the RBI was building FX reserves till the GFC, and the rupee was actually appreciating because, foreign investors had the comfort that if they came in and left, they would not lose much on the currency. So if you go back to the pre-GFC period or even slightly later, you find that FPIs were almost 1.3% of GDP, FPI flows. After that, we ran out of sufficient FX reserves, the rupee depreciated, and that led to a big fall in, FPI flows. In fact, I vividly recall a hedge fund, overseas hedge fund telling me that why will I go to India when, I will probably end up losing my all in currency depreciation. Now that scenario has dramatically changed. Mr. Das has built FX reserves. FX reserves are today $600 billion. And that's the level we think is adequate. And that's again bringing back FPI flows.
I just want to understand the context of it because you're comparing this to pre-GFC. Our forex reserves are getting better, and economy on the whole now globally recognized as relatively stronger, etc. But when you compare it as a percentage of GDP, our growth is also growing at a better pace, isn't it?
No, growth is roughly similar. If you take, in the last. I would say the last 20 years, growth is averaging around 7%. If you leave aside the GFC crisis and the COVID years, otherwise it's averaging around 6.5%. So there is no change in growth per se. The big change that is coming is because earlier we had high FX reserves which provided support to the rupee. In between, we lost that advantage, so the rupee depreciated. Now we again have rebuilt FX reserves, therefore the rupee should stabilize, and that will bring the comfort for the foreign investor.
Right, please, continue that point.
No, like I'm saying that we look at three metrics. Is your import cover 10 months? Do you have 75% cover for FPI equity outstanding? Do you have a 2x short-term debt external cover? All of the three lead to about $600 billion of adequate reserves, which is where we are.
All right. So we're sitting pretty as far as the bank is concerned. So FX reserves are giving that comfort, completely understood. But I also want to understand when you're saying that FPI contributions will come in, look at the equity and debt sort of breakup. And the focus has been more on debt recently. Rate cuts come into the picture, etc. Can you tell us how you see that playing out? Will FPI inflows into debt consistently increase, or are we going to see another sharp upswing, at least in the medium term, as far as equity is concerned as well?
So equity FPI flows should be a steady story. You see, India's weight in MSCI go up vis-a-vis China. And, so that's a pretty much discovered thing. when you come to debt, the fact that we are on the JP Morgan index, the fact that we may get into some other indices means that we will see good flows, another maybe $15-20 billion of flows by March 2025 or so. So that's one. What is also more important to understand is that a lot of the debt fund managers in FPIs were investing in India at their own risk because India was off benchmark. They were not obliged to invest. So if something went wrong, the onus was on them to prove why they went into India in the first place. Now that is changing with India in the benchmark. What this will also do is bring in debt FPI flows into the credit market. Although this is not the benchmark for that, but then once you have that justification, it's easier for debt FPIs to also invest in the credit market. So I think therefore that the 1% number that I have as both debt and equity, and I think debt flows will also be picking up consistently, especially because the rupee should stabilize.
Yeah.
The RBI should be cutting rates, maybe 100 basis points by June 2025. So you get the advantage of FX gains plus the advantage of capital gains.
Wait, I'm going to come back to that and get your view. So you're seeing 100 bips by the RBI by June. So no
2025.
By 2025. So
yeah.
How soon do you think that begins? Are we going to wait for the Fed? Because the world is waiting on the Fed right now.
I think that the language of the Fed at least has to turn more definitively dovish for the RBI to act. But if you look at it this way, that if you cut rates, you support growth. And when you support growth, equity flows come in. When equity flows come in, the rupee stabilizes and the debt guys come in. So in India, because debt is barely 10% or even less, 5% of the overall FPI investment, paradoxically, rate cuts lead to more flows because they bring in equity flows. So therefore, I think there is as such no reason for the RBI to not cut now to support growth. But then I guess they will want to wait for a more definitive statement, maybe in the March 2024 policy, or let's see when, before they start cutting.
Right. So
but our call has been for April.
Okay, your call has been for April for the RBI.
Yeah.
And for the Fed?
Fed is slightly later, September.
Okay, so that's interesting. We'll wait and see if the RBI precedes the Fed, and that consensus growing that maybe they should. I have very little time with you, but quickly want to bring in the China question when you're talking about FPIs. How much of it will also be determined by a China recovery and then a larger pool flowing towards emerging markets, hence India also benefiting?
So I think right now money has flowed out of China, hidden in countries like India. So any recovery in China will naturally first lead to flows back, but then also lead somewhere to a greater interest in EM per se. So at this point in time, I will say that a reversal in China will be flattish to marginally negative for India's FPI flows at this point, because already a lot of people have come here and China is cheap. So if China turns around, I think money will flow there.
All right. So if China is cheap, money will flow there. Might not be too positive for India, at least initially. Thank you, Indranil, for joining us. Always a pleasure speaking with you. Indranil there, with a very clear outlook that FPI flows in India will move up to 1% of GDP. We're going to take a very short break. That's a wrap on India Market Open, but stay tuned. Up next is Talking Point.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the sector.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
Welcome, you're watching Talking Point. I'm Tamanna Inamdar. We're at a very interesting time in the Indian markets. We're making new highs every day, technically, as per the numbers. But are we seeing that same frenzy, confidence to sustain that level of growth? A couple of factors there need to be very clear to turn the tide. Questions that we're trying to address today with our guest on the show. Does the growth potential in the broader markets in small and mid-cap companies continue despite the kind of run-up in valuations? What about the role of FPIs? FPIs have been selling at least for the first couple of months of 2024. When does that pivot turn? Is it going to be after Fed cuts rate? Is there going to be a wait for China to improve? Or are we going to wait for the election season to end, at least in India? We're going to talk a bit about IT companies and financials as well. So an interesting chat lined up. And to answer some of these questions today is Vinod Karki, Senior VP of Equity Research, ICICI Securities. Vinod, hi. Welcome to Talking Point, and great to have you on the show. Let's begin by getting your take on where we are. So we've ended a fairly successful Q3 season, one would say, though there are divergent views on that. I'd like to know what you think. What, in your view, is the next big trigger?
Thanks, Tamanna. So, yeah, if you just see where we are, so if you just roll back where we started the year, we were close to this level, 21,800 on the Nifty, I guess, around December, Jan. And we are around 22. So it's just a couple of percentage points here and there. But you have to look at the market in two contexts. One is the valuation and the other is the growth. So there is no denying that on valuations, things are expensive. But all equally important is that there is no denying that after a long time, we're seeing the profit cycle continue to grow at a sustained pace. So if you just see the overall profitability in the system, corporate system, we were in FY23, we were at around 4.3% of GDP. And on a trailing 12-month basis after this Q3 results, we are at 4.9. So all said and done, the corporate profits are growing at a rate faster than nominal GDP. There's no question about that. And if I look at any forecasts of key indices like Nifty and the other smaller mid-cap indices, it's anywhere between close to around 20% odd. That's the forecast I'm getting from 23-25 perspective. While we know that the nominal GDP will be growing around 10-12% kind of thing. So this faster than nominal GDP expansion of profit cycle is continuing. But as we know, the valuations are at the higher end, which typically happens when growth is at a faster clip. So that's how we are currently right now, that growth is quite robust, but valuations are not leaving much on the table right now for investors.
I want to speak specifically about growth, and then we'll come to valuations, because you have a very strong and fair and clear point that valuations are not leaving much on the table. But when you're talking about earnings, and your report on Q3 says that as far as small caps are concerned, the maximum upside in PAT to GDP left within small caps is at 0.7% versus cycle peak of 1.2%. I want to get your sense on whether some of these earnings really stood the test of valuations. Because the run-up and anticipation when it came to the actual numbers in corporate earnings, did you see spots of disappointment there?
I think earnings, when I see the beats and misses, it was even Steven kind of thing. There was some misses in mid cap, but small caps was reasonably good, large cap was reasonably good. But what I made a point over there is, if you have to believe in a cyclical recovery in the economy driven by the investment rate, CapEx cycle, real estate cycle, which typically benefits the smaller companies a lot because they get a good amount of ordering in terms of these capital-intensive sectors. We have seen that the previous profit cycle, which peaked out in 2008 at a peak of around 6 to 7% of GDP, if I see where we are right now and where the maximum, what I should say, if you were to believe in a cycle that things peak out at a certain point in time, the maximum upside left is still in small cap because they have been affected a lot over the last several years. Several crises have been there, and they are coming out of this bad situation. And in terms of where they are and where they can go, there is a lot of steam left in terms of purely on a cyclical basis where capital sector, the whole CapEx cycle, real estate cycle is picking up, which typically tends to benefit these smaller companies. So yeah, so I think the growth is there. It shows up in the estimates also when I look at the Nifty mid-cap or the small cap estimates. The growth is in 20s as compared to 17-18% estimated growth for the Nifty 50. So there is this element of higher growth on a trailing basis as well as on an expectation basis. And on a cyclical basis, it seems that there is steam left in terms of earnings growth for this space.
Earnings growth, yes, but then let's come to the second part of what you said in terms of valuations and how much of that value is actually left on the table. So I was having a conversation yesterday, and there was an interesting quote that came up to describe the markets right now, which is, it's a bit like you come late to the party and the best food and drink is over, and then you're sort of rifling through the leftovers to see what you can find. Do you get that sense, or are there enough spots of fairly valued companies still there, or you just have to now live with the current valuations and expect earnings to catch up?
I think it's of the latter, that you have to live with these higher valuations, because when I look at my framework of relative valuation of small and mid caps over large caps. It is at a most unattractive zone from a cyclical perspective. So there is no margin safety in small cap, mid cap. There is no question about that. They are in fact clearly trading above large caps. But as I said, if you see past instances where such situations happened, such situation happened after the first Modi election victory in 2014, and mid-cap, small-cap indices went up within a matter of few months, 70, 80%. I mean, indices, I'm not talking about stocks. And they became expensive compared to large cap. And what we saw is that after 2018 was when, I mean, after 4 years, that bubble burst. So these higher valuations can remain longer. Several years, in fact, if the growth continues to support it. So that's the point. I mean, in fact, this time around, the growth is more supportive than it was earlier, because earlier in 2014 to 18, I don't think there was an investment boom or a real estate cycle boom. In fact, it was fading. But this time it's rising. So that's something on their side. But there's no margin of safety where you can have very high alpha from this space. But you can't say they're going to collapse. They may tag along, do kind of nifty, the large cap kind of returns. That's possible.
Yeah. So, I mean, anyone who has been waiting for that correction for the last many months is, I suppose, still waiting. You mentioned the real estate cycle turn, and you've said it a couple of times. So I must ask you, Vinod, do you think that there are still fairly valued companies in that space which have not run ahead of expectations? Because if you look at broadly, the earnings were fine, but in some cases there were some disappointments in terms of scale of execution, in terms of cost of inputs. These are things that real estate players are also struggling with. Anything that you like or an outlook you have on this space in the listed category?
Yes, so real estate cycle for sure is, we just entered, I think, the second year into this cycle. So typically they can last 5 to 6 years or even higher, depending on the structural strength. But the stocks, I think, are mostly, if I look at our coverage universe, are mostly priced to perfection. I don't think there's a huge upside there, any big upside left. But the way to play real estate is, I think, through the supporting companies. For example, if you look at banks, which will be lending to the real estate mortgage cycle. So if you're saying that there's going to be a big real estate cycle, obviously mortgage lending will be a good sector, and you have a lot of financial companies there and large companies which are at very reasonable valuations. So and building material companies, where there have been some of them at least are coverage universe are reasonably valued. So I think you have to play more indirectly in the real estate cycle through lenders and the guys who build out these real estate projects, which are available at reasonable valuations.
Yeah. We're not keen to know your view on private banks as well. Definitely one space left out, definitely in the large cap space. And I think if there were 2 or 3 headlines from the results season, it was IT companies didn't do as badly as was expected, and private banks did worse than was expected, HDFC Bank being on top of that heap. Now you're seeing a bit of a sentiment turnaround. Would it be fair to say that the next leg of the rally is coming from private banks and the large ones at that?
From a cycle perspective, I'm extremely confident of the banking sector as such, especially large caps, and within that, relatively the private banks, if you see their long-term valuation, they are at reasonable valuation. So from a cycle perspective, when I say cycle, if you look at the NPA cycle, we're still bottoming out on the NPA cycle. You've not yet formed the bottom. RBI says in FY24, we'll be forming a bottom of the NPA cycle, whereas the CapEx cycle is just about picking up. So in the previous cycle, if you see between 2003 to 2008, it was largely the corporate lending cycle, the re-leveraging in the corporate sector, which led to huge gains in growth for banks. So that's yet not picked up. We are sub double-digit growth in that space, while retail is what is driving whatever growth is there. So I think a combination of where we are in the cycle, both on valuations and growth trajectory, NPA cycle, I'm extremely confident on banking as such, especially, some of these quality large cap banks, so I think that's a good space to be. I mean, where if you see the rest of the market,
private or public?
Public, private, both.
Okay.
Both.
Okay. Because PSBs are the ones in favor, not so much as private banks. But you're saying both will come in.
So both. I mean, both. I would prefer the larger banks because they have. We can expect that they have the wherewithal to really absorb the growth in a big cycle, and wherever there has been, they have shown the ability to underwrite in a prudent way, because the biggest risk with banks is the underwriting issue. Basically, can they keep NPAs limited when the cycle turns? Because growth anyways will come. The credit growth will come up. We have seen in the past cycle that when the credit growth really picked up due to the releveraging cycle, credit growth was almost 2 times of nominal GDP. So one cannot say that this will not happen again. There may be a time over the next 2, 3, 4 years where credit growth might be much higher than nominal GDP, given the way the economy is progressing and we are getting GDP upgrades. There is no way a country can expand investments and capex and overall productivity without getting bank credit to participate. So that's going to happen for sure.
We'll take a very short break, but this conversation with Vinod Karki continues. On the other side, we're going to talk about whether he thinks we will see a pre-election rally, and will this love that the market has for public sector companies continue? All of that and more on the other side.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome Welcome back. You're watching Talking Point, and today we're in conversation with Vinod Karki, Senior VP of Equity Research, ICICI Securities. Now, we've been talking about what the road ahead looks like at a time when markets are at all-time highs. Vinod, it would be amiss if we didn't talk about the possibility of a pre-election rally. Now, the question over here gets a little complicated because a continuity of the same government has been priced in. You saw that big bump up late last year. Do you think that this has, in a sense, become a non-event, or are you expecting a bit of a pre-election rally like we have been seeing consistently over the last, I would say, 5 or 6 general elections 3 months before the event?
I think we are already in that mode where the market is getting excited that we're going to have a clean mandate, a clear mandate. So that rally is already progressing in my view, because if I just wind back 6 months ago or something like around that time, there was some uncertainty about mandate being a little weaker and all, but that was, I think, now behind us, and people are quite confident that there's going to be a clear mandate and political reforms are going to continue. So I think we are already in that kind of, that's why the market, I think, is hitting all-time highs currently as we speak. So that's already playing out. So I don't think there's any huge surprise on that front. Surprise in the sense that that hasn't played out, that the market is taking cognizance of a clear picture. So that's already underway as we speak. What can surprise is basically that it's not as clear as it was thought to be when it actually comes out. That could be what you should say, risk. But as of now, there's nothing to suggest that that's going to happen. So, I think there could be some excitement post-election if it really comes through. But then after that, that will no longer be a trigger, maybe. So after that, it's got to be what the final budget will be, and what is talked about in terms of development plan and overall spending and how revenues are picking up. All those fundamentals will take over beyond this.
Okay, so you're saying we're already in a pre-election rally. That's what's leading to this excitement.
Yes.
And broadly, we say, okay, because policy continuity, etc. But if I were to ask you specifically, why, as an investor, someone who tracks the market, you think that this will be good for the Indian economy and for investments? Where do you see policy continuity actually make an impact in terms of valuations improving?
Yeah. So if you look at the interim, which I thought was just, it should ideally be just a statement, nothing more. But it unveiled one of the, which I think is undermined. People are not talking much about it, but I think it is very important to note that the interim budget talked about what is called as adding the Anusadhan innovation as the term into the overall development plan of India long term, which is extremely positive in my view, because when I look at global economies where spend on innovation R&D, global R&D spend is more than 2%, or China, we were at similar position in China at the start of the century at 0.7% GDP. We have just maintained it around GDP at currently 0.7. But there was a lot of emphasis in the interim budget, mission statement laid out in a corpus of 1 trillion rupees for zero interest rate loans towards R&D spend. I think this is extremely positive in my view. It's going to improve productivity in the economy going forward, and it is timed so well because what we have seen historically is that R&D spend anyways increases when the capex cycle picks up in the economy, which we have seen in the past also. So we are seeing this capex cycle pick up in the economy, private investments happening. And if there is a policy measure towards, pushing R&D spend, that's going to enhance productivity in the economy, and that's going to be very structural in my view from a long-term perspective. I'm very positive about that.
Let me come to the PSU rally. And you have largely been bullish on PSU companies. Now, we tend to bracket it in one basket, but the fact is that there are many different kinds of businesses. You have PSUs in the energy space, in railways, banks, etc. Do you think that the overall change in sentiment after, I think, decades, that PSU companies can also be profitable, they can also bring value, will sustain? And which of these baskets really look like they will have more to give?
So this PSU versus private thing is more to do with where the demand in the economy and cycles are playing out. See, if all this positivity about PSUs would never have happened if the PSUs would not have delivered on growth, their order books rising and the profits rising. And we have seen this story play out. Only thing is people have forgotten completely that between 2003, 2008, where the texture of the economy was that the investment rate, capex cycle, and the companies which grow by balance sheet expansion, they were the darlings of the market. So when the capex cycle expands, you have balance sheet driven companies really do well because demand for capital intensive sectors rises. And PSUs are typically in these spaces, and they did really well because the profit, the growth, the balance sheet expansion, everything was expanding. And they did really well during that time. Post 2012, till about 21 pre-COVID, there was this phase of, that the investment rate, the overall real estate cycle, everything fell, and the capex cycle fell, corporate capex fell. And so that's the time when these companies just did not pick up. But apart from the cycle, we have also seen that the emphasis, the focus of the government towards defense spending, defense indigenous manufacturing in India, these are the new initiatives and policy measures which have also helped the overall manufacturing capex theme, which is helping these companies anyways. So I think this is a phase of as long as the capex cycle continues, in my view, such balance sheet driven companies, be it PSUs or private, will continue to do well. The gap between PSUs and private will always remain, in my view, in terms of valuations because of the perception that the investors typically have. And these perceptions don't change. They didn't change in the earlier cycle. But what matters is growth coming in this sector or not. So it's clearly coming. We're seeing order book of these companies really pick up. Yeah.
Okay, so growth is coming. The PSU and private sort of perception lag will continue. But as we round up this conversation, then I ask you to look forward. What are the sectors and spaces that you're seeing with the biggest pop coming ahead, at least in the next 6 to 12 months?
So there are two things to answer this. One is there will be continued momentum in some of the sectors, so where the growth will be good. But there will also be some, for example, banks. They are getting some kind of re-rating is happening. So combination of these two, I think, will be where I would bet my money. Is basically where their valuations are getting re-rated. People are recognizing that the valuations are cheap and the fundamentals are improving. So as I talked about financials and large banks. And on the momentum side, in the sense where growth, not momentum, stock momentum, I'm talking about growth momentum, where order book is improving and all. And demand is robust. I think mix of industrials, the capex cycle companies, and some of the discretionary consumption categories like premium products, autos, and things like that. I think that these are two spaces I'll be bullish on. Three spaces rather: financials, large financial banks, industrial capex-driven companies, and pockets of discretionary consumption.
Discretionary consumption is the buzzword indeed. Thank you so much, Vinod, for speaking with us. Vinod Karki of ICICI Securities there on how he sees markets panning out. That's all the time we have on this edition of Talking Point, but stay tuned, a lot more coming up on the other side.
presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the sector.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket,
Hello and welcome. Another life high for the Nifty. The index opens above 22,200 while the Sensex trades above 73,200. Broader markets trade lower. Most sectoral indices trade in the green, led by real estate and metals. On the other hand, IT and media see some pain. And woes continue for Z. The company clarifies it is not involved in any negotiations in relation to Sony merger deal. Meanwhile, SEBI uncovers $241 million in an accounting issue. The company once again clarifies that information is not completely true. The stock recovers from its lower circuit. Meanwhile, Hindalco's US subsidiary Novelis will go public. Proceeds from the issue will go to the promoter. Hindalco shares jump over 2%. And shifting focus, farmers will resume the Delhi Chalo march today. The unions are demanding the legal backing of MSP and calling for it to include all 23 listed cash crops. Well, those are the top headlines we're tracking this morning. The markets trade close to 22,200. The breadth of the market's not too bad, but the broader markets are beginning to see some profit taking after a solid 6 runs behind us. In terms of stock movers, the day belongs to Hindalco, which gains on back of its jewel, looking to list on the exchanges in the US. You've also got the other metal stocks gaining on back of liquidity being pushed in the Chinese markets. Well, that is, of course, the broader market, the Nifty picture. In the broader market, stocks like Z are taking it to the chin. Agam, you did say that HDFC Bank would provide the support we need this morning. What are your thoughts? How does HDFC Bank look in generally the market picture on the F&O side of things?
So at least it's panned out in the first hour of trade, and since then we've seen a little bit of a correction now coming off. But for now, well, you know, as long it's just the first half of the session, and at the moment, as long as well things are largely flattish. Well, we're going to have to wait and watch on that one. Of course, we do know that there was short covering coming on in HDFC Bank yesterday, which does mean that perhaps there's some consolidation on the cards as far as HDFC Bank is concerned. But I'm going to start off right at the top, and I'm going to talk about the Nifty futures. Let's pull that up. And let's see how things are panning out there, because we are looking at a 1.3% increase in open interest. The underlying, of course, has come off from day's highs. And earlier on the session, there was a little bit of an up move, and those gains have been given away. So we do see some volatility in the first half, first hour of today's day of trade. The Bank Nifty is no different, and in fact, we have seen some amount of weakness coming back, and currently it is marginally in the red, but we don't have too much change in the open interest. However, options markets panning out, at least as far as the Nifty goes, we continue to see that range of 22,000 on the lower end and 22,600 on the higher end based on maximum open interest. But Bank Nifty will be an important one. The important thing is that it is continuing to sustain above 47,000. If the Bank Nifty gives away 47,000, then perhaps you could start seeing a lot of your longs taken yesterday unwind, and especially given that today is the weekly options expiry, 47,000 is going to be a crucial level to watch out for. That said, we continue to keep an eye on 46,500 on the lower end. It does seem like it's unlikely to go there, but you never say never. And well, you know, improbable events have turned to come through. So that's something that we will be keeping an eye on. But support does lie at around 46,500, at least in today's day of trade. So those are some of the weekly options expiry skews, Samina. At the moment, a quiet day of trade and early gains given away.
Right, early gains given away, but yeah, no such concerns yet. We remain in uncharted territories, and any sort of limits or barriers are more or less imaginary at this stage. Just quickly to highlight a few counters that are moving. ABB, the numbers were pretty solid. The stock is up 8.5%. Now that's a very big up move coming in on the counter as we see it. You've got Campus Activewear, big volume there, 8.5% move. Insurance seems to be the flavor again. So your New India Assurance and General Insurance Corporation both trading with gains of 7 and 8% each. Paytm continues to do well, up a circa of 5% on the counter. So largely what we are seeing is insurance is the play, earnings that we're reacting to. Some of them may be, and metals also not looking too bad. On the sell side, Z is having it quite rough. The counter is down, about 11 odd %, 172 rupees on Z. Motilal Oswal, Yes Bank, Nazara, some of the other counters that are seeing some weakness in trade. But we've got with us Brijesh, who joins in from IDBI Cap, and Dhwani for the technical and the F&O show this morning. Dhwani, good morning. Thank you for joining us. Dhwani, on the Nifty, it's been 6 straight days of gains. The market's taking a little bit of a breather this morning. What is the strategy on the index?
Good morning. So when we're talking about index over here, definitely we did make new all-time highs and we are trading in the upward trajectory. But towards the all-time high, we are facing some for profit booking coming in on the index right now. And overall, what do you call about the strength of the market? The index is not giving us too much of a strength on the upside over here. The candles which we are seeing on the daily chart formation are not even more than 0.5% of a move that we are seeing on the upside. So the conviction that has to be there is missing over here. So on the index on Nifty side, I'm looking up at a slip that could come around the range of 22,100 to 22,080 odd levels, where we'll see some support coming in on the index. Till then, I am not going bullish on Nifty right now. When we're talking about Bank Nifty, we did see Bank Nifty giving some more moves, giving outperforming the Nifty over here. But then even in Bank Nifty, we are seeing some profit booking coming in from the highs of the day. And on Bank Nifty, I am seeing that 46,900 should act out as a good support level over here. Once that plays out, then we'll look for buy on dip strategy on Bank Nifty here.
Right. Well, that's Dhwani's view on the markets at the moment, of course, and how you can, in fact, talk and deal with Nifty and the Bank Nifty. Brajesh, good morning to you as well. How are you assessing trade on the Nifty? It's holding on to, well, marginal gains, if we can call it that. It's actually quite flat. And it is the same for the Bank Nifty. What's the view? How would you, well, perhaps place bets on these two indices?
Yeah, morning. So basically, if we look, I think directionally, we are going to take a long view. There is no doubt about that. I think we should be heading to 22,500 is what directionally I feel for the Nifty. But for the day specific, today being a Bank Nifty expiry and Nifty tomorrow, I feel we are positively placed. So whatever the corrections we are seeing right now, in the last 10-15 minutes, there has been a selling in the market. There has been slightly, it is what I can see is it is coming to the demand zone. The pivotal points are placed at 22,150 levels, close to those levels. So I think market Nifty is going to take support at those points, 22,174 and 22,150. This is the lower side support range, which I believe will not be broken as of now. So I think more 30-40 points correction on the Nifty. I would like to take the long bets on the Nifty. But in case of Bank Nifty, I would like to wait. Maybe in the second half, if 47,000 levels is sustained. Right now, it's trading about 47,000 level. But then if that momentum is there, then I think even Bank Nifty can see some positive momentum followed by the weekly expiry. So I think we are at the lowest point. Bank Nifty support can be seen at 46,866. So that is the lower side support level. I would wait for those levels to be tested, and then whenever we see those points, I think we should be taking a long trades over there.
Long trade on that is what Brajesh thinks. Dhwani, let's delve into Bank Nifty a little bit more. Where do you think the leadership is going to come from, and would you be looking to trade specific banking names at this stage?
Particularly right now, I'm not eyeing on any banking names because Bank Nifty, again, as we saw in yesterday's session, we did outperform. HDFC Bank was definitely leading. So private sector banks are definitely in focus over here as compared to the public sector ones. When we're talking about HDFC, particularly, the stock definitely is showing some slip coming in. But then again, on a daily chart, what I'm seeing over here is that the 20-period exponential moving average that we're currently trading at, stock should take some support over here and show a rebound. Again, the trade setups on an intraday chart are not suggestive of building up on any long positions over here, but the two counters that would be in focus would be HDFC. And again, on ICICI Bank, also what we are seeing is above the 1,060 to 65 levels, we'll see a breakout coming in on ICICI Bank. So keep an eye on these levels. Once these levels play out, then a bullish trade on either of it can be initiated.
Okay, well, that's ICICI Bank for you. Let's take a view on HDFC Bank since we've spoken about it. And while there was about a short covering yesterday, well, today it does seem like it's showing very, very muted cues at the moment. Can we also pull up, what it's doing as far as the futures are concerned? Are we continuing to see a decline in OI? No, we aren't. and we haven't seen too much of a change in its underlying either at the moment. Brijesh, what's the way forward on HDFC Bank?
I believe that in the last 3-4 days, there has been a rally in the HDFC Bank, and today is just a profit booking of that particular rally. It has got a resistance at 1480, but I believe those levels will be taken out. There is a gap up 1520. So I think directionally somebody wants to take a position. I think I would like to bet on the long side. My clean bet would be 1427, 1425. So whenever it comes close to those points, I think it will be favorable from the risk reward ratio point of view. 1425 being a buying zone with 1400 as a stop loss, that 25 points would be the risk for the HDFC Bank, and I would play for 1520 on the higher side. This would be more of a directional view, but not the day specific. But I'm pretty confident that we might see 1500 plus level in the HDFC Bank. This is again a trading bet, not from the positional point of view, but that opportunity is definitely there in HDFC Bank.
Right. Well, Brijesh, also on some of these OMCs, BPCL, HPCL, IOC, I mean, they've become such a trader favorite in the last couple of weeks. Is there a trend over there that one can sort of use to the advantage either on the long or short side at this stage?
I think that, yeah, definitely HPBP is moving. I think one of the trading opportunity what we can spot right now is GAIL. GAIL is something which is very, which is positive on charts. I think if I look at a specific price action at 183, I think this can see again a range breakout at 185. There is a call writers. I think that writing will get exhausted over maybe in tomorrow's session. So I believe GAIL can be one space where we can see some trading momentum. We can bet for 195 levels on the higher side with the stop loss of 180. So this can be one opportunity over here.
Okay, well, those are some of those calls coming in from our experts, and of course, oil and gas sector has also been buzzing off late. But on that note, we're going to slip into a short break. But on the other side, we talk about stocks and a lot more. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. This is the F&O show. Let's take a look at all the stocks which are buzzing in the futures and options space, future space specifically. Let's see where we are seeing an increase in open interest. Let's pull that list up. And well, we do see ABB looking at longs at the moment. Its underlying has moved up by as much as 9%. But on the other hand, shorts in Ashok Leyland, Wipro, NMDC and BPCL. BPCL, of course, is now wilting under pressure, perhaps a tad bit of profit taking after the sharp surge in oil. All the oil and oil and gas companies have seen, specifically OMC marketing companies. But in terms of those stocks which are seeing unwinding coming through, short covering for Siemens, Vedanta, Chambal Fertilizers, and Tata Steel, of course, among the constituents which are contributing to the gains as far as the Nifty is concerned, and Ultratech Cement is the other one. So a lot of counters here which are seeing about a short covering too. But on that note, let's go across to our experts and see what they're recommending in today's day of trade. Brajesh, what stocks do you like? Do you have any ideas on your radar at the moment? Brajesh, I believe you're on mute.
Yes, I'm sorry. So today is a day when metals are moving, specifically JSW Steel, Tata Steel. So specifically Tata Steel is something which I think it's some trading bets. It's there. 145 is a level where again the call writers are unwinding their short positions. So I believe today it's more likely, like irrespective of the market, I think Tata Steel will take this 145 level on the higher side. We can bet for another 5 points higher. This would be a specifically today, tomorrow kind of a trade. So Tata Steel will be one space where I would be taking a long bet with a stop loss of 140. I will talk of 150 and 155 on the higher side. And one more stock which I'm liking at this point was IndusInd Bank. Specifically in the banking space, HFC Bank and IndusInd are the two stocks which I think will outperform in the next 1 or 2 days. IndusInd specifically, I think in the daily chart, there is a divergence. So we are playing that divergence at this point. This was in the move during the day. I would take the long position at the current level. The stop loss would be below 1500 or maybe 1490 would be the stop loss for the target of 1550. So this would be immediate 2 trades where we can take the long bets.
What about you? What is your approach to the metal pack? I mean, there is excitement here. We've seen Hindalco move up on the news that Novelis may be looking to list. But beyond Hindalco as well, metals are up and about, largely on back of the China move that happened yesterday. So technically on the charts, any of these counters that you're initiating a long on? Dhwani, that was for you. Any metal stocks that you're currently trading, and Hindalco in specific?
Yeah, absolutely. So when we're talking about the overall metal pack, we are definitely seeing some gains coming in over here. Hindalco is definitely seeing good gains coming in, but then my conviction as far as trade is coming on JSW Steel. The stock was trading in a range, and we are seeing a range breakout coming in on this particular counter from the current levels. one can go buy on this counter. The immediate target for this one comes on the higher side at 873 and then 878. The stop loss that ideally one needs to maintain over here is at 828.
Right, 828, that's the call coming in on JSW Steel. Brijesh, I think we've highlighted most of the counters that look active this morning, but anything else that has caught your attention as we speak?
Yeah, I think there were good reality stocks were something which are picking up the momentum. Early morning, I saw a good amount of buying in the DLF. Then there was a good buying in the overall reality as well. So I think this being from the F&O space, we can see some momentum in this particular area also. DLF at this point, 882. It's still looking quite strong, positive on chart. The daily structure is still positive. I think the momentum can be there. So as and when the Nifty starts to rally and, for example, the Nifty takes supports and if we see a bounce, then I think definitely the DLF will be one who would be taking the lead.
Okay. All right, of course, that's as far as DLF is concerned. Want to also take a look at how one would deal with the Bank Nifty on an intraday basis. Dhwani, at the moment, what we've seen is that earlier on the session, we saw a little bit of an advance and then a sharp knockoff on the Bank Nifty. For all those who are playing the intraday weekly options expiry, what would your recommendation be? How would you go about it? Would you in fact go about and perhaps sell those at the money straddles, or do you think there's another directional play at hand?
So as I said in the starting, Agam, I am not particularly bullish on the Bank Nifty currently. The next support level which I'm looking up at is 46,900, and what we are currently seeing also, we made a low recently right now at 46,925. So around the odd levels we are taking up a support. We need to wait for next 15 to 20 minutes. If 46,900 levels are sustained over here, we'll take a directional play on the bullish side over here on Bank Nifty, keeping the stop loss on the lower side over here, where we are seeing the next support is coming up at 46,855. One can go long on Bank Nifty, and the targets that we are going to be chasing for this particular day over here on Bank Nifty is going to be at 47,250 levels. But we have to wait for the next 15 minutes. If 46,900 is sustained for the next 15 minutes, we initiate a long trade over here.
Okay, fair enough. Dhwani, finally, I believe you also have a view on JK Cement and Godrej Properties. Can you take us through them?
Yes, absolutely, Agam. We are seeing that not only Ultratech Cement, we are also seeing some long build-ups coming in on JK Cement also. Both the calls are going to be conditional calls over here, as we are seeing some profit booking coming in on the index right now. It can tad bit affect on the long side trades right now. So keep the levels in mind. JK Cement, we are seeing a breakout at 4,300 levels in the futures. Above 4,300, buy on JK Cement with 4,400 as a target. 4,425 is the last target that can be achieved on this particular counter. Stop loss at 42.45 is to be maintained over here. A similar setup is coming up on Godrej Properties as well, where we are seeing that the stock is taking support on a 20-period exponential moving average on a daily chart. We are seeing open interest also building up in this particular counter. It's amongst the top 10 gainers in the F&O section today, and we can buy over here at 2340 levels. That's the entry point. The target over here is 2430 and the stop loss is 2305.
Right. Thank you, Dhwani. Thank you, Brijesh. Great having both of you on the show. We're completely out of time. The markets are trading flat with a little bit of consolidation that's currently underway. On that note, we'll wrap up, but there's a lot more programming on the other side, so stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, Profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Good morning and welcome. You're watching the Small and Mid Cap Show on NDTV Profit. I'm Harsh Saita, and with me on her debut is Mahima Vajrajani. She's a research analyst with us. She has been with us since a while, and this is her first show. So welcome and many congratulations, Mahima. Good having you here.
Thank you, Harsh. Thank you for having me.
Right. Quick check with regard to markets. Mahima, why don't you take viewers through what's happening on the benchmarks?
Right. So if we talk about the Nifty 50, it's pretty much trading flat. If we talk about Sensex is also trading flat. If we talk about Nifty 50, the top gainers on the Nifty 50 today include your JSW Steel, your Tata Steel, your Hindalco and Eicher Motors. And if we talk about Sensex, Sensex contributors today include, the top contributors in fact include your JSW Steel again, Tata Steel, RIL and M&M. Now moving on to what the sectoral indices are doing today, well, Nifty Realty is clearly the outperformer today. Nifty Realty has been up over 2% in trade today. I mean, the top contributors to Nifty Realty are Macrotech, Sobha, Prestige, Oberoi Realty, DLF, all of these are trading about 2%. Right. Then we have Nifty Metals, which is also trading 1.4% higher. We have Nifty PSU Banks also, which is trading around 0.9% higher. And if we talk about the top sectoral loser, well, Nifty Media, there's no doubt here, Z clearly dragging down Nifty Media.
Yeah, let's pull up the contributories there as well. Have a quick look at the contributories on the Nifty Media. There you go. Z 10% lower.
10% lower. Well, there is Nazara Tech, which is down 2.6%. Network 18, which is down 2.5%. Dish, which is down again 2%. Well, then moving on to broader markets. Well, the Nifty Mid Cap 100 again is trading pretty much flat, around 0.2% lower. And the top contributors in the Nifty Mid Cap are, well, the top laggard is of course Z, and the top gainer is Piramal Enterprises.
Okay, very comprehensive in terms of taking you through markets, but we have two companies as always that we focus on. Today is slightly different. We're going to focus on ONGC, not a small, not a mid cap, but we have the management of ONGC with us. Several things happening in terms of moving parts. Company has received approval for formation of a joint venture to set up and operate 15 CGB plants, and we have Pankaj Kumar, who's the director of production at ONGC, with us to give us more perspective on this. Welcome to NDTV Profit, sir.
Thank you so very much, Harsh. Very good morning to you and Mahima.
Right, good morning, sir. Sir, first off, I want to try and understand, before I move on with regard to the news and the real announcements that have come in, I want to ask you about Krishna Godavari. When has production started? I believe December 23 is when production has started. Could you give us more color and some perspective on that? And second is production will start to increase, of course, over time. So where should it normalize at? Currently, you are at 12,000 barrels, and you also have some natural gas coming out. What's the sense with regard to where that will normalize at?
Yeah, Harsh, to correct yourself, the oil production we started from 7th of January this year. In fact, the FPSO, the floating production storage and offloading unit, that arrived Indian waters last year. And then we were to commission a lot of facilities subsea, because the wells are as deep as 600, 700, 800 meters of water depth. So those wells were to be connected to the FPSO and commissioning was to be done. And after that, we started production from 7th of January. Currently, we are producing around 12,000 barrels of oil per day from that, the 4 wells which we have connected to the FPSO right now. In case I can give you a little background, we started gas production from this block in March 2020, when the deepest well, which is in the range of around 1,440 meters of water depth, we opened. And thereafter, we opened 2 more gas wells from the same field, U field we call it, in the same range of water. And currently, the block as a whole, we are producing around 1.7 MMSCMD of gas. You asking how to ramp up and when to ramp up. So as we are speaking, the offshore activities are on full swing. We are in a process of installing the process platform over there, and we expect it to be ready somewhere around June, July of this year. Once the platform comes, we'll be ready for export of gas, additional gas, which will be generated at FPSO and from the more gas wells which we are going to open. We expect to take oil production to the level of around 45,000 of barrels of oil per day. And the gas cumulatively should go up to around 10 million meter cube per day. That's what is expected from this KG-DWN 98/2 NEL block, which we are developing. I hope I'm able to answer what you wanted.
Right, Mr. Pankaj. Mahima this side. Since you mentioned about KG Basin, I believe total of 45 wells so far have been dug. How many of these were successful so far in terms of oil discovery? If you can just guide us through that.
Yeah, Mahima, actually, in the exploratory phase of this 98/2 block, certain wells were drilled, which led to, almost 10 small discoveries, which as a cluster, we are saying cluster 2 fields of 98/2 block. In fact, whole of the block area, which was originally given to us, was around 7,600 odd square kilometers, which was divided into 3 cluster, 1, 2, and 3, depending on the water depth from north till south. So cluster 2 fields we are developing. In this cluster 2 fields, we drilled 26 development wells. Exploratory keep aside. Now from 26 development wells, 13 are oil producer, 6 are gas producer, and rest are water injector. So currently we are producing from 4 oil wells and 3 gas wells. The water injection probably we are going to start today or tomorrow, but not all the 7 which are going to give addition to these 4 oil wells. Rest, as we open the wells, we'll keep enhancing the production and enhancing oil, gas, and water injection all. So that is the scenario in terms of the well.
Sure, sir. Now, with regard to, I'll switch focus to CBG, which is compressed biogas. Now, with regard to the JV, what kind of revenue are you projecting, and from when does this revenue come on stream for you?
Harsh, this CBG, in fact, we intend to develop almost 25 CBG plants currently. So we started scouting the market, how to go, because we needed somebody joining us to develop all these facilities, all these infrastructure, market, this kind of a gas. We yesterday announced 2 joint ventures with 2 different companies for CBG development. The focus with one company is municipal waste. The focus with other company would be the agro waste. Already the companies, we are in a process of bidding to acquire municipal waste CBG plants. One bid is already submitted, and the second bid very soon this company would be submitting. Currently, since the company is not yet fully formed, so ONGC is taking lead on it. In fact, we are creating a subsidiary of ONGC also for this purpose, which will be named as ONGC Green Limited. We already have got the approval from Government of India, and rest of the formalities are underway. And ONGC Green will be looking after all our business with respect to the alternate energy, whether it is CBG, whether it is LNG, whether it is solar, wind, or whatever new comes in. In fact, last year, in a interview or in a call, media call, ONGC as a company has announced to go become net zero 2038. So, making progress to achieve those numbers, this ONGC Greens was being formed, and with that, these JVs are formed. Let's see if we win the bid, then of course the revenue, etc., will come. We'll probably come to the market with further details as and when it progresses. I think this time may not be good enough to, give me any number at this point of time.
Right, sir. So, also regarding your merger of 5 companies in Imperial Energy Limited, which is a subsidiary of ONG Videshi, how will this impact ONGC India overall? And I suppose there were some issues with respect to collections that ONGC Videshi was facing in Russia. So, do you think this will have some kind of relaxation in terms of that?
Our overseas assets, they are always managed by ONGC Videsh, which is a separate board-run company. Yes, we have assets in Russia. The biggest one is Sakhalin and Imperial. When there were issues with respect to Russia, sanction and all, some disruption was there with respect to development activities in Sakhalin. But the production has already been resumed to, pre-disturbance phase, if I can say so. And OVL is in continuous engagement with their partners in that those 2 assets to sort out the rest of the issues which are still there. But we have already normalized the production. So I would say company has progressed a lot in that direction to resolving the issues. And now there should not be any further issue with respect to these 2 assets.
Okay, and just one more question. Currently, the gas eligible to the is eligible to a 20% premium pricing, which approximately contributes 3 to 4% right now. And do you see this going upwards of 3 to 4% in terms of production? What is the target that you're aiming at? And also, with respect to your rights issue of HPCL, if you can just throw some light upon that as well.
Right, Mama. I'll take one by one.
Yeah.
See, you are asking about the gas. With respect to gas, if I can say the Kirit Parikh committee report, they had mentioned the gas price as 10% of the dated Brent. 10% of the dated Brent, but capped at 6.5. Then ONGC started engaging with the government of India because every year we are operating in the mature fields in India. We see almost 6 to 7% decline in our national production. So we need to add fresh production, maybe through fresh wells or drilling of more wells, some exploratory efforts. So we keep on adding new gas to it. As we are adding new gas to it, and with the such prevailing oil and gas market, high oil prices, services cost high, the cost of additional gas is also high. So government has agreed to give us 12% of dated Brent for the new gas without a cap. So that means when there will be no cap, or they may cap it at a very higher value, which is way above than 6.5. So that will give us more revenue for the additional gas. Year on year basis, I'll be replacing the existing gas, say by around 6 to 7% with a new gas, and I'll keep getting more revenue for that gas. So that much I can say on the gas front, which you asked, I think. And for next question was the right issue of HPCL. I think this is little sensitive at this point of time, and I should refrain commenting on this. That's my perception on this issue.
Right, we appreciate that and appreciate you being candid with us. So it's been a pleasure getting all of that perspective with regard to ONGC. Thank you so much for chatting with us, giving us and our viewers those views. Thank you so much.
Thank you. Thank you so much, Harsh and Mahima. ONGC is positive, will give, continue working for energy security of the country. That much I can assure you.
Yeah, we don't doubt that. Thank you, sir. Thank you so much. It's a pleasure speaking with you. That was, of course, Pankaj Kumar, who's the Director of Production at ONGC, speaking with us exclusively with regard to a whole host of things which are playing out on ONGC. Now, time to slip into a very short break. Take a quick breather. More on the other side. We've spoken with Systematics Group. We've spoken with the Senior Vice President, Institutional Equity, Pratik Tholia. Stay tuned for that chat.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
Welcome back. You're watching the small and mid cap show here on NDTV Profit. You know, a couple of sectors in terms of how they've done in Q3. A large chunk of the companies in these sectors are within the mid and small cap. Pretty much all of the companies are in the mid and small cap. And we've picked out textiles and sugar, at least for the discussion today. We've called in Pratik Tholia, who's the Senior VP at Systematics Group, to try and dissect some of the trends going into Q4 and what we can take from Q3, what should we expect from FY25 on both of these sectors. Welcome to NDTV Profit, Pratik.
Yeah, hi. Good morning. Thank you so much.
Right. Pratik, if you can speak to us about how textiles is doing, how it has done in this quarter, what has the drag been, especially in international? How should one look at it in Q3 in terms of the numbers?
Yeah, so for textiles, I think Q3, if you see on the volume front, we've seen significant pickup happening across, whether it is garmenting or whether it is even yarn or whether it is the home textile sector. So all of them have seen, pickup on a YOY basis. Even sequentially, there has been some improvement that we have noticed, especially on the yarn front. So things are now, coming back to normal as far as volumes are concerned. However, because cotton prices have softened on a YOY basis, so that impact we are witnessing on the realizations of the end product. So garment realizations have come down. Some of the textile realizations have come down. So that is kind of going to keep your overall top line growth under check. But having said that, because of soft raw material prices, the margins have expanded. So if you see for the 7-8 companies that we have analyzed in our report, so we've seen on an average, 100 to 150 to 200 basis points gross margin expansion across those 8 names. So clearly on the margin front, there is a revival that we are seeing. So profitability will be better going into Q4, if you ask me, and even therefore for FY25. Top line growth might be slightly softer. I won't say it would be muted, but it would be slightly lower because of the low realizations. Now that also should improve going forward as the demand picks up. So if you see capacity utilizations have now started to come towards the optimum level, so that will help entering into FY25. And once demand picks up, I think realization should also go up. So net, I think FY25 should be better than FY24.
Understood. But how much will realizations go up by, and therefore where should margins lie in your view in this sector?
See, margins currently are much lower than what we have seen, say, in FY21-22. So we are, despite this 200 basis points average margin improvement, we are still much below those levels. So there is a good headroom for margin expansion. Of course, that will be largely driven now by the realization uptick. But I think it will take another 2 quarters for the realizations to come back to those levels, and till that time it will be just volume-led growth that we'll see in the companies. So realizations can go up at least 15 to 20% if you're asking me, but it will take time, at least a year. Maybe by H2 of next year, we'll have that kind of realization.
Interesting. You've also suggested in your report that gross margins were impacted by global issues. You of course have some issues with regard to supply chain that are playing out at a global scale. Outside of that, you're also expected or were expected to see some softening with regard to rates globally. That seems to be going away now. So global demand also may get impacted. How is that going to impact the sector as a whole? Could you just explain some of those mechanics to us?
Yeah, so we are also keeping a close check on these things. So Red Sea issue and overall supply chain issues are there. But having said that, I think now those are also normalizing, and so the Red Sea issue and those issues are largely for Europe. Those who are exporting to Europe. Most of the companies that we are tracking have and as such, India as a whole, we are more exporting towards US rather than Europe because we don't still have those FTAs in place. So for that, and most of it is on FOB basis, so really the cost is not really impacting us to that extent. So I'm not exactly getting too bothered about those issues. Yes, there are some, these are transient phases for us, and those should normalize in the coming quarters. And since we are mostly on the US side, the issue is fairly not significant for most of these names that we are covering.
Sure. And on the FTAs, Prateek, how does the UK FTA change things for the Indian industry as a whole? What should it probably bring to fore in terms of competitiveness in the global marketplace as a whole, and how does it change for the Indian names? What changes?
See, our contribution to the UK is minuscule at this point of time, and the market is much bigger. We are as competitive as say a Bangladesh or Pakistan, but because of the duty restrictions that we have, as a result of which our competitiveness has been taken away. Now, once this comes in, I think the market opens up big time for us, because we are which lot of our companies are dealing with those big brands and those big retailers which are present in the US and also in the UK, but we are unfortunately not able to sell them in the UK. So now once this happens, I think the whatever volumes we are doing today, at least we can do 3x of that. So the opportunity size is 3 times of where we are today. So our volumes, what we are doing can actually go up by 3x. So that's the kind of growth that can just open up for the Indian textile industry once the UK FTA gets signed.
Significant. How likely is that to happen?
Okay, so that the Ministry of Commerce can only say. We have been waiting for almost 2 years now. Right. Now there is a chatter that something could happen this month before the election code of conduct kicks in. But I think, it's anybody's guess here.
Understood. It's a tough one, but a big upside there possible. Now I want to quickly try and understand your views. Which company, there's plenty of consolidation happening here. Which company is best placed to take advantage in your view? Very quickly before I move to sugar.
Companies, so we have coverage on Gokuldas, KPR and Vardhman. We have a buy on all of these three. Best place, I think, from the garmenting side is clearly today KPR is looking very strong. They've also announced a new capex in brownfield capex in garmenting. They are one of the leaders in that space, and what we've seen is slight, like I spoke about the realization being soft, that has impacted them in this quarter. But going forward, I think that has bottomed out and that should improve. So with higher volumes and better realizations, I think KPR and with strong connect with the global retailers and all, they are one of the best places to take advantage of this upside.
Understood. So that's Prateek's pick in the textile space. I'm going to quickly take it to sugar, Prateek, because I'm running out of time. Now, 3-4 factors playing out. One, sugarcane prices have been raised, which means margins have taken a knock, at least on that count. Sugar prices have held up, which is definitely a positive, and which is probably what is aiding the numbers. How does ethanol come into play? What is happening on that front in Q3? Could you just talk us through some of those?
Yeah, so Q3, there was an arbitrary decision in the month of December. So just when the crushing had started sometime in mid of November, then suddenly, so companies had, aligned their capacities accordingly. But then this sudden decision came in.
Well, that was the management of Systematic speaking to us about how the Indian textile market and the sugar industry is panning out to be in the trajectory going forward. That's all. That's a wrap for the show for now. Thanks for watching. Stay tuned for more such news and updates on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Good morning. You're tuned into Ask Profit. I'm Smriti Chaudhary, and for the next 30 minutes, I'll take all your stock-related questions. To write to us, you can either message us on the WhatsApp number that will be on your screen, or you can write to us on any of our social media channels. I'll also be tracking the YouTube live chat, so you can write your questions there as well. Now, before we jump into the questions, let me introduce you to the guests for today. We have Saurabh Jain of SMC Global and Ajit Mishra, who will be joining us soon of Religare Broking. Welcome, Saurabh, and Ajit will be joining us soon as well. Now, before we talk about the focus and the questions, let's take a quick check on the markets and where they're at. If you look at the Nifty 50, it's pretty much flat right now. Benchmarks have been flat for a bit now, but it's more or less in the red territory. That's currently where we're at. If you look at the contributors of the Nifty 50, you have the likes of Power Grid, BPCL, Infi that are the biggest laggards today. However, Tata Steel, JSW, Hindalco all up, and which is why the Nifty Metal Index is the biggest gainer in trade today. Now, this comes on the back of China cutting rates to kind of push the demand for the property sector. There have been rate cuts. So I think there's some sentiment of demand kind of increasing going ahead for metals, which is why we're seeing an uptick. Hindalco is especially up because Novelis has filed for a public offering in US, so that's why it's up about 1.7% in trade. If you look at the broader markets, you have the mid-cap index that's also in red today, down about 0.2%. However, the Nifty small cap is considerably in the green, about 0.14% up or thereabouts. Let's also look at what's the biggest loser among sectors in trade, and that's got to be the Nifty IT index, which is down about 0.8% in trade today. There's also Nifty Pharma is in the red. Nifty Media is the biggest loser. Apologies, it's down more than 2% in trade. That's on the back of Z dragging today. If we can pull up the chart and see how much Z has fallen as of now, it's down about 10.5%. Now, this is also on the back of Z kind of clarifying that there are no such negotiations going on with Sony, and there are also reports suggesting some investigation from SEBI and some accounting discrepancies are there. But the focus for today is ABB India. Now, it came out with its results yesterday. If we can pull up the chart for ABB India, it was up about, it's up about 9% as we speak. And just to take you through where the earnings are for the fourth quarter, they were revenue grew about 13% to 2,757 crore. EBITDA expanded to 14% to 417 crore. Margin expanded as well to 15.13%. Not a big expansion there. It was 15% in the last year. Net profit also grew about 11% to 339 crore. Now, if you look at the order book of the company as well, there's a considerable momentum that continues in terms of large orders. The total order book grew 35%, and for the fourth quarter, fourth quarter orders were over 3,000 or 3,100 crores. That's where we are at for ABB India. Now, Saurabh, I'd like to understand from you. We've seen quarter four results. We're seeing great momentum in terms of the order book as well. From a longer term perspective, what would you suggest somebody holding an ABB, and what are your key takeaways from the results as well?
Hi, good morning. See, capital good industry is surely on an uptick. I mean, see the companies, they are having a good intake of order book, and the execution is doing even faster. Most of the corporates are now, going for expansion, and here in the picture comes ABB. It's a kind of a portfolio stock. The margin expansion is happening, double-digit kind of a revenue growth is there, and in fact, I think going next year, I think things will move much faster. So I think one who has it should keep it in the portfolio.
Okay, understood. Ajit has also joined us. Good morning, Ajit. Now, before I jump into the questions, I'd like to understand some key levels for the Nifty 50. We're seeing records high in the last 2 days. It crossed the 2,200 levels, but it's slightly below that today. So what are the key levels that you should watch out for?
Good morning. So broadly, yes, we have reclaimed the record highs. We've surpassed the hurdle at 22,150, and but now we feel that the way we are inching higher, as of now, it lacks decisiveness. Means we need a strong 1%, 2% kind of a move to end this consolidation and inch toward the newer highs. But nevertheless, the good part is that banking is participating. So as long as we are seeing this participation strengthening from the banking space, we expect this upward momentum to continue. And 22,500 is what we are eyeing in the near future. And now 22,100, 22,000 zone is the area of support. So it's a buy on dip market. But since the momentum is missing, one should be selective in the buying and prefer the sectors and stocks which are showing resilience during the down days.
Okay, all right. Now, on that note, the first question is on a bank as well. We're talking about HDFC Bank. This one's from KN Raju. They want to know if they should invest at current levels for HDFC Bank. It's down about 0.5% in trade today. We've seen some downturn in the stock for HDFC Bank. Sort of from a long-term perspective, would you suggest buying at these levels?
See, if you look at the valuation, I think it looks very interesting, but it's kind of a contrarian bet as of now. I think the company will take approximately 6-9 months to, because of that merger, to shed high cost of deposit and to bring deposits to CASA, bring CASA back to the level it enjoys before merger. And the management has also categorically said that they will go slow on the advances side of the book. So I think as of now, it is a contrarian kind of a call. If you have a horizon of more than 2-3 years, then you can chip in a staggered manner to buy in, thin quantities. Otherwise, wait for 6-9 months, and then when the things will improve, the balance sheet will improve, the CASA will improve, and things will be better. Then you also can enter.
Okay, Ajit, do tell us your levels based on the charts for HDFC banks as well. Would you suggest the same thing, that if somebody wants to enter the stock, they should wait for 6 to 9 months? Because we have a lot of questions around HDFC Bank.
Honestly, since 2019, if you see that we are still around those levels, means yes, there was a bit of an improvement, but we are somewhere around 1,300, 1,400 kind of a band earlier also, and now we are inching or trading closer to that mark. So yes, there's an underperformance which is clearly visible from the price performance also, and short term, but I believe that it's going to be more of like this underperformance might continue, and I feel that from 6 to 9 month or a year time horizon, ICICI and Axis, they are comparatively better structures. So if you are looking for less than a year time horizon, then one can look at for the other alternatives. And if the time horizon, as sort of mentioned, is more than 2-3 years, then definitely one can look at SDFC for accumulation.
Could you give us the levels as well for Axis?
Yeah, so certainly. So Axis and ICICI, I feel that they are among the top performers within the private banking space. They are trading closer to the record highs. Now we have very strong base around 950 to 1000 when it comes to the Axis, and upside is open. Means as per the previous consolidation, I won't be surprised if we test 1200 plus zone by the end of this year, and maybe higher. And for ICICI also, we are seeing a similar tone. In fact, it's comparatively better than the Axis. And 1300, 1250, 1300 something that ICICI may also test in next 6 to 9 months.
All right, understood. Next up, we have a question from Mohit from Ludhiana. He's talking about Coal India. He's already bought the stock at 152 levels. It's considerably higher from that point, but post its earnings, Saurabh, we have seen the stock declining. There's some contraction in the e-auction premiums. But from a longer term perspective, Mohit's time horizon is about 2 years. Would you suggest holding on to this? And what kind of upside do you see in the stock as well?
I think it belongs to metal and mining, and here the prices do makes a very meaningful impact on their numbers, on the operating margins and the profitability. The stock has already gained multifold. I mean, from 100 odd level to 200 odd level, now it has been above 400. I think it is a time to take profits from the table, since the company has categorically said that the e-auction prices have dropped down significantly. In my opinion, I think the stock can cool down further. So better take profits from the table and invest in the sector like we like IT sector, and we think it can be a dark horse for the year. And even the banking stocks, I think they can he can shift money towards banking and IT.
Understood. Next up, we're talking about Tata Teleservices. This one's from Sanjeet, and he bought the stock at 2.5. The stock is currently above, hovering around 90 rupees. Now, Ajit, would you suggest booking profits and get out of the stock, or should you wait, or there is more upside to this one?
See, the time horizon and the kind of investment means he has been holding this when the stock made a record low around in 2020 and is still holding. If he has made investment based on the fundamentals, means from the different perspective, then it's a different story. But I feel if you have made this is a short-term investment opportunity and you have this windfall gains, definitely you should book profit and diversify your position to the other counters. So, in case if you want to stick with some of these prominent names, especially in the market like this, we have been trading at record highs. Bharti Airtel, Ultratech, ICICI, like some of these names that we were discussing, one can invest in those names after taking profit.
Okay, understood. Next up, we have a question from Tarun Agarwal, and he's talking about JSW Infra and Vedanta. Is it a buy at current levels is the question. They haven't mentioned if this is for the longer term or the shorter term. But Saurabh, considering what we're seeing in metals today, from a longer term perspective, should you get into the stock?
Is not the best one among the metal names. I think it is better to avoid because of the huge debt pile on the balance sheet, and the rating agencies have also been closely watching the numbers. Regarding the JSW Infra, I think it can be a good bet. I think buy in a stagger.
And from a shorter term perspective, Ajit, JSW and Vedanta, good time to enter the stock?
So, in fact, I'm very closely eyeing Vedanta because if you have noticed that other metal counters, they have done exceptionally well, in the recent run. But Vedanta is still hovering in a very narrow range around the previous swing high. So, yes, there's a possibility that in short term, we may see strong swing once it crosses 285. So, the risk reward is favorable because we have a very strong support now at 265. So, once we cross 285 level, then 300, 310 should be the probable target. So, with stop at 265, definitely one can look at Vedanta for accumulation. And JSW Infra also, the stock has again reached closer to its record highs. So, we may see some consolidation. So, if the view is short term, one can wait and let the stock witness a dip towards 230 for fresh entry. And your stop should be at 220 in that case, with 245 to 50 being the positional target.
All right, fair point. Those are the targets for JSW Infra and Vedanta. Next up, we're talking about Mishtan Food. This one's from Murli Dharan, and they've bought the stock at 12 rupees a share. It's about 22 rupees as of now. Saurabh, is this part of your coverage? Is there a target on this one?
Extremely sorry. Don't cover this one.
Okay, we'll take this to Ajit then. Ajit, any specific targets on Mishtan Foods?
So, see, the stock is in BSE and we actively don't track, BSE names. So, I'm unable to give the target right away.
Okay, fair point. We'll slip into a short break now, but after the break, we'll take a lot more questions. So, stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Welcome back. You're watching Ask Profit. Let's quickly dive into the questions. The next one is coming from Sagar, that he's talking about Alembic Pharma. He holds a significant quantity from, he says, less than 500 levels. The stock has doubled from that. Sort of from a longer term perspective, should you book some profits and maybe keep holding on to the original quantity, or should you keep holding on to it because there's more upside left? What's the long-term perspective on this one? And talk to us a little bit about pharma on the whole as a pack as well.
See, if you talk about the pharma as a whole, I think the pressures which were there in the US and Europe markets, many of the companies are feeling that they are abating somewhat. And many of the Indian pharmaceutical companies are venturing into the newer verticals. If you look at the APL numbers also, the last quarter's numbers were very interesting. I mean, they saw double-digit kind of a growth. There was an improvement in the margins also. The company is also venturing into the therapeutic areas, if I remember correctly. And the management is quite confident of for the good growth going forward. So I think we have a very constructive view, especially on the APL, Alembic Pharmaceutical. And we believe that it can be a very good bet if one holds for another 1 year or 2 years. So I think 20-30% kind of a return one can generate easily in this year. So it's a hold from me.
Ajit, is that what you reckon as well? This has been a multi-bagger in the last 1 year. Is there more steam left from a short to medium term?
The short to medium term, we might see a breather, after this phenomenal up move, because the stock have reclaimed its record highs now after almost 2 years, 3 years of down move. Post this decline in 2020. And usually we see a breather once the stock reclaims their record highs and form a fresh base. So if the view is short term, I would recommend one should book profit around the current levels and let the stock form some base around the record highs before the next up move. And if the time horizon is long term, definitely you should maintain a trailing stop at 1000, because below that again the bias would turn sideways to negative. So in either of the case, maintain strict stop losses or book at least partial profit if you have invested at the bottom.
All right, fair point. Next up, we are talking about Forgings. This one's from Manish Patwari. He bought the stock 6 months ago above 1000 levels, 1088 to be precise. The stock is below that. Ajit, what kind of levels should you watch out in this one?
See, Forging is basically hovering in this band, 900, 1050 on the higher side to 850 on the lower side. So we are almost there, means, we are trading closer to the upper band. Good part is that we have seen an uptick in volume with the rise in prices. So there could be an attempt of a breakout this time. So he may continue to hold, and now 930, since it's a high beta counter, should be the stop. And once it crosses 1050, then maybe a newer trajectory closer to around, let's say, 1150 to 1200 is something that he can wait for.
All right, fair point. Next up, we have a question from Pranay Mitra, and here now we're talking about some PSU stocks like RVNN and IRFC for the longer term perspective. We've already seen a run up in these stocks, Saurabh, but it seems like a lot of viewers now want to get into the stock. Would you suggest getting at these levels, or do you think the valuations are expensive at this point?
See, while the companies are good, they have good order book, but at these valuations, it's a simply no for investing in these companies. I mean, they can correct very steeply. I mean, they still have to prove their matter, and many of the businesses are in the B2B business, in which margin expansion is very margin expansion would be very trickier for them. I think so. We are not recommending these stocks.
All right. Just taking this forward, you have another question from Nilu Das from Kolkata, and he wants to know if they want to get into railway stocks, is there anything within the sector that you would suggest?
I think we can't suggest any of these stocks because many of the companies are good, but the valuations are extremely high.
Okay, so are you saying is it too late to get into railway stocks?
Of course. In my opinion, I think IT sector is a good sector which one can look upon. I think all the three biggies, Infosys, TCS, HCL, one can look for the long term.
All right, fair point. Next up, we are talking about LIC now. This one's from Muralidharan as well, and LIC is on the minds of a lot of viewers. We've seen the levels cross above 1,000, and now viewers are asking about should they wait to sell the stock till it crosses 2,000 levels. Do you see that trajectory in the longer term, Saurabh? I'll come to you, Ajit, on this one as well.
I think it is very difficult to take up all of whether it can reach 2,000 levels or not, because valuations are also high. See, LIC have made good money because of the huge run up in the market. That is what the prices are discounting. If any kind of corrections do comes in the market, we'll see the same kind of a correction in the LIC prices too. So on the valuation front, I think it's priced to perfection. So it's very difficult to take up all that.
All right, fair point. Ajit, on LIC, what are the charts showing?
So, it took almost more than 1.5 years to reclaim its IPO levels, and now we are seeing a bit of a beta. So I feel, instead of like focusing on 2,000 maybe higher levels, one should respect that the stock has doubled in less than 6 months. So now, if you see that from the shorter time frame to medium term time frame, it would be healthy if we manage to hold these levels. Means 900 zone is something that one should keep a close eye on, because below that again the tide might turn against LIC, and we may again see some profit taking coming in. So if you have already invested, then keep a close watch on how the earnings and the other parameters are panning out. But at the same time, if it slips below 900, then definitely you should take a call whether you wish to invest it for next 2 to 3 years or not.
All right, fair point. Next up, we have a question from Shankar from Tuticorin, and they're talking about Sun TV. They bought the shares at 445 levels. It's considerably higher. Ajit, good time to book profits, or should you hold on to it?
Sun TV, I feel it's a normal retracement that we are seeing in the stock, and it has already corrected from 720 zone to 620 area now. So I feel that we are closer to the immediate bottom, though it may spend some time around the current levels, forming a fresh base. But downside seems capped. So yes, you can continue to hold longs, and as a trading position, 590 should be your stop. And if you wish to add to your longs, you can do that once it crosses 640, because above that we may see fresh momentum in the stock, which could help the stock to reclaim its previous swing higher around 700, 720 area.
All right. Next up, we're talking about Jio Finance, and this one's from Manish, and they've bought the shares at 265 levels. Saurabh, from a longer term perspective, how does Jio Finance look? We've seen a good amount of traction in the sector.
From the long-term perspective, I think it comes from the Reliance camp, and the company has huge plans. And I don't think so that they would take much time, especially after the Paytm problem that we have just seen. So I think from the long-term perspective, Jio Financial makes sense.
All right, fair point. We're getting a lot of questions on HDFC Bank. So viewers, we have already spoken about HDFC Bank. Do write to us about your other stocks as well. Next up, we have a question on BEPL, which is Bhansali Engineering and Polymers. This one's from, I'm not sure if they've given their name. Prasad, this one's coming from Prasad, and I'm not sure if they've bought into the shares, but the stock is down about 1% in trade today. Would you suggest buying into this one, Ajit, now that we're seeing a little bit of a downtick in the stock?
See, the stock has done well, means from 48 to 120 mark in last almost 8-10 months, and it has retested its record high zone. So basically around that area, we had multiple attempts in past also, which it couldn't surpass and hold. So this retracement with low volume is definitely a positive thing. But for fresh buying, I would rather wait for the confirmation that the trend is still positive. So a breakout above 105, then one can make it, for the fresh long position with the 120, 125 being the target area, and your stop should be at 95 in that case.
Fair point. Quick last question, Saurabh. This one's from Raghuram Patro, and they're talking about Orient Green that they bought at 22 and Adani Power that they bought at 300 levels. Talk to us a little bit about their long-term perspective, and should you continue holding on to both of these two?
The power sector overall outlook looks quite interesting. I mean, the last year we saw 10-12% kind of a volume growth. In previous year also we saw that kind of a growth, and this year also I think the government focus and the way the companies are planning to enhance their capacities, I think it's paying its dividend. Among the power sector, we are quite focused on the companies like NTPC, NHPC, SJVN. We find those stocks are quite interesting.
So NTPC is one of the picks. We had a question on NTPC as well, but don't worry, we'll take it tomorrow. Unfortunately, we're completely out of time today. Thank you so much, Saurabh and Ajit, for joining in and for answering so many questions for us. And viewers, stay tuned. Lots more coming up on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Nifty maintains 22,200 levels after hitting life highs in early trade. Meanwhile, Sensex trades above 73,000. Mixed action on sectoral front. Realty, metals and PSU banks lead gains. On the other hand, IT and media in pain. And woes continue for Z. The company clarified that it is not involved in any negotiations in relation to the Sony merger deal. Meanwhile, SEBI uncovers $241 million in accounting issue. Stock recovers from lower circuit. And meanwhile, Hindalco's US subsidiary Novelis to go public, and proceeds from the issue will go to the promoter Hindalco. Shares jump over 2% in trade. Shifting focus, farmers resume the Delhi Chalo March. The unions are demanding legal backing of MSP and calling for it to include all 23 listed cash crops. Hello and welcome. This is Hot Money. I am Agam Vakil, and this show we take you through all the stocks which are buzzing in trade and take them up with experts. But before that, a quick look at the markets. And we are looking at a quiet day of trade, at least as far as benchmarks go. We aren't seeing too much traction as far as the Nifty is concerned. And in fact, the Nifty is currently, flat and marginally in the green for now. The Bank Nifty, on the other hand, is also flat and not too much to speak for there either. We have seen a contraction in your India Volatility Index, and we do not expect too much, at least in today's day of trade. Of course, it is the Bank Nifty weekly options expiry. But that said, we will continue to keep an eye on how things are panning out as far as some of your private sector banks go. But I'm going to start off with taking a look at the constituents of the Nifty and see where there is most amount of traction, where there's a pull and a push there. So Reliance Industries, ICICI Bank and SBI advancing, giving that support to the Nifty. And on the losing end, we have further weakness in Infosys. HDFC Bank wilting just a tad bit, but pressing on as far as the Nifty goes. The same for Axis Bank and L&T as well. Well, on the whole, it's fairly even Stevens as far as the Nifty is concerned. And, in terms of broader markets, well, again, it's been a relatively volatile day of trade. But if you do consider something like a mid-cap index, that is down around 0.2%. And the small-cap index as well is down. Is on the other hand is up by a 0.25%. Now, even in terms of your broader markets, at least in terms of those which are advancing in trade, well, we do have something like a Piramal Enterprises, which is up 6.5%. And of course, we also have Union Bank, which is also advancing in trade, up around 5% on QIP plans, because of which it has pushed the stock up. Paytm on yet another upper circuit of 5%. So keep an eye on that one. And Prestige Estates is up around 3.3% as well. Prestige Estates has actually picked up a bit of steam of late over the course of the last couple of sessions. On the losing end, of course, Z Entertainment under pressure at the moment after we have more clarifications from the company. Besides the fact that, well, SEBI has uncovered some irregularities with respect to certain funds pertaining to the company. Coforge also under pressure, down 2%, and Yes Bank is down around 2.3%. Well, with that, let's shift focus to all the stocks that we want to talk in today's day of trade. So we will be talking about ABB. We're going to be talking about Hindalco, Jindal Steel on the back of a broking note, and then we have Tech Mahindra, where we've spoken to the management. Thermax, Varun Beverages, and the Union Bank of India. So a long list of stocks that we want to address in today's day of trade. And we're going to have an expert opinion here. We're going to have Rajesh Agarwal, head of research at AUM Capital, who's going to join us and give us a perspective there as well. But before I go across to Rajesh, let's talk about the first stock that we want to address, and that is ABB. In fact, we've had the earnings conference call to come through as well. Let's bring in Anushi to talk to us about the earnings as well as what has been uncovered through the conference call. Anushi, good afternoon.
Afternoon, Agam. So coming to the result bit first, ABB India reported a solid quarter with its revenue seeing about a 13% upside with its and its EBITDA seeing almost about 14% of an uptick over year. Margins remained in a similar range of 15% compared to the last year, but the net profits saw about a 10% growth at 338 crores. Now, the main focus here shifts to the orders that the company has been reporting, a double-digit order growth since the last 2-3 quarters if we witnessed. So in this one, the orders were about new orders were about 35% up at 3,147 crore, with which now its order backlog stands at about 12,300 crore, again seeing about a 30% growth in this one for the full year, calendar year 2023. Also now coming to the transcript, the conference call highlights over here, the company saying the one main focus going ahead remains on the robotics sector, as they have been seeing an increasing contribution from that side. Again, renewables and metros are another strong focus areas that remains for the company. The main focus also should be the company's management saying that it maintains to keep its ROC in the 21% range and sees its interest cost going down forward. So these are the key highlights that we should keep in for the stock. The stock is about 9% up today.
All right, Anushi, thank you so much for getting us those updates on ABB. Rajesh, good afternoon. Thanks for joining in. What is your view on this one? How would you address this?
Good morning. Thank you for calling me. As Anushi rightly pointed out, the numbers were very exciting. In fact, it were beat all the estimates that were there. Net profit gained by 13%, revenue up by around 14%, order intake up by around 35%, a strong order book, and everything goes well for the company. And not to forget the kind of CapEx, not only in public sector, but also has been announced by private sector as well going forward. And with the interest rate scenario almost peaking out, we think the capex are going to be in full swing coming forward. So I think IBB can be held for a long-term portfolio. At this point of time, I think buying should not be done. It should be bought on dips, I would say, because it has already run up quite a lot in the recent past. Something around 4,000 would be a good entry point.
Okay, Rajesh. Thanks. So that's, of course, your expert view on ABB. Let's move on and talk about the other stock which is in focus. And we know about Hindalco, where its US subsidiary has fined a confidential for filing the IPO, at least in the US markets. And we have Saloni to take us through all the important details here. Saloni, what do you have for us?
Yes, Agam. So Novelis, the wholly owned subsidiary of Hindalco, has confidentially filed for an IPO with the US SEC. And what it said in the document is that the common shares are expected to be offered by sole shareholder, which is Hindalco in this case. And Novelis will not receive any proceeds from the sale of common shares. So which means that most of the proceeds will come to Hindalco. Now, we spoke to a few experts and also went through a brokerage notes to understand exactly what the details help us understand that. So the main motive is that it is going to be done to unlock value, and also now because it's confidential IPO, which means that the details are still just with the regulator and not public. So we don't have the exact details of how much the promoter is intending to sell and what is the timeline of the same. But the key questions here again remains that what is the extent of stake dilution? How much stake will Hindalco be selling? And also why IPO when Hindalco's domestic business is not in need of money? Now Hindalco has a cash balance of over 3,000 crore, and analysts expect even the further capex and expansion plans to be funded by internal accruals. So it will be interesting to see what exactly the proceeds will be used for, and also how will they deploy the money, what exactly they'll be using for. And also another thing is unclear is as to when this IPO will come into the process, because right now just the filing has happened. We also saw at the valuation metrics to understand where Novelis and Hindalco stand. So Nuvama has assigned about 6.5 times EV EBITDA to value Novelis on the FY26 earnings estimates, and they have derived at a market cap of about $9.6 billion for Novelis, which is about 361 per share of Hindalco. Prabhudas Leather also, for that matter, has valued about Novelis at 6.5x EV of March 26 EBITDA, coming about at an enterprise value of more than 1,200 rupees billion. So we are actually tracking this story very closely, and we'll come with you with more updates as and when it unfolds.
Sure, fair enough, Saloni. But thanks for getting us all that you have so far on Hindalco and, of course, Novelis, which could potentially see an IPO on the cards very soon. Rajesh, if you can come in on this one as well. Perhaps expectations of some of these funds to be realized by the promoter group Nalco. how would that turn out? Let's not forget that Novelis has had its own set of challenges, because of which earlier on we had a little bit of weakness as well earlier on in the month. Considering all these factors and taking all these factors into consideration, what is your stance on Hindalco?
See, we are very bullish on Hindalco, given the fact that the kind of money that would come in, because Novelis is not going to get anything, and the entire proceeds of the IPO of Novelis will come to Hindalco, and let's see how they use that, because as Saloni pointed out, that they are already cash rich and their expansion is going to be funded by internal accruals. And we should not forget that the recent crack in the price of Hindalco was because of that Novelis announced that it will spend $4.1 billion to set up the integrated rolling recycling plant, which was way higher than what most of the analysts had expected. So it would be very interesting to find out how things pan out. But at this point of time, at 500 odd rupees, I think Hindalco is a good buy for medium to long-term investors.
Okay. And then let's talk about Thermax. Now, Thermax has a small update here, and we believe that it's entered into a license and technical assistance agreement with Flowtech Company. Flowtech Company is based in South Korea, and what they're going to do is they're going to manufacture polycarboxylate ether products, and these products will be used to strengthen construction chemicals business portfolio, and this is for a consideration of $300,000. 50% of this will be adjusted against royalty payments. This is, of course, just an update with respect to Thermax, but we've had very strong earnings come in for the third quarter as well as for the first 9 months. We're seeing a little bit of a pickup as far as Thermax's business is concerned overall, and the whole capex story is certainly playing in favor of Thermax. A lot of tailwinds coming through, but the question really is that, is this company expensive at this point in time? How are you placed on this one, Rajesh?
See, I don't think it's expensive. It might feel expensive on the current earnings valuation, but when we extrapolate it with the kind of capex, as you said, is going on not only in private sector but also public sector, I think there is a long way to go, and with the kind of strong balance sheet, a strong management, and the execution capabilities, these kind of companies, whether it be Thermax or Cummins or so, I think these are good long-term bets. Nobody should be, a long-term investor should not be very much concerned about 20, 50 rupees going up or down, whether should a long-term view buy this stock and just forget it. Maybe in the next 1 year or 2 years or so, you can find 15 to 18% CAGR growth in the market cap.
Okay, well, that's your view on Thermax, and on that note, we slip into a break. But on the other side, we get you a lot more in terms of stocks that we want to address. Stay tuned, and we'll be back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the portfolio manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
And centuries will open their eyes. When they open their arms wide, the strong wall of the mighty fort, glory and splendor will shine, and that radiance will pour again. All the pearls of the past will come alive. The war tales of the heroes will echo. The words of gurus will speak. With what pride did they yield their lives? With what honor did they conquer hearts? All the veils will be lifted. Vibrant is the heritage of Punjab. Come, experience it once.
आपका बैंक सेविंग्स अकाउंट पे इंटरेस्ट देता है
3 महीने में एक बार।
मेरा एयू हर महीने। सोच बदलो और बैंक भी। एयू स्मॉल फाइनेंस बैंक, बदलाव हमसे है।
Welcome back. And now we take a look at all the steel stocks at the moment, and they are seeing advances. And today, well, we have seen advances for something like a Tata Steel, along with JSW Steel, Jindal Steel and Power, all of them looking at a lot of strength. In fact, the steel sector as a whole is doing well. As we speak, and a lot of advances coming through. The real reason perhaps could be manifold, but we also have Motilal Oswal, who's maintained their bullish stance on Jindal Steel and Power. Let's get in Mihika to tell us a little more about this one. Mihika, good afternoon. What do you have for us?
Yes, so Motilal has maintained its buy rating on Jindal Steel and Power at a target of 900 rupees, and the broker says that the current ongoing expansion will increase the share of the flat steel products over 55% for the company, and also increase their crude steel capacity by 65% to 15.9 million ton. The expansion completion is expected by Q2 of FY26, which will help the company be the 4th largest Indian steel manufacturer. The firm is also developing more value-added products on the additional capacity, which will help drive margins, and their focus on the raw material integration will help in cost synergies, as well as help them during extreme cycles of steel and raw material prices. The Indian steel demand is also expected to remain robust on the back of 3 things. One is the improvement in the construction activity, the infrastructure project push, and the high automobiles, renewables, and consumer demand that is seen coming through. And lastly, the stronger steel demand, which is seen in Q4 so far, will also help the company's margins to improve.
Okay. Thanks so much, Mihika, for getting us that broking note on Jindal Steel and Power. Rajesh, your view on the steel sector, anything that stands out for you, perhaps even Jindal Steel? How would you treat this particular set of stocks?
As far as steel sector is concerned, we have always been bullish on Jindal Steel, and that has been our favorite pick in the entire sector from a very long period of time. It has quite run up quite a lot from our initiating coverage, but still we are very bullish considering the fact that the company's focus is on debt reduction. They have their own thermal coal plants, which is aiding to their margin. We have seen them. These quarter numbers, they were very good, 115% jump in the bottom line, and good capacity has been ramped up. They are supplier with the long rails in railways, and with the railways order coming, I think everything is going well for the company. We can expect some amount of correction here and there if the market corrects itself, but otherwise we feel that in the next 90-12 months, this stock can touch 900 odd rupees. So anybody looking for investment, yes, one can go ahead and buy.
Okay. positive on the steel sector. And next up, we have Tech Mahindra, where my colleague Tushar spoke to the Tech Mahindra CEO Mohit Joshi on the potential job opportunities in the tech space. This is what we had to say. Listen in.
Look, like I had said in the session, right, I do feel that this is a wonderful toolkit, and it allows people to really expand their capabilities very dramatically, right? Whether it's in terms of design or the actual coding or testing, it's a remarkable set of toolkits that allows you to perform at a much higher level than earlier. So I do feel it is an overall huge positive, right? Given the workforce that we have, given the young workforce that we have, I feel that the opportunities truly are limitless because technology or AI is really expanding the size of the pie. I think we have to be focused on just the massive expansion that the global economy is likely to see because of the promise of technology.
Right. Rajesh, much has been said about AI, the use of tech, as well as the implications on jobs, but that notwithstanding, what do you do with Tech Mahindra? It's been a relative laggard as compared to some of its other larger peers. And firstly, if you like Tech Mahindra or no. Secondly, if you don't, what is your preference in the top IT pack?
See, if you talk of Tech Mahindra, it has delivered very poor revenue growth in the last few quarters. Although the last quarter was tad better on revenues and margin, which was a positive side. But its dependence on the telecom sector as a whole, where growth has been a challenge, is a problem with Tech Mahindra going forward. I think we have better choices in the IT space as a whole. Although Tech Mahindra, since it has not run up quite a lot on valuation parameter, it looked good. But the growth opportunities as far as cloud, AI, and other things are concerned, I think there are enough opportunities in large cap names like Infosys or mid cap names like Intellect Designs and all. So I would prefer going with the Infosys rather than going for Tech Mahindra.
Okay, prefer going for Infosys over Tech Mahindra. And the final stock that we want to address is Union Bank. Well, we understand that Union Bank is looking to raise funds through an QIP. 3,000 crores is what they're looking to raise, and it has launched it at a floor price of 143 rupees per share, which is not too far from the current market level. Of course, it is also up by as much as about 6-7 odd points, currently at around 148 rupees per share. And of course, the issue opens. It did open yesterday, and we're likely to see some follow-through action coming on. Rajesh, your view on Union Bank of India, as well as the relatively smaller public sector banking space, how would you go about this?
See, the entire PSU banking basket is looking very exciting. They have run up quite a lot, but still we find value in them. And some of them have given spectacular returns, not only in this quarter, but last few quarters. One of the names which comes to my mind at this point of time is Bank of Maharashtra. It has given beautiful numbers in almost all parameters, be it revenue growth, bottom line growth, margins, asset quality, everything. I think even from 60 odd levels, Bank of Maharashtra can give you 10-15% return in the next 2 quarters. Yes, Union Bank of India has also given good returns, good numbers. Asset quality has also improved, but I would prefer to buy around 130, 135 odd levels, not at this point of time.
Okay. I think we have time to squeeze in just one more stock, and that's Varun Beverages. We understand that the company's entered into an exclusive agreement to manufacture and package Cheetos in Morocco. And the expected date of commencement is May 1st. While the market may not be very significant, this particular segment for Varun Beverages in general may not be very, very large. Overall, well, in the overall scheme of things, Varun Beverages is taking strides in terms of its growth going forward, and they're doing whatever they can. That said, this is also one of those counters which has moved up quite a bit, which may make at least some question about its valuations. But as long as it's showing growth, I reckon that some may want to shun the valuations picture, at least at the moment. Rajesh, your view on Varun Beverages?
See, you said it right. The valuation have stretched quite a lot, but we should not forget that it's the largest Pepsi bottler outside the US, not only in India, but it's operating in nearby countries like Sri Lanka, Nepal, and other places. It's moving into non-carbonated drinks. Focus on non-carbonated drinks, I would say, has given good returns. and now expanding markets beyond the South Asian markets. I think the company is in a strong footing. Any dip should be taken in the stock as an opportunity to buy.
Okay, there you have it. Any dip should be taken as an opportunity to buy into Varun Beverages. On that note, we are out of time on this show. So, Rajesh, thank you so much for joining us and taking us through, well, your views on the many stocks and themes that we wanted to address. And on that note, it's a wrap on Hot Money. But don't go anywhere. More news and updates on the other side. Stay tuned in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hello Hello and welcome to Earnings Edge. We have with us a very special guest talking to us about a very exciting company that's been in the news for more than one reasons. Zagel is the company I'm talking about, and we've got with us Avinash Godkani, MD and CEO of Zagel. Avinash, good morning. Thank you for joining us today on the show. Your stock has been quite the talking point since you listed. I believe you've been in business for over 11, 12 years, and now you're bearing the fruit of it. Stupendous growth on top line, bottom line, margins. Is this sort of growth sustainable going ahead?
Thank you for having me on the show, Samina, and I think it's a pleasure. And look, we've given our guidance on growth. This year, we're going to grow 40 to 50%. Next year, 40% plus. If you think of it holistically, Samina, the spend management space is very nascent in India, right? And every company needs to digitize. There's a huge push from the overall ecosystem to be more compliant, to reduce leakage, to have information which is on a fingertips, at a fingertips. And that's the benefit that we provide. We increase your compliance, we reduce your leakage, we help you with your ESG goals because we reduce paper usage, it's greater transparency, and we are extremely competitive when it comes to price because we earn through our software fees and we earn through our transaction income. So it's a very reasonably priced platform for our corporate customers.
Okay, so subscription and transaction income. How much does subscription contribute to your top line and how much does transaction? And also more importantly, the transaction income earned is from the same clients or customers that subscribe to your platform?
Great question, Samina. The beauty of the model is that the transaction income comes through, our partner banks and networks like Visa, RuPay, MasterCard, right? We work with 11 banks, some of the best banks in the country, banks like Kotak, Axis, ICICI, SBI, Bank of Baroda, Yes Bank, IndusInd Bank, IDFC First. So we invoice the transaction revenue to these partner banks and the networks. So from a corporate customer perspective or a user perspective, an employee of a company perspective, they don't bear the transaction income. This is largely interchange and other components, incentives that we get from the networks. And that's why, this model is so powerful because from a corporate's perspective, they're paying a SaaS fee, which is heavily subsidized. We are very open about the fact that we earn through transactions and we are able to offer the software platform at a deeply discounted price. The value that we bring is easily tenfold plus of the software cost that we levy to our customers.
Avinash, so in terms of transaction fee, which you earn from MasterCard, Axis Bank, HSBC, like you mentioned, the quantum of deal, is across the board, right? Can you help me understand, is this on actuals that you're earning, which means that the projection could be revised upward or downward depending on the amount of usage that's taking place or underway?
So it's linked to the spends. You spend on your card, whether it's a prepaid card, whether it's a corporate credit card. You spend on your card, we earn a lion's share of the interchange income there from partner banks. Partner banks earn other lines of revenue that get generated from these programs. So you're right; these are lines which go up and down because of seasonality. For example, our Q3, Q4 has always been our strongest quarters. And Q1, Q2 have been typically about 30 to 40% of our revenues, and that's simply because the spend patterns in India at least changed this way. Q3 is festive season, and Q4 is the time when every employee is submitting her claims, using all the money that they have on their cards because there's a tax season, and their take homes may have gotten reduced a little because of the investments that they need to make, etc. So that's been the pattern that we've seen, and that's how we look at it.
Talk about margins, Avinash. You stand close to 10, just around 10%. That's your blended margin. Now, you did say that the subscription model is subsidized, but you're making money on transactions, transaction fee in that sense. What is the margins across both? The blended, of course, is 10.8, I believe, 10.2. But if you break those two down for me, what does margins for each vertical stand at?
So when I say, Samina, that we subsidize on the software, what I mean to say is that what potentially is the value that we bring to the corporate customer versus what we charge, there's a huge difference, right? And some of our global competitors who operate in India are, for example, multifold times more expensive than we are on a software fee basis. And that's what I mean. Our software income, the SaaS income, is from a gross margin perspective is near 100% because we've already invested in the platform and we've expensed out a large part of it. So that's from a gross margin perspective. On the transaction side, we have two components. We've got the points platform and we've got the interchange income, the program fees. The program fees, again, the gross margins are very, very high. And even net margins are fairly high. And the Propel points, of course, is a gross number.
Right. Avinash, your top line currently is at about 199 crores. You have a deal with Visa, which is to the tune of $20 million, so close to 165 crores over the next 5 years. Is this going to be equally spread out over 5 years in terms of cash flow?
No, our top line for the last quarter was about
350 crores.
Yeah.
Sorry,
Overall,
199.
this year, for the 9 months, we've crossed 500 crores.
Yes.
And last year we did about 550 crores, and we're going to grow about 40 to 50% on that 550 crores. So we should land somewhere in the range of 750 to 800 crores. And the Visa deal is not spread equally. It is again linked to spends. All these network contracts, typically, Samina, are linked to the amount of spends that you drive. And the contract in question that you're talking of is a contract that we have with Visa for our Forex programs, Forex cards. And those programs would get launched in the next financial year, and we'd start seeing revenues flowing from those incentives.
Right. Also, your recent deal announcement with Easy Trip Planners. How big is this as an opportunity? What is Zagel offering? Can you break that down for us as well so we can understand the impact this is going to have?
Absolutely. So Ease My Trip, one of the leading providers of travel in the country, when you look at an expense management platform, which is what our Save platform is, along with employee benefits, a very large part of expenses that employees incur on behalf of their companies is to do with T&E, travel and entertainment, right? And Ease My Trip allows us to be able to offer seamless bookings to all these employees of these companies through a self-booking tool that we have. And it also allows us to earn commissions for every ticket that's booked by a corporate or an employee through the platform. So there's an additional revenue that we get from the tickets that get booked through a platform. And as an employer and as an employee, you get a very seamless, comprehensive experience. So it's an integral part of our offering. We've had other travel partners, with whom we've worked, and we will continue to work with, multiple partners.
How does the logistics of this deal work out? Understanding the size of the deal, the potential quantum that you stand to earn from this, and over what sort of a period, the time horizon?
So this is generally, Samina, these contracts are, while this contract I think is about for 3 years to begin with, our view is that this is a long-term partnership which can potentially get extended through the years. And if you look at what this means is there are millions of users on the platform who book hundreds of thousands of tickets. For each ticket that gets booked, we would now start to earn healthy commissions. So the recurring nature of this and the accretive revenue that we would earn through this can be significant.
Possible to quantify, Avinash?
That would be too premature on my end, Samina.
Okay. You've also had an interesting deal that we caught on your website with Torrent Gas. You said you're very excited about this opportunity. What is this one now? They're all such different industries, so we just want to keep up with everything that's happening at your company.
Actually, it's different and it's similar, Samina. End of the day, we are working with corporate customers to manage their spends, right? It's all about spend management, and companies have such a wide variety of spends in their P&L that so we cater to literally every type of spend that a company incurs except for budgeted capex. In Torrent Gas case, this is a platform that we have created for Torrent Gas for fleet owners whose drivers would fill, gas at Torrent Gas outlets, right? And the whole idea is to be able to create an ecosystem where the fleet owner's working capital is saved. Today, if you think of a trip from, say, New Delhi to Chennai, it's probably a 20, 30-day truck trip. And in absence of an ecosystem like this, the fleet owner pays the truck driver the entire fuel cost upfront. Through this ecosystem, a fleet owner is able to load the card on a daily basis, track where the money is being spent. If a driver has gone missing, then he can block the card. It gives a tremendous amount of control to a fleet owner. To Torrent Gas, they get captive spends. They are able to derive loyalty from their fleet owners and the truck drivers. And of course, we earn revenue through this arrangement.
Has it already turned revenue accretive? Is it visible in this quarter earnings, or we'll see it from next quarter, Avinash?
So we've done the very initial pilots successfully, Samina, and we will see revenues come in the next quarter and beyond. Typically in these technology programs, you would want to do a basic pilot, see if it's working. And we did that successfully along with Torrent Gas just last week. We should start seeing revenues flow in from subsequent quarters.
Right. Also, Avinash, you've added 105 customers, I believe, in the third quarter, bringing up the total to 2,837 customer base. In the next quarter, how many more additions can we expect?
So typically we add about 600 corporates in a year if you look at our historic trends. And our focus now is to go after the larger contracts. We also are focusing a lot on cross-sell. So it's not just about the number of corporates, but it's also about the quality of the corporates. And you can see that there are a couple of announcements that we make in the next 24 to 48 hours, which are very large corporate customers again whom we have signed up. This flow will hopefully continue for the coming weeks and months.
Right. I think one thing a lot of investors talked about is that while Zagel is doing well, they haven't started paying out dividends yet. Can we expect that in the next couple of quarters? Is the money getting reinvested in the business?
There's too much growth for us, Samina, that we would like to, while this is a decision of the board, we'll be guided by the board's direction. But if you ask me, I believe there's way too much of growth in the business. What I understand from my training in business is that if there is a lot of growth, the real value that we bring to our shareholders is not necessarily through dividends, but by reinvesting that money judiciously in the business bringing outsized performance and helping the stock increase in price through the performance.
Just one quick one, Avinash, and this is more operational that I want to understand from you. Your debtor days have actually gone up from 48 to 68, and your working capital days have also increased from 34 that it used to be to nearly now 71, 72. Any reason for this? I mean, any particular concerns here, or this is nature of cost, just the way it's supposed to be in your business?
So, Kamina, I think anybody who's done a B2B business would realize, and that too with large banks and large enterprises, that there is a certain amount of time that takes. Because look, whenever people go ahead and spend on the cards, they'd spend through the month, and then we would invoice our partner banks at the beginning of the next month, right? And the banks would take anywhere between 45 to 60 days to clear those invoices. So while we're working with our partner banks and corporate customers to reduce this, as you add newer banks, each bank has its own cycle, and it takes a little while for these things to settle. But we are confident that this is going to get addressed in the coming years and quarters.
Look forward look forward to the big announcement from the company over the next 48 hours as indicated. But exciting times, good luck. We'll hopefully chat with you soon as well.
Thank you so much for having me.
Thank you. With that, we're completely out of time. That was the management of Zagel talking about the outlook. The stock does look expensive, but the earnings have been phenomenal quarter on quarter, and the company is guiding for a 40 to 45% growth in the next financial year. With that, completely out of time. Thanks for watching.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching NDTV Profit, and this is Profit Insight. I'm Harsh Saita. ABB India, it's up 8%, solid numbers in terms of Q3, aided by double-digit growths in orders, improving operational leverage. Anushi here with all of the details on that one. Anushi.
Right, Harsh. As you rightly mentioned, that the stock has been seeing a positive momentum today, led by the Q4 CY23 results that came out. Over here, if you have to look at the overall a good set of numbers, revenue seeing about a 13% upside, the EBITDA inching upwards to 14% this one, and margins remaining in the similar range of 15%, while the profit went above the 10% range. If you look at the overall net profit for the overall year, so a 22% upside here, despite having higher exceptional items. Now coming to the order side of the stock, so the orders were about 35% up for the quarter, which resulted in the order backlog of about 12,300 crore. Again, seeing about a 30% increase. So this is not just like this quarter that they have been reporting this double-digit growth, but over a couple of quarters that we have been seeing a similar trend in their order book trajectories, which showcases a strong revenue visibility going ahead. Now coming to some of the key confidence highlights of the business, they're seeing about increasing contribution coming in from the renewables metros sector. This quarter in particular was aided by the performance of its automotive sector, and it now has a good base of base orders and large orders as well in their portfolio. Another theme that they emphasize is in the shift of the premiumization that they're seeing in the electronic sector. So if you look at electronics and motions, both reported a strong growth this quarter. So these are some of the key details that ABB has listed, and the stock should remain in focus for that reason.
Absolutely. Those are some of the conference call highlights which Anushi brought us. Thank you so much for that. Also, on to something more big picture, very close to wrapping the show, but Citi has come out with their report on Indian equities. Mahima joins in with the details of that report. Mahima, talk to us about what Citi is sensing at this point of time. The market's at all-time highs.
Right. So Harsh, Citi has said that there has been increased interest among global ex-US funds as India's weightage has gone up from 2% to 5% in the past 5 years. Now this is because the market rally that has taken place in the past 5 years. They're saying that investors are viewing top-down India as attractive, and they've said that high valuations still remain as a key struggle, leading to money staying on the sidelines. They've also mentioned about why they have a favorable bias towards India. Now this is because they've seen secular growth outlook relative to its peers in the emerging markets. They've also said that execution of policy continuity post-election outcome also remains favorable in terms of the Indian equity markets. And they've also talked about their India's weightage in the MSCI. They've said that India's weightage in MSCI World X US Small Cap Index is at 8.1%, which is increased from 3%. They've also said that India's weightage in MSCI All Country World X US index has gone up from 2.4% to 4.9%. Also in terms of emerging markets, Indian investors are going deeper and focusing more on the small and mid cap rather than the large cap. This is because of the rally of the small and mid cap that has taken place in the last 1 year. However, they're still skeptical in terms of continuity of this outperformance, and they're still figuring out in terms of what could drive the underperformance. Also, they've mentioned their IT sector outlook, which says that they might the IT sector might see improvement by FY25, which is widely expected, and the pace of recovery in discretionary spending is the key to watch out for. Also, they are saying that investors are seeing how long can HCL continue to outperform the Persistent and companies like Persistent and Coforge. Also, they've mentioned certain things that will be the key things to watch out for, like the banking sector challenges, the public capex growth which is slowing down, the PSUs, like how sharp the rally is going to continue, and the mid-cap outperformance, where it is headed, what is the current direction to which it is headed. A few stocks that they've mentioned will be in focus are L&T, HDFC, ICICI, Infosys, NTPC, and so on. So this is the overall outlook that Citi has given on the Indian equity strategy.
Very interesting there. Continues to be bullish on India. Of course, flags of valuations, but nonetheless believes that there is still some room there. Now, in terms of, we'll stick with the India story, the Indian macros. Indranil Sen Gupta of CLSA believes that the RBI will precede Fed rate cuts and expects RBI to cut rates by April this year. This is very, very interesting views coming through. Listen into that.
Equity FPI flows
should be a steady story. You see, India's weight in MSCI go up vis-a-vis China, and so that's a pretty much discovered thing. When you come to debt, the fact that we are on the JP Morgan index, the fact that we may get into some other indices means that we will see good flows, another maybe $15-20 billion of flows by March 2025 or so. So that's one. What is also more important to understand is that a lot of the debt fund managers in FPIs were investing in India at their own risk because India was off benchmark. They were not obliged to invest. So if something went wrong, the onus was on them to prove why they went into India in the first place. Now that is changing with India in the benchmark. What this will also do is bring in debt FPI flows into the credit market. Although, this is not the benchmark for that, but then once you have that justification, it's easier for debt FPIs to also invest in the credit market. So I think, therefore, that, the 1% number that I have as both debt and equity, and I think debt flows will also be picking up, consistently, especially because the rupee should stabilize. The RBI should be cutting rates, maybe 100 basis points by June 2025. So you get the advantage of FX gains plus the advantage of capital gains.
Well, that's some excellent views coming through from Indranil and Gupta, but completely out of time on this edition of the show. You're watching NDTV Profit. Stay tuned. For now, from myself, everyone who puts the show together, thanks so much for watching.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Nifty maintains 22,200 levels after hitting life high in early trade. Meanwhile, Sensex trades above 73,000 levels.
Mixed action on the sectoral front. Realty, metals and PSU Bank lead gains. On the other hand, IT and media in pain.
And wars continue for Z. The company clarifies that it is not involved in any negotiations in relation to Sony merger deal. Meanwhile, SEBI uncovers $241 million in accounting issues. Stock recovers from lower circuit.
Meanwhile, Hindalco's US subsidiary Novelis to go public. Proceeds from the issue will go to the promoter Hindalco. Shares jump over 2%.
And farmers resume the Delhi Chalo March. The unions are demanding the legal backing of MSP and calling for it to include all 23 listed cash crops.
Hello and welcome. You're watching Market IQ. I'm Pallavi Nahata and with me is Smriti Chaudhary. Now let's have a quick look at where the markets are at first. The Nifty 50 has pared some of its gains after making lifetime highs for the third straight day. So the Nifty 50 currently up about over 0.1%, as is the Sensex. Within the Nifty 50, let's have a look at some of the key contributors and where they are at. JSW Steel as well as Tata Steel up both by over 3%. Clearly, steel seems to be having a good day in the markets today. SBI as well as Adani Enterprises both up by 2%. Let's have a look at the key losers. Power Grid down by about 2%. Power Grid was among the best performing stocks in yesterday's day of trade. BPCL as well as Hero Moto also down by over 1.5%. Let's have a look at where some of the sectors are at. Nifty Media clearly among the biggest laggards among sectoral indices. It's down by over 3%, essentially because of Z Enterprises and news of SEBI having uncovered accounting issues in the company. The Nifty PSE down by over 0.5%, as well as the Nifty IT down by 0.5%. That's about the laggards. But what's performing well is Nifty Realty. That's up about 2.5%. Nifty PSU Bank up by over 2%. Nifty Metal too having a good day, up by about over 0.5%. So that's where the markets are at. We'll of course be taking a closer look at some of these stocks over the course of the show. But moving on, we have Manish Gangwal, Chief Financial Officer at Gulf Oil Lubricants, joining us on the show today. Hi sir, thank you so very much for taking time out for us today.
Thank you. Thank you for having me.
So to begin with, we'd like to know more about the forthcoming guidance on volumes as well as margins.
So yeah, I think we had an excellent quarter, December quarter. You know, we have grown our top line, we have grown our EBITDA, and we hit back-to-back centuries of EBITDA in 2 quarters, September and December quarter. So we delivered 111 crore of EBITDA in December quarter. Overall, from guidance point of view, you know, the crude is stable, and hence our input cost, which is linked to crude, is also quite stable. We have seen our gross margins improving by nearly 5% on YOY basis. And we expect that as long as the crude is in this range of, $80 to $85, $87, the input cost should remain stable. And hence, we continue to track good margins and good, going forward. We have given a guidance earlier of 12 to 14% EBITDA margins, and now we are in the upper trajectory of this band, I would say. So roughly, we have delivered here 13.5, 13.6% EBITDA. We want to stabilize and then move obviously to the next band, which is 14 to 16% over a period of next, few quarters or 1 to 2 years.
All right. Good afternoon, Manish, and good afternoon, viewers. Moving on from results, let's talk about your, you also talked about the capex trajectory. Now, there's not a lot of capex from what I understand. It's in the 20 to 25 crore. That's about the guidance that you've given on capex. So does that mean that your dividends will continue to remain elevated in the next couple of years? And yeah, that's pretty much where we're at. Like, will you still continue to have the same dividend policy going ahead?
Yeah, sure. So you're right. Our capex in the lubricant business is 20-25 crore annually. However, we are looking at opportunities in the EV space. We have already made a few investments there. One of that has been in this last quarter or December quarter, where we concluded our 51% acquisition of a company called Tyrex Transmission, which is making DC fast chargers for electric vehicles. So that's an acquisition which we will now, we have started consolidating, and we'll focus on nurturing and developing that business. Obviously, a large part of our acquisition cost has gone as primary investment in the company, which should be sufficient for them to survive and grow for the next 2 years. And yes, so we generate a lot of cash. It's a cash generating business. And we have increased our dividend payouts over the last 2-3 years. And obviously, the objective of the board is also to not only, maintain the dividend payouts, but see the opportunity how we can definitely take it higher.
And just to get a sense of your EV business, when will this start contributing significantly to the top line?
So you see, currently it's a very nascent industry. As of now, we don't see, much vehicles on the road in terms of, percentages of vehicle park. But these investments have been made with a view of, over the next 5, 7 years, 10 years, what meaningful businesses these can contribute. From the acquisition of this Tyrex, which is a DC fast charger manufacturer, obviously they are having 8 to 10% market share today in the fast charger manufacturing side. So, and the size of the market, if I can give you some idea, is expected to be roughly 10 to 12,000 crore in India of DC fast chargers by 2030. And even if they maintain their 8 to 10% share, which obviously we want to increase our market share there, the top line can be a significant one at anything upwards of 500-600 crore rupees in next 5 to 7 years.
5 to 7 years, got it. Any sort of targets with regard to increase in market share?
Yes, so we are definitely, Gulf as a brand is very well-known brand with the auto consumers and also with the automotive OEMs. Most of the current automotive OEMs will also venture into EVs with some product lines, and we can leverage those relationships. Gulf also has a strong B2B relationship with more than 2,000 customers. So we'll definitely help Tyrex to, grow through our relationship, our brand, and financial strength what we have.
All right, just to get a sense of the EV space, is India maybe on the path of having one charging standard? Is that something you see in the near future, or that's far out?
You see, obviously the government is working a lot with OEMs. It has to be mostly driven by OEMs, and then the charger manufacturers and everybody else will obviously follow. So government is definitely trying to unify sort of charging regime, which can be helpful to improve the portability. Even today's newspaper also talks about that. So our company will be ready for whichever path is adopted, whether in terms of multiple charging or polarability. We are equipped for both, delivering all kinds of chargers. So definitely, we also look forward to similar initiatives from the government, which can help the mobility space. While saying this, I want to also reiterate that the lubricant market is going to continue to be growing at 3 to 4% in terms of volume, and double of that in terms of value over the next 10 years. So nothing happening on the demand side from lubricant, which because of EV, it can come down. It will continue to grow at the same pace what it has been growing at the last 10 years.
Got it. So just one last final question. In terms of EV mobility, would it be correct to say that the focus continues to be on buses, because that's where we're seeing a government push, or you also plan to kind of increase that in the passenger vehicles or other segments as well?
So you're right. I think the initial pick and push will be in the government buses side, mostly on the buses side, and that too, I think there was an article also that there are roughly 24 lakh government buses. Out of which government is targeting 8 lakh, 25% to be converted to EVs by 2030 over the next 5-7 years. So that's a sizable number, and that will drive obviously a lot of EV mobility in India. In addition to that, we see there will be some impact in scooter segment, which is the part of two-wheeler overall two-wheeler segment, and definitely some increase in as the number of models increase in the car segment. Also, there will be some penetration, but these are expected to be in the single digit to teens in terms of penetration in the next 5-7 years.
Got it. Thank you so much, Manish, for joining in and for answering so many questions for us.
Thank you, sir.
Thank you. Now, Gulf Oil is, we're seeing an uptick in the share price. It's up about 4% right now. But let's shift focus to Paytm. We're seeing Paytm shares at 5%. That's the upper circuit. And this is on the back of the ongoing Paytm saga. Sources tell us who is vying for which business of the Paytm Payments Bank. Pragati Oberoi is joining in, who's been tracking this space to tell us more about this. Pragati, what are you picking up?
Right, Smriti, you're absolutely right. Now, Paytm's business has been out there. A lot of things have happened ever since RBI placed restrictions. And last Friday, when RBI actually increased or extended the deadline for this to 15th March, it also announced that Axis Bank will have the nodal account. Now, the real question here, or the interesting bit here, is that while Axis Bank will get the nodal account of Paytm Payments Bank, there are other businesses as well where there is a lot of scope, and a lot of banks are now. Sources are telling us that 3 main places or businesses of Paytm Payments Bank are what banks are eyeing. Now, the first one would be the banking partner. While Paytm is looking at having 3 banking partners, the front runners for this would be Yes Bank, Axis Bank, and HDFC Bank. That's what we are getting from our sources. One thing to note or remember here is that none of the deals are finalized yet. We are still waiting to hear from them as to what it is and which banking partner will Paytm go with. But these are the front runners in this game, because once these banking partners come in, it will be specifically for the UPI transactions, which means that the virtual payment address or the VPA that has @Paytm, that will have to change depending on which banking partner they take over. Next, we have the FASTags business. So now for the FASTag business, what has happened, the Indian Highways Management Company, or IHMC, has been given the charge of driving the whole Paytm's FASTag business. So what IHMC, as per our sources, has done is that it has divided the 248 toll plazas among 9 banks, and of these the main names are HDFC Bank, Yes Bank, IDBI Bank, IDFC First Bank, and Kotak Mahindra Bank. There are 4 others as well, but we still don't have a clarity on those names. The third business, Paytm Payments Bank, another lucrative business, is the NCMC cards business. And for this, while we do not know where the deal is or what are the conversations of this stage, we have an idea from our sources that SBI is going to be the front runner for this particular business. As far as others are concerned, for example, there are other non-bank lenders and payments banks also in this particular business, because non-bank lenders had a collaboration and partnership with Paytm. They are also in our focus. For example, Airtel Payments Bank, sources told us that while they are not exactly seeing the Paytm's downfall as an opportunity of increasing their business, they have definitely started an integration of Soundbox, QR code, and current accounts, and this particular thing is in the pilot stage, or the testing is in pilot stage at this point. They're also looking at secondary banking accounts, because according to sources, it's a very good opportunity for Airtel Payments Bank in this space, because as a consumer or a merchant, everyone may not be comfortable in having the small ticket transactions in their main bank account. So having a secondary bank account helps them. As far as the non-bank lenders are concerned, Shriram Finance and Poonawalla FinCorp had their partnerships with Paytm. Now, while they are still assessing and in a wait and watch mode as to how to take this forward, Shriram Finance, we know, may talk to Axis Bank very soon. While they haven't shared the details, sources are told us that a conversation is expected with Axis Bank, because in the analyst call after the curbs were there, Paytm did say that for the time being they are halting on fresh lending, but they did not clarify as to when it will start. So that's what we have from our sources. We'll bring you more updates as and when we have them.
Thanks a lot for that, Pragati. We'll continue staying on top of the news and bring to you the latest as and when it pans out in case of the Paytm saga. But moving on, another stock in focus is Hindalco. It's actually among the top performing stocks in the Nifty 50 today, up by about a little over 1.5%, or currently at about 1.5%. So we're going to go on to Saloni to give us more details about Novelis, which is set to file a confidential IPO. Saloni, tell us more.
Hi Pallavi. So Novelis, which is the 100% wholly owned subsidiary of Hindalco, has filed a confidential IPO with the US SEC for the US IPO. Because it's a confidential IPO, we do not have the details of the draft statement, but as per the statement from the company, the Novelis said that the common shares are expected to be offered by the sole shareholder, which is Hindalco in this case, and Novelis will not receive any proceeds from the sale of these common shares, which means that Hindalco will mostly be getting the shares that it sells, proceeds from that. So the main motive here, we spoke to a few experts and also tracked a few brokerages and analysts to understand what exactly it means for Hindalco. So the main motive seems to be here is the value unlocking by Novelis listing for Hindalco. However, it is unclear to assess how much the value did unlock, because the size and how many shares will the promoter sell, and the timelines is also something that we don't know as of yet. The key questions that would arise, that would one would want to know about or watch out for, is first the extent of stake dilution, as into how much Hindalco will be looking to sell, and also why have they chosen the route of IPO for Novelis? Because Hindalco, for its domestic business in India, does not need cash for now, because they have a cash balance of about rupees 3,000 crore, and analysts expect that the capex plans also that they have and expansion plans they have, that can be funded through internal accruals. So the motive behind the IPO, and also how will they deploy these proceeds and how will they use the money for that matter. Now, talking about the valuation metrics, Prabhudas Lilladher is valuing Novelis at about 6.5x of EV/EBITDA. This is as of March 2026 estimates, and that comes up to about an enterprise value of rupees 1,200 billion. Also, Nuvama also has assigned about the same 6.5 times EV/EBITDA, and it has derived a market cap of about $9.6 billion, which is of rupees 361 per share of Hindalco. And we've also gotten to know, like, there's a Bloomberg update that's come that Novelis has picked up BofA and Citi as iBankers for its IPO. So looks like there's a lot of updates that's going to be coming up in respect to this IPO.
Thanks a lot for that, Saloni. In fact, we also spoke to Rakesh Arora of India Stocks on how are the valuations looking for Novelis' public offering. Let's hear him.
We have seen some irrational moves in the renewable space where valuations are very high. Because a lot of ESG funds are vying for the same asset. So we have to wait and see. As I said, that currently Indian analysts are valuing Novelis at 8 times EV/EBITDA. Can it be 12? Can it be 15? It is quite possible. Number two is that what could be the holding company discount? The holding company discount normally could be anywhere between 20% to 60%. So this is a wide range that we are working with. So I would say that, near term positive, but, longer term, there are some questions to be answered.
Hish, the quantum of stake that Hindalco will look to liquidate, will that have any bearing on stakeholders?
I mean, till the time it is in the range of, 25-30% at the max, I don't think it will have too much of bearing, And in any case, there was no cash flowing from Hindalco to India. So that again, meaning there's no major change out there.
Well, that was Rakesh Arora talking about how the dilution of stake would not have an impact on shareholders for Hindalco. But it's time for a short break, but do stay tuned. We'll be back with the latest updates from the Farmers Delhi Chalo March on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching Market IQ. Let's talk about Byju's. Byju says its 200 million rights issue stands fully subscribed, but its founders has urged all investors to take part in the issue. Here's Rishabh Bhatnagar with details on that. Rishabh, tell us a little bit more about the subscription to this rights issue.
That's right, Smriti. We have accessed a letter that Byju Ravindran wrote to its shareholders. This came in late last night, but Byju has said that the rights issue worth about $200 million has been fully subscribed. But the caveat here is that not all investors have taken part in it. So in the letter, Byju has basically urged all investors to actually plow in more money and take part in the rights issue. He has also said that at this point, investing in the rights issue may seem like a Hobson's choice. So for those who don't know, it's basically Hobson's choice basically refers to the illusion of free choice. So it might seem like it's mandatory or compulsory to participate in Byju's rights issue, but he said it's the only way to sort of prevent permanent value erosion. He also said that the rights issue will help preserve and build greater value for all shareholders. And he placed commitment on the fact that he has always placed his interests aside when dealing with Byju's. He said that the $200 million will take care of all the liabilities that the company is currently servicing, as well as future growth capital. What else was interesting in Byju's letter to the shareholders was that he will appoint 2 non-executive directors on the board. Now, the board is currently run entirely by his own family. It only consists of his wife, him, and his brother. So, and also the fact that they will be doing an FY23 audit that's set to close by this quarter. So, interesting developments at Byju's coming in that we'll continue to track. Back to you.
Thanks a lot for that, Rishabh. Now, moving on, the Tech Mahindra CEO Mohit Joshi believes that India's AI ecosystem is rich for jobs. In a conversation with my colleague Tushar, he spoke about the potential job opportunities in the tech space. Listen in.
Look, like I had said in the session, right, I do feel that this is a wonderful toolkit. And it allows people to really expand their capabilities very dramatically, right? Whether it's in terms of design or the actual coding or testing, it's a remarkable set of toolkits that allows you to perform at a much higher level than earlier. So I do feel it is an overall huge positive, right? Given the workforce that we have, given the young workforce that we have, I feel that the opportunities truly are limitless because technology or AI is really expanding the size of the pie. I think we have to be focused on just the massive expansion that the global economy is likely to see because of the promise of technology.
That was the CEO of Tech Mahindra. But the big story today that we're tracking is the farmers' protests from multiple states resume towards Delhi, and the Delhi Chalo march that starts again today amid heavy security that is deployed in the national capital to prevent any disturbances during the protests. Farm leaders from Punjab and Haryana had previously halted the farmers' protest on Sunday evening after the fourth round of talks with the union ministers. In fact, tear gas shells were fired this morning at the Punjab-Haryana border on the farmers marching towards Delhi. Drones were seen flying above the farmers gathering as well. My colleague Aishwarya Jain from NDTV joins in from Ground Zero.
Well, as far as Government of India is concerned, they had held 4 rounds of talks till now with the farmer union, and it went inconclusive, and therefore the reason today Arjun Munda, Union Agriculture Minister, came out and stated that he's ready with a proposal that can offer as far as legal guarantee of MSP is concerned, crop diversification, the stubble burning issue, and also the FIRs that were earlier lodged against the farmers. And the union government has again invited the farmer unions to come forward and to speak. The only solution that, according to Arjun Munda, is the dialogue and communication that can happen, and only by that, very peacefully, the resolution can take place. But on the other side, what we are witnessing at Shambhu border today is another scuffle between the farmers who are protesting with the Punjab police and Haryana police as well, who have been deployed in large numbers, and they are not being allowed to enter into the territory of Haryana. Currently, where I am reporting is Singhu border, which connects Delhi and Haryana, and at this place as well, multi-layer of barricading had been put forward by the Delhi police. Senior Delhi police officials are here at the spot, very closely monitoring the situation of what's happening at Shambhu border. Just behind me is these cemented barricades which had been put forward by the Delhi police officials, and the entire traffic had been stopped, which is coming from Haryana and goes towards the national capital, as the farmers are adamant of protesting and to reach to the national capital. On the other side of this highway which connects Delhi is the Rapid Action Force and Delhi police personnel deployed in huge numbers, more than 2,000 as we have been informed by the Delhi police officials. Apart from it, there had been fencing which is also being done, and road control vehicles being deployed in large numbers. So the clear instructions for the Delhi police is that if they breach the Shambhu border and enter Delhi, then they would be stopped here as well. So heavy policing can be seen over here. But what happens next, whether the farmer union will do another round of talks with the union government or not, is something that remains to be seen.
Thanks a lot for that, Aishwarya. So clearly the stalemate between the government and the farmers continues. We'll continue to bring to you the latest on that. But with that, we're completely out of time. Thank you so much for watching, and stay tuned to NDTV Profit for more.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Different Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the category.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the
Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. Today we're going to ask a very simple yet fairly complex question on the Mutual Fund Show. How do you choose your mutual fund scheme? And it may sound like a very basic question on the face of it, but the fact is that it's not. You have to keep so many things in mind, not just your own requirements, but also the various kind of schemes out there. Do you want to go active? Do you want to go passive? Do you want to invest directly? What's your fund manager's track record? What is the churn rate of that fund? What is the Sharpe ratio? Now, I'm joined today by Aditya, founder of Hercules Advisors, who actually put out a very interesting thread on social media. And Aditya, that's exactly where I thought we should, add all of those points and amplify them on the Mutual Fund Show as well. I found that thread interesting because it laid down some of these basic questions with such clarity, and those are truly big ones. Now, let's start with understanding why it's become tougher now than ever to choose the right mutual fund scheme. Is it because of a whole explosion of choices as well?
Absolutely, Tamanna, you are bang on. Zerodha is coming in, Samco has come in, Helios has come in, and a whole host of mutual fund houses are coming in. So the problem really is there are thousands of schemes available, just like medicine. You don't know which scheme to select, what to look at when you are selecting a mutual fund. So there is a thorough process that I have devised for all our retail audiences that I put out yesterday, where you need to look at the fund manager's track record, churn ratio, Sharpe ratio. These are all some of the important factors that you need to really look in. Generally, what retail investors really do is, no, we don't want to go with a regular plan. We want to do a direct plan, and they end up choosing up the wrong scheme. And the cost of choosing the wrong scheme is tremendous over a longer term. So you need to go through a fixed process when you are selecting a mutual fund. The process, as we go on, we will discuss. So yes, it is becoming more and more difficult as explosion of mutual fund houses as well as mutual fund schemes come in, and you need to have a well laid down process about how you select a mutual fund.
All right, so let's start with the process, and that's thank you for that context, because it's truly not as simple as it seems. So the very basic understanding would be that active versus passive. If you're a newbie or relatively newer investor going for a passive fund, it's safer. If you have a bit of experience going for an active fund, but it's not as simple as that, is it?
Yeah. So the first basic differentiation that you need to do is an active or a passive fund. A passive fund is a fund that tracks the index, in India, the Nifty index or the Nifty Next 50 index. And a passive fund has an active fund has an active fund manager, where the active fund will try to create an alpha over the index. So what you need to really do is, you don't know whether an active fund or a passive fund, which one will outperform. So what you need to do is you need to create a portfolio where you have both active and a passive fund. You can decide the proportion of active or passive fund. 50-50 is fine, 60-40 is fine, but that's your call. But you cannot miss both the boards. You have to have both the boards inside your portfolio, a passive fund and an active fund. An active fund, the drawback of an active fund is there will be some years when they will underperform, but the upside is there will be some years when they will outperform. So a mixture of active and passive fund. If you are really very young, you need to be very aggressive on the active side of it, because you are taking a call that a good fund manager can outperform. As time really goes on, as you get older and older, passive funds should start to dominate your portfolio, and the proportion of active funds should really come down in the portfolio.
What is your cutoff for young and old? I mean,
yeah.
It's because you have to go by this statistically. And you could be someone who maybe, Aditya, you will not define as young, but who is relatively newer to investing.
Yeah. So how I define young and old is up till the age of 35, when you are able to take huge risks in the market, I define it as young. From 35 to about 55, I define it as a middle age where you are accumulating wealth. At that point in time, your mutual fund scheme should already have been decided. And now you should be doing a disciplined and a consistent SIP into all your equity schemes per se. And after 55 is really old, when you are trying to wind down your equity mutual fund investments, and then you are moving on to a debt product or a fixed deposit where you need to create by the time you are 60 and you retire, you need to create a fixed flow of money into your kitty for your retirement purposes. So at the time when you are really very young, active funds, in my opinion, should start to dominate your portfolio.
Okay, the other interesting aspect I found in the process that you've mentioned is whether you go through an advisor and invest in a direct fund or look at a direct fund yourself. At what point can you make the judgment, okay, I have enough information, enough knowledge to invest in a direct fund?
See, what really happens is only 1% of the total public should go and invest in a direct fund, but it is the exact opposite. People are governed by the fact that we are able to save expense ratio, so we want to go and invest in a direct fund. That's not how people should approach it. People should approach it in such a way, are you able to understand what the fund manager strategy is? Are you able to understand the churn? Are you able to understand what is the Sharpe ratio? Are you able to track the mutual fund 6 monthly and see how the fund manager's performance is? If you are able to do all of these things, then you should be moving to a direct plan. If you are not able to do all of these things, then you have two options. Those two options are, one, you could go to a SEBI regulated, SEBI registered investment advisor who could charge you some bit of money and then still put you in a direct plan. If you are able to do that, you will be able to save a lot of expense that you have got. The other way around is you can go to a mutual fund distributor and he will put you on a regular plan. He will look look after all the portfolio that you have got and suggest as per your risk profile about how you want to go ahead and invest. So these are the two options through which you should be investing. Don't go straight away and invest in a direct plan and invest in 20 schemes because you don't understand the market. What you have to really do is either go to these two branches or straight away pure play, just invest in an index fund. There is no regular plans in index funds, just pure play invest in index funds. But for active funds, you need to compulsorily have an advisor who understands the market, understands the fund manager, and understands the scheme properly as per your risk profile.
Aditya, a couple of terms you mentioned, and I think it's only correct that we spell these out for our viewers. And whether you are going through an investment advisor or yourself, I think these are things that you should keep in mind. One is the fund manager's track record. You talked about the Sharpe ratio. What is that? The expense ratio. How much should it be, and where should you look for that information, as well as churn? Let's quickly go through these 3 or 4 concepts.
So a mutual fund fact sheet is a very, very important aspect of a mutual fund scheme. Every month, all mutual fund schemes publish this fact sheet. What do you find in this fact sheet? In the fact sheet, the most important thing is the fund manager and a fund manager's name. So you identify your fund manager from the mutual fund fact sheet. The portfolio of the scheme that you are investing in, the top 10 to 15 names of the mutual fund portfolio, which comprise about 60 to 70% of the holding, can be found there. The next important thing is the churn ratio. So what is the churn ratio? A churn ratio is how much the mutual fund manager is buying or selling in a year, the transactions. Some mutual funds have a churn ratio higher than 100%. So what that means is at the start of the month, the portfolio that they entered with, they don't have that same portfolio at the end of the month, and they are buying and selling constantly. What we need to really see is mutual funds where the churn ratio is really low. The fund manager is investing for the longer term and not churning way too much just to show the performance. So lower the churn ratio, the better it is, the better the mutual fund is being a long-term investor. These statistics do not need to be calculated by the retail investor. These are readily available in the mutual fund fact sheet. The next important point that you need to monitor is Sharpe ratio. While evaluating a mutual fund, you just don't need to look at the returns. You need to look at the risk-adjusted returns. What that means is the return that is adjusted for the risk that the fund manager really takes. A Sharpe ratio higher than 1 is really very beneficial for investors. It means that the fund manager is taking lower risks than the index while generating higher returns than the index. So always look for Sharpe ratios which are higher than 1, and those mutual funds over a longer period of time, if they are able to maintain a Sharpe ratio of higher than 1, is really very beneficial for the investor. The last point that you need to look out for is an expense ratio. Expense ratio is the fees that the fund manager is really charging for managing your money. For a direct plan, the SEBI has standardized all of these expense ratio. On a direct plan, the expense ratio varies from 0.4% of the AUM to 1.2% depending on the AUM of the mutual fund. On a regular plan, it varies between 1.6% to as high as 2.5%. So you need to see where your mutual fund is. Higher the AUM generally, lower the expense ratio is. But higher the AUM, the fund manager also finds it really very difficult to deploy all of his money. So all of these 3-4 parameters can be found out within the mutual fund fact sheet, and all mutual fund houses and all mutual fund schemes publish this every month and can be found on the mutual fund schemes website.
This sounds like I said, this is a simple question, but the answer is not that simple. These are things that we very usually overlook. So I think it's important that you're highlighting them in such a clear and simple fashion, Aditya. Let me now come to the process. At the start of this conversation, you said that there is a clear process that should be followed. And is that something that you have codified? What would be that process as per you?
So this is a process that I have developed after 12 to 15 years of investing myself as well as advising clients. So the number one thing that you need to watch out is the mutual fund manager who is managing your money. We have ace investors like Shankar and Naren who work with ICICI. We have Rajiv Thakkar, who works with Parag Parekh. We have Mr. Prashant Jain, who was with HDFC Mutual Fund. So you need to look at the track record of these 8 mutual fund managers. They will have 10 to 15 years of track record where they have demonstrated that they can create returns. You need to look at the portfolio and the style of investing. Some of the mutual fund managers exhibit momentum kind of an investing. Some of them do value investing. Some of them do a small capish type of investing. So you need to identify what is the mutual fund manager's strategy. And most likely, most retail investors would not be able to identify this. So for this exact reason, a distributor or a SEBI registered advisor is important. They will be able to identify the mutual fund strategy. Why this is very, very important is because every mutual fund manager will undergo a process of outperformance and underperformance. So during periods of underperformance, if you understand the strategy of the mutual fund really well, you will stay invested in that strategy and you will not try to look for the next best performing mutual fund. So point number 1, understanding the mutual fund manager as well as his strategy is really very important. Point number 2 is look at those metrics, the churn ratio, the Sharpe ratio, the expense ratio, and the AUM that the fund manager is really managing. Then the last point is you need to look at your own risk profile. When you are really very young, you are allowed to invest in the small cap side of the market. But as you grow older and older, the risk tolerance of going towards the small cap side of the market really decreases, and you need to move towards the large cap side of the market. So the last point is look at your risk profile, and according to your risk profile within each category, try to come out to a best, a good mutual fund scheme.
Aditya,
right now, I want to warn.
Of all the things that you've mentioned, the risk profile one may be, my guess is what is being followed the least. Because looking at small cap fund returns, everyone wants to, get those returns, and everyone wants to take benefit of them, whether they are, as you're saying, young, old, pre-35, post-35, doesn't matter. Look at the kind of investments coming in thematic funds. Look at where the money is coming versus what you are saying. Do you see a large divergence right now?
Absolutely. Retail investors have a herd mentality. So what they will try to do is they will try to chase the best performing funds. Over the last 8 to 12 months, small cap funds are up 30.
All right, I seem to have lost that connection with Aditya, but very important points that he's making. You must keep those in mind. I'm taking a very, very short break, but on the other side, we answer your questions and what you need to know from our experts. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks.
Welcome back. You're watching the Mutual Fund Show. Now, in this section of the show, we answer your questions that you've sent us to speak on this and answer some of your queries. I'm joined by Anant Ladda. He's founder for Invest Arch for Kal. Thank you so much, Anant, for joining us. Let me jump straight to the first query we have sent by a 24-year-old who says, my income is 8 lakhs per annum and I can invest 30 to 40,000 rupees a month. I aim to achieve my financial goal of creating a fund worth 30 lakhs in the next 5 years. It's from Aditya Tarade. He says, currently I have invested 5 lakh lump sum in Tata Banking and Financial Services Fund. So what funds would you recommend to me? I am comfortable with 100% equity exposure. Looking at the age, perhaps that's a good, mindset. Anna?
See, going 100 high, firstly, very happy to be part of this show. Looking at the age, looking at his aggressiveness, his portfolio is quite balanced, I should say. But but his purpose is to reach a goal of 30 lakh by an age of 35. I think with an investment of roughly around 26,000 per month and his present lump sum investment of 5 lakh, if he manages that fund properly, he'll be able to reach his goal very comfortably at an CAGR of 12%. Now what he can do is, for his balance SIP, which you want to do, he can frame some other goal. Probably he want to buy a home, a car, a vacation, or maybe plan for his retirement well in advance, and he can do proper planning and start his investment separately and in a proper way, keeping a goal in mind. Having a goal is very important, and if you feel that you have some extra money which you can save for another goal, it's always better to map it to that goal and plan it accordingly.
All right, so that's good advice there. Let me quickly take the next query, and I'm trying to take as many as I can, as fast as I can, because we want our viewers to see their questions on the show. Zaid has written in, he's 28 and says, I currently have SIPs of 10,000 rupees a month in equity funds. He's mentioned his current holdings as well: HDFC Defence Fund, that's 3 lakh rupees, UTI Innovation Fund 3 lakh rupees, SBI Energy Opportunity Fund 2 lakhs, and HDFC Technology Fund 1 lakh. He also has a 50,000 rupee investment in the Axis Small Cap Fund. So he says, my stock portfolio is worth 27 lakhs with 38% returns, and I can invest an additional 50,000 rupees. My goal is to retire by 35. What should I do? Zaid, first of all, what a goal to retire by 35. You have to think about what you will do if you retire by 35. But having said that, very impressive portfolio, don't you think, Anand, at this age and with the kind of investments?
So he has taken a lot of sector funds and a lot of sector calls, and I'm very happy that it's working out for him. And he wants to retire by an age of 35. There is a very interesting principle known as FIRE. Financial independence, retire early. According to that principle, if you want to achieve a state of complete freedom, at an age when you are planning to retire, what will be your expenditure for per annum? At that age, you have to calculate that first and multiply it by 50. That is the amount of corpus you need to have before thinking of retirement. For example, if at an age of 35, his annual expenditure is maybe 10 lakh rupees, then he have to multiply 10 lakh by 50. If he has that corpus of 5 crores, then he can plan for retirement. Otherwise, he should probably revisit his goal and plan accordingly. Presently, he's working a lot of on a lot of thematic funds. to give his portfolio a bit of stability and overall exposure, he can probably add a few multi-cap fund and maybe a large and mid-cap fund, which will give his portfolio a bit of stability as well. I know his theme have been working out well for him right now, but it's always safe to have some defensive bets also, and then and maybe some index bet also. For example, he can add Nifty 50 equal weight fund in his portfolio, which will give stability to his portfolio, so that his portfolio is properly diversified and taken care of even during difficult times.
All right, very quick question and answer because I have little time left, but I don't want to let Harshit's question, just go to waste. 28 years old, SIP of 12,000 rupees a month. He's mentioned his fund categories. I'm not going to read them all out because they're on the screen as well. But he wants a 12 to 15% CAGR in the next 7 to 8 years. Now, you have that detail with you, Anand, so I will not repeat it. It's there on screen as well. What is your advice?
Firstly, very happy to see that he is investing a good amount of money in flexi cap and large cap, and he is accepting that in 7 to 8 period horizon, 8 years of horizon. Having good exposure in these cap is better. Probably instead of large cap, he can move to an index fund. And instead of Nasdaq 100 FOF, he can probably have S&P index fund, which will give him better exposure of foreign markets. Rest, I feel his portfolio is well balanced. And if there is no Six Sigma event, probably he'll be able to get a decent 12% CAGR on his portfolio with his given time horizon.
All right, great quick answers over here. Thank you so much, Anand, for joining us on the show. That's all the time we have. But do send in your queries to us on the Mutual Fund Show. That WhatsApp number is on the bottom of your screen, and with the detail that will help our advisors give you the best way forward. That's all the time we have for today, but stay tuned. A lot more coming up on the other side of the break on NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? when to buy, when to sell.
Nifty maintains 22,200 levels after hitting a life high early in trade. Meanwhile, Sensex trades above 73,000. Mixed action on the sectoral front. Realty, metals and PSU banks lead the gains. On the other hand, IT and media in pain. And woes continue for Z. The company clarifies that it is not involved in any negotiations in relation to the Sony merger deal. Meanwhile, SEBI uncovers $241 million in accounting issues. Stock recovers from lower circuit. Meanwhile, Hindalco's US subsidiary Novelis to go public proceeds from the issue will go to the promoter Hindalco. Shares jump over 2%. And farmers resume the Delhi Chalo March. The unions are demanding the legal backing of MSP and calling for it to include all 23 listed cash crops. Hello and welcome. You're watching Large Trades. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing on the back of bulk deals, block deals and of course volumes. But before that, a quick look at how markets are faring at this point in time. And it's been a quiet day of trade. We don't have too much to speak for as far as the Nifty is concerned. Sure, it's currently trending in the red, marginally so, and also at day's lows, but not too much to speak for otherwise. Let's take a look at how the Bank Nifty is doing. Of course, there'll also be focused on account of the weekly options expiry, where we have also seen a little bit of weakness. And it's been a very choppy day of trade for the Bank Nifty, at least for intraday traders. They will find it a hard day to trade, considering it's seen its bouts of sharp up moves and down moves. As you can see on the screen there, it's been it hasn't exactly been a smooth ride. But that said, in terms of all the constituents that contribute to the gains, and that's also been a mixed bag, hasn't it? Because we are seeing enough number of pushing and pulling when it comes to the Nifty indices and the Nifty index specifically in terms of its key contributors. So while we do have this time around weakness in something like an HDFC Bank and something like an ICICI Bank weighing down on the index, we also have a handful of your steel names which are advancing and providing some amount of support as far as the Nifty is concerned. Well, moving on to the broader markets too, you do have your usual suspects, but it is a real estate sector which is currently under pressure, and we are looking at some amount of weakness there. But we're looking at a sharp knock for those broader market indices. The small cap 250 index is now at its day's low. That's where we're seeing some traction as well. So we continue to keep an eye on some of these, in names. That said, let's take a look at all that we want to consider in today's day of trade in terms of large trades. So we will talk about ABB, and we want to address what's happening with Hindalco as well. We're talking about Bajaj Consumer, and moreover, we're also going to address a handful of other names which will also be in focus, which would include Raymond, Poly Medicure, as well as a handful of other names. But let's start off with the first one, ABB. Now, this clearly is the stock of the broader markets, and it has zoomed and it has moved from strength to strength. But that's not on account of earnings, not only on account of earnings, but we also had an earnings conference call from the management today, earlier on in the day. And based on what we have seen, at least the participants seem to have liked what the management has suggested. Let's get in Anushi to tell us about how things have panned out for ABB as well as the outlook going forward. Anushi, good afternoon.
Afternoon, Agam. So the stock is seeing it hit a upper circuit today at 10%. Now, again, this is on the back of the Q3 numbers, or rather the Q4 CY23 numbers that we are looking at. ABB, strong set of numbers over here. That's reflected in the volumes also, that how this market is seeing the results. So about 9 times the 30-day average volumes. Again, just coming back to some of the key result highlights. So the revenue was about 14% up today, while the EBITDA was also about 14.5% uptick, but the margins remain in a similar range of 15%, and the net profit seeing about a 11%. But more than that, the focus shifts to the order book and the order backlog that the company possesses. So over here, the new orders picked up pace, again 35% upside over here, with 3,100 crore new order wins, with which this resulted in an order backlog of about 12,300 crore, resulting in about a 30% growth over here. So this is not just the one quarter scenario that we look at. So since the last couple of quarters, the company has been reporting a double-digit growth in their order books and the new orders that we are seeing. Coming to the key conference call highlights, so the management remained positive on the business outlook going forward, seeing an increasing contribution of its orders coming from the renewable and the metro side of the business, and also seeing robotics as a new engine of growth going forward. Another factor is it has a great mix of large orders as well as base orders in its mix, so that can be another factor to be watched out. Again, the focus now shifts to the premiumization trend across its electrification business. So if you look at electrification as a segment also, that also saw a double-digit growth in this quarter, and even motion segment, which is another second largest segment of the business, that showed about more than about 30 to 40% growth over here. So these are some of the key trends that we need to keep in mind for ABB, and the stock is eventually seeing this performance that we are seeing about 10% upside today.
Absolutely. Well, of course, the key positive here is that the management has suggested better times up ahead, and ABB has seen its fair share of volatility. Anushi, thank you so much for getting us those updates on this particular capital goods major. On to our next stock. We have Hindalco in focus, and this is largely because of Novelis' plans of listing abroad. Well, we do understand that it is filed for a confidential IPO. We have Saloni who's joining us with more details. Saloni, we have seen a little bit of an uptick in volumes, but I reckon that that's also largely on account of the news flow. What can you tell us here?
Right. So, yes, Agam, as you mentioned, the volumes actually have, intraday volume have been at about 11.7 million shares, which is highest in 4 days. And the stock also made an intraday high of rupees 536 per share when it opened. It opened about, like about 5% up. So this was on the back of its wholly owned subsidiary in the US, Novelis, filing for a confidential IPO, where it said that the common shares will be offloaded by its sole shareholder, which is Hindalco in that case. And Novelis will not receive any proceeds from the IPO, which means that most of the proceeds will go to Hindalco only, as they will be offloading stake. However, because it was it was filed confidentially, we don't have the draft statement, as it is only with the regulator. But the main motive that we understood is to unlock the value from the Novelis listing, and also it is actually unclear as to how many shares the promoter shall sell, and also the timeline of this IPO, because it will all depend on the SEC review. The key questions then arises the extent of stake dilution, how much Hindalco plans to sell, and also how much proceeds it gets, and where it uses it, because technically Hindalco has a cash balance of more than rupees 3,000 crore, which means that it does not immediately need cash for its business. So that is something that needs to be watched out for. In terms of the valuation metrics, Nuvama has assigned about 6.5 times EV/EBITDA to value Novelis on FY26 earnings. This is based on the estimates for FY26 earnings, and they have derived a market cap of about $9.6 billion, which is of rupees 361 per share of Hindalco. Prabhudas Leather also, for that matter, has about the same valuation metric of at 6.5 times of their March 26 EBITDA, and the enterprise value of about rupees $1,200 billion. And we've also heard, like, there's a Bloomberg update that BofA and Citi have been picked for the IPO, so we'll have to keep a close track as to what happens next.
So absolutely, and in fact, as we speak, its volumes are now at a 5-day high. Of course, thank you, Saloni, for getting us those key updates. And what is also interesting is that the Hindalco is actually now trading at day's lows, and it has given up nearly all the gains that it has made through the course of the day. Now up just about 0.6%. But from there on, we talk about Bajaj Consumer Care, where we have also seen a whole bunch of large trades along with volumes buzzing. We now have Mahima who's joining us to give us more details. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly mentioned, there have been 3 large trades that have taken place in Bajaj Consumers today, and this is approximately 63.86 lakh of shares that have exchanged hands. This forms around 4.4% of its equity. So this is kind of a major stake, and the average traded price at which these were traded is around 243.6 per piece. Now, if we talk about the major shareholders that are currently holding Bajaj Consumers, this includes Nippon Life India small cap around 6.6%, HDFC Mutual Funds which holds around 7.4%, and Goldman Sachs which hold around 2.8%. Now, talking about how the quarter has gone by for Bajaj Consumers, well, as compared to the FMCG companies, Bajaj Consumers has done fairly well. The net profits have grown by 9.48%. The EBITDA has grown by 12.77%, and if we talk about the key highlights of how the quarter has gone by, the value growth was, however, flat for 9 months with mid-single-digit volume growth, and the value growth over 35% has been seen in Q3 FY24. Now, their organized trade has grown close to 25% in Q3, and the rural demand, however, still continues to be subdued because of inflationary pressures that the entire industry has been facing. In terms of international business, the international business is doing quite well. The Middle East saw strong performance with a 22% growth in Q3. Q3 exports have expanded by 61%, driven by robust growth in US and Canada. And the Nepal division has delivered 27% growth as compared to Q3 last year. Now, the stock performance as of today, it's touched an intraday high of 9%. The volumes are trading at approximately 14 times its 30-day average, and the stock has been, if we talk about the stock performance overall, the performance has been fairly well. 1 month it's been up 14%, 6 months it's been up over 2%. However, 1 year the stock has been up approximately 46.4%. So this is all we have for Bajaj Consumers so far.
Right. So more pros than cons, and which is clearly evident in the kind of price action that we've seen. Mahima, thank you for joining us and getting us all those details on Bajaj Consumer. And on to another stock. We have Raymond, which is also on our radar, and the shares have surged today, and we are also looking at interesting development, but not with the company's core business. But I'm going to say no more and get Mihika in for more details here. Mihika, good afternoon.
Good afternoon. So yeah, the stock did go to an intraday high of 7.3%, and volumes were over 10 times its 30-day average. Total volume stood at around 17.2 lakhs, where buyers did outnumber the sellers. Now, the latest update which came in yesterday was the Raymond Realty segment launched its first project in the MMR region in Mumbai to develop a gated community in Bandra East. Now, the estimated development value of the area is 2,000 crores, and the project is spread over 2.74 acres of land and will offer various around 30 amenities and a 16,000 square foot clubhouse. Now, the real estate, in terms of the real estate segment's outlook, the company is very positive. They have a land bank of around 100 acres, and they project a revenue of 3,500 to 4,000 crores per annum over the next 4 to 5 years, and they're mainly going to focus on their joint development agreements and their residential agreements. In terms of their other businesses, one which is their core business, which is retail market, the company has been expanding their retail store network, and they also plan to open around 200 more retail stores over the next 12 to 18 months. And they're also foraying into the engineering business, and their focus segments are on aerospace, defense, and the development of EV components given the EV influx.
Right. Certainly an interesting development with respect to the gated community update there. Mika, thank you for joining us and giving us those details. And besides that, they are, it does seem, diversifying into various other businesses too. So, de-risking to a certain extent, and among its newest ventures, possibly the reason behind that 7% up move in today's day of trade. And then moving on to Poly Medicure. That's the other stock that's also on our radar, surging on volumes. Let's get in Varsha to give us an idea on what's happening here. Varsha.
Hello Agam. So if you see, Poly Medicure stock is up almost 3%, but it has seen an intraday high of 8%, and if you see the volumes are at over 7 times its 30-day average. Now let's look at the background of this company as always. So they are a manufacturer and exporter of medical devices like IV cannula, and they have portfolio of over 130 SKUs of disposable medical devices, and they are present across 9 different product verticals. Now if you see the growth prospects for this company, so renal care and dialysis, they are expecting almost 50% of growth because they are already investing in new capacity, and that will help them to reach a revenue of around 140 to 145 crore for next fiscal. Also, company has done soft launches in critical care division, and they're going to do a soft launch for cardiology business in coming month, and they'll keep on adding new products into these segments. If you see, they've got over 375 patents which are active and live over different geographies, and in 2024 they plan to launch 8 to 9 products as well. They've also received 2 new products under US FDA, taking it to total number of 4. And if you see the guidance for FY24 and FY25, they're expecting revenue growth of almost 22 to 24%, for which they've revised from 20% in last quarter with an EBITDA margin of 25%, and in FY25 they expect revenue growth of 20%. This may be revised in next quarter considering the situations. Also, if you see the valuation, so currently it's trading at P of 63, but its average 5-year P has been around 52. So this is all we have got on Poly Medicure.
Right. Well, some very interesting details coming in, given to us by Varsha. Keep this one on your radar as well. But on that note, it's time to slip into a short break. But don't go anywhere. Lots more lined up on the other side. Stay tuned in.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. Indranil Sen Gupta of CLSA believes that the RBI will proceed Fed rate cuts and expects RBI to cut rates by April this year. Listen in.
Equity FPI flows should be a steady story. You see, India's weight in MSCI go up vis-a-vis China, and so that's a pretty much discovered thing. When you come to debt, the fact that we are on the JP Morgan index, the fact that we may get into some other indices means that we will see good flows, another maybe $15-20 billion of flows by March 2025 or so. So that's one. What is also more important to understand is that a lot of the debt fund managers in FPIs were investing in India at their own risk because India was off benchmark. They were not obliged to invest. So if something went wrong, the onus was on them to prove why they went into India in the first place. Now that is changing with India in the benchmark. What this will also do is bring in debt FPI flows into the credit market. Although this is not the benchmark for that, but then once you have that justification, it's easier for debt FPIs to also invest in the credit market. So I think, therefore, that the 1% number that I have as both debt and equity, and I think debt flows will also be picking up, consistently, especially because the rupee should stabilize. The RBI should be cutting rates, maybe 100 basis points by June 2025. So you get the advantage of FX gains plus the advantage of capital gains.
Wait, I'm going to come back to that and sort of get your view. So you're seeing 100 bips by the RBI by June. So no
2025.
By 2025. So
yeah.
How soon do you think that begins? Are we going to wait for the Fed? Because the world is waiting on the Fed right now.
I think that the language of the Fed at least has to turn more definitively dovish for the RBI to act. But if you look at it this way, that if you cut rates, you support growth. And when you support growth, equity flows come in. When equity flows come in, the rupee stabilizes and the debt guys come in. So in India, because debt is barely 10% or even less, 5% of the overall FPI investment, paradoxically, rate cuts lead to more flows because they bring in equity flows. So therefore, I think there is as such no reason for the RBI to not cut now to support growth. But then I guess they will want to wait for a more definitive statement, maybe in the March 2024 policy, or let's see when, before they start cutting. But our call has been for April.
And for the Fed?
Fed is slightly later, September.
Okay, so that's interesting. We'll wait and see if the RBI precedes the Fed, and that consensus growing that maybe they should. I have very little time with you, but quickly want to bring in the China question when you're talking about FPIs. How much of it will also be determined by a China recovery and then a larger pool flowing towards emerging markets, hence India also benefiting?
So I think right now money has flowed out of China, hidden in countries like India. So any recovery in China will naturally first lead to flows back, but then also, lead somewhere to greater interest in EM per se. So at this point in time, I will say that a reversal in China will be flattish to marginally negative for India's FPI flows at this point, because already a lot of people have come here and China is cheap. So if China turns around, I think money will flow there.
And that is all that we have for today in this edition of Large Trades. But before we go, Nitish Kumar has bluntly hit back at the opposition after they raised slogans against the Chief Minister of Bihar. Take a look.
आप मेरा मुर्दाबाद लगाते हैं, हम आपको जिंदाबाद करते हैं। बाहर भी बोल रहे हैं, जितना बार लगाना है मुर्दाबाद लगाइए, हम आप सबका जिंदाबाद करेंगे। जिंदा रहिए, हमको मुर्दा करते रहिए, आज जितना मुर्दा करते रहिएगा उतना ही खत्म हो जाइएगा। अरे आप लोग बहुत कम संख्या में अगली बार आइएगा, एक सीट भी नहीं मिलेगा, ये हाल जान लीजिए। इसलिए लगाओ नारा, खूब नारा लगाओ। हम इसलिए कह रहे हैं जिंदाबाद कि घर में रहना, यहां आने की जरूरत नहीं है। क्या नहीं कर दिया, सारा काम, एक मिनट, सारा काम सरकार की तरफ से किया जा रहा है। आप गड़बड़ कर रहे थे तो आप ही लोग कर रहे थे, अभी हम सबको सुधार कर दिया, एक एक काम कर दिया, और अब आप लोग बोल रहे हैं। और कल ही हमने कह दिया, लागू हो गया, और कहिएगा अधिकारी को हटाइए, ये आपका अधिकार है। सरकारी अधिकारी को किसी चीज से हटाने का और उसका मांग करना आपका गलत है, ये बिल्कुल गलत है। ईमानदार आदमी के खिलाफ आप लोग कार्रवाई कर रहे हैं, जो सबसे ईमानदार है उसके खिलाफ कार्रवाई करते हैं। ऐसे अधिकारी जो किसी का धंधा इधर उधर नहीं सुनता है और उसी के खिलाफ एक्शन लेते हैं, बहुत गलत बात है।
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with Hello and welcome to India Market Close right here on NDTV Profit. We can make a big deal of the fact that the market is off from the day's highs and it's trading virtually at the low point of the day, below 22,100 and about 138 odd points in the red. But frankly, it could be par for the course. This could be any given day. On a day when European markets are quiet, US futures are trading margin in the red. This is not a terrible outcome. Yes, the market breadth has turned a little bit for the worse. So the advanced decline ratio, if you see, would have now had a yawn in favor of the declines as opposed to how we started off. But it's okay. Bring up the heat map very quickly and show you what's happening at the large cap end of the market. Metal stocks are doing okay. And one of the reasons could well possibly be because everything related to China is starting to open up. You saw the phenol price uptick that got announced day before yesterday or thereabouts. And Tamanna spoke to Maulik Mehta of Deepak Nitrite on the same. Steel is actually doing the same thing as well. But aside of that, very little to cheer about. Not that there is too much of dampening. I mean, the top loser is just about 2.5% lower. So it's nothing too dramatic. And these are stocks which have done quite well in the recent past. So, you know, it's okay to see a bit of a corrective move here. A larger move happening at the broad end of the spectrum, and there is a number of stocks which on news, on developments have actually had a really good run this afternoon. And Tamanna will highlight that for us. Tamanna, good afternoon.
Good afternoon, Neeraj. And yes, a bit of pain over there in the broader markets as well with the mid-cap 100 and the small cap. Seeing those cuts, like Neeraj said, nothing to panic about, but could be a number of factors. You're going to hear more details of what the FOMC thinks. FOMC minutes are going to be out later tonight, maybe Qs over there. And that's why you're seeing that pain in IT stocks as well. Those could be some of the factors. Europe, as Neeraj mentioned, is a bit rocky right now. But locally, what are the news, buzzing stocks is what we're going to focus on. And let's start. All right, so there's Europe. So not too great. A little on the negative side, actually, on the FTSE, and the rest completely flat. All right, let's look at what's happening locally. Start with Z. Stock that has been a lot in the focus and massive seesaws. The story of the day today for Z, though, is not about whether they're talks of revival of a deal with Sony. That's not really happening. I'm going to start with Z. ABB will come to in the end. We're talking about Z Entertainment because today you have a Bloomberg story that says SEBI has maybe found a 2,000 crore rupee diversion from their balance sheet. The company has denied it. The stock down 13%. Paytm on the other end, 3 consecutive sessions at least at a 5% upper circuit. That's really an interesting story brewing there. And we have an exclusive on who could be the suitors for Paytm ahead on the show. My colleague Pragati will be coming up with that story in a bit. Meanwhile, let's quickly talk about what's happening with Sterlite. Sterlite is in a pact with Lumos to build 100% fiber optic internet infrastructure in the US. That stock is up 7%. HFCL also has some good news. They're setting up an optic fiber cable manufacturing facility in Poland. So that's one I would talk about. And of course, let me come to ABB. ABB also because you're going to hear from the management in just a bit. And what a run up on ABB. That's talk about 9.5% up. Good order book. And that really is the reason why you're seeing the quarterly result reaction to this extent. Good order flows for the year and numbers that are above expectations as well. We'll hear from them. But Neeraj, you spoke to them earlier. And that story there, in a sense, is also typifying what we're seeing in terms of the turn in the capex cycle, isn't it?
In some sense, ABB seemed to indicate that in quarter 3 and quarter 4, they seem to have seen a bit of a turn on the private capex as well, which is interesting. Tier 3, Tier 4 capex as well, which is also very interesting. And, in my conversation with Sanjeev Sharma and TK Sridhar, the country head, Sanjeev Sharma, and the CFO, TK Sridhar, of the company, about whether the gains and the execution that the company saw in calendar year 23, are they sustainable? Because frankly, that's the nature of the conversation. Quarter 3 and quarter 4 were very strong for ABB. Can they actually do an encore of what they've done in quarter 3 and quarter 4, especially on the margin side for the year at large? Here in what they had to say.
As we have been interacting for a number of years, only recipe we have is to stay consistent with what we do, which is to continue to grow and localize our 18 divisions, continue to expand in multiple market segments which are growing quite well in the country, and continue to go into new geographies with a focus on localization so that we are competitive and can reach out to the most customers. So I think that's what we have been very consistent with over a period of time, and added to that, operational efficiency shows up in our results.
Yeah, and I have questions around that for Sridhar, but Sanjeev, just a follow-up to this. Order inflows, right? Because that's what everybody's looking at a point of time wherein private capex is moving a bit, not moving a bit, largely funded by government or largely followed by government. But your order flows for quarter 4 surge. Quarter 3 was 14%. That was par for the course. You've done 35%, if I'm not wrong, in quarter 4. Now, what is this? Is this a trending piece? Are you seeing more signs of private capex coming to the fore, which is aiding your flows, and is this something that is likely to sustain, if not the exact number, but the mood into calendar year 24?
So Neeraj, as far as our books are concerned and our focus is concerned, most of our customers are industrial customers. And most of our customers are also the value adders in the market, which is serving different customers and the market segment. It could be our customers who are the contractors to the government, or they could be supplying some machinery and equipment to infrastructure projects, or it could be going into industry directly. So all these segments have been doing well. As far as we are concerned, in quarter 4, we did have a large order, wherein we had an order from the railways for our traction equipment. So that's into the mix of quarter 4. But otherwise, as far as the base orders are concerned, I think they continue to track well for us.
Got it.
So just give you a color that typically we carry about 9% of our books into large orders. So now at the moment we are sitting with 15% of our books with the large orders.
Okay, so base is stable, large is expanding, which is great. Sorry, just a clarity there before I go to Sridhar. In Q3, the motion segment order book had seen that uptick because of a large railway order. Are we talking about the same thing into quarter 4 as well, or is this different?
Yes, it did come from motion. So we did have another set of orders in motion books in quarter 4.
Got it. And I presume you guys are going to announce some expansion in the traction motor and propulsion systems capacity as well, if I'm not wrong?
So it's all in the flow. So as we expand our books, we continue to organically expand our operations, because our operations are here, and it's always incremental expansions that we carry out. And there are some places wherein there are substantial expansions.
Got it. Sridhar, let me bring you in. Excuse me, but it's just that there's so much that comes as a follow-up to a question answer given by Sanjeev that I'm tempted to continue to do that. But, a piece that Sanjeev mentioned, that operational efficiency shows up time and again in the quarterly performances that you do. Now, I remember reading this in quarter 3. You guys had spoken about how commodity prices are starting to stabilize, and therefore uptick in margins from the levels that you clocked in quarter 3, which was a heady number, may not be possible. But people would have feared that maybe there could be a downtick that comes in because they are volatile. Now China is showing signs of opening up. Since the last 2-3 days, we're seeing some base commodity prices moving up too. Give us a sense of what's happening in that region, and how does ABB therefore deal with this on the operational front?
Okay. Neeraj, I think when we gave this comment in the, Q3, so we said those orders which we are booking at that point of time were not basically factoring in the side of cyclicity of this material cost increases which we saw in the metals, right? So the revenue execution, what is happening today is from those orders which were booked during that particular times where we had a price advantage, and that sort of, I said, is going to even out going forward. So the backlogs which we have is with more steady prices, and therefore we said that our profitability going forward will be steady and not so much of an the swings which we have and upward swings which we have in the profitability as you see at this point of time. And I think we remain consistent with the guidance or the color which we give, is that our profitability is going to be driven by a mix of orders, B, definitely the operational efficiencies and the cost optimization, what will continue. And also the most important part is also about the localization initiatives, which every division is carrying out to stay relevant in the market.
So, if I compare look at the last 5 years, or let's say last 12 quarters, your metrics have improved in quarter 3 and quarter 4 quite materially relative to the previous ones, which are not bad, but just that the last two on the operational metrics have improved, Sridhar, and please correct me if I'm wrong, but I don't think I am. So my question therefore is, with the levers that you have around localization, efficiency, and the order mix, relative to the causes of commodity price inflation, do you reckon what you've done in the second half of calendar 23 is something that you can kind of do an encore or maintain well into calendar year 24?
So I think the margins at which we have booked the orders are pretty much strong, right? And so therefore, I think we will be able to maintain the same momentum as what we are seeing in today, right? So when we say momentum, I would say the percentage of the margins what we see, right? Which is today we are talking about 12% on the PAT levels, right? That has been our ambition to achieve over the last 3 to 4 years. And we want to remain steady in this particular range of probably 11 to 12%. I think which if we're able to hit the volumes, right? So I think this should normally fall in with the backlog which we have and the execution patterns which we see. I think it seems to be possible.
Wow. Okay. Well, all the best for that. That'd be really nice to see that worked out. Sanjeev, how much of order mix part would this play? So, I mean, you got large orders, your current order book, circa 8,000 crores, if I'm not wrong, is also pretty strong per se. And I heard my analysts tell me on the con call, you guys have said that robotics might see large flows coming into calendar year 24. So how much of order mix would play a part in this? And are you consciously now going in for the higher margin segments as well, because you can afford to do so, because you guys have the technological expertise to be able to cater to those kind of orders which not every company might have?
You're right, Neeraj. High value added activities, which adds a lot of value for the customer, leads to better realization. So robotics is definitely one area wherein we bring a lot of value for our customers in the automotive, electronics, and many new segments which they can cater to. Those are expanding, and the sophistication they are demanding is quite high. And that's where the application expertise and our ability to have delivered similar solutions globally, and that credibility plays into the right place. So we feel, given where the manufacturing industry is and where the robotics uptake is, I think it's a very long runway ahead of us. Now, when it comes to other segments, it plays out the same way for the motion division, because energy efficiency is the norm. Whether you look into the corporations which are focused on reducing the greenhouse gases. So that means if you add more energy efficiency equipment into your mix, you are able to get better sustainability scores, and which is a real kind of focus by our large and medium-sized customers. And that's your motion portfolio is best in class in the world, as in India, and that is seeing a good uptake and utilization. Same thing goes for the electrification side, wherein most of the buildings, which are especially, you can see the high quality buildings being produced and made in the country. I think there's a shift for high quality components to be used on those, and that plays well for our electrification portfolio, and also focus on the energy management systems that go into the building, because that's again is one factor which reduces the energy consumption. So that theme is also developing in the country like it has played out in the other markets, and it's almost a de facto standard. And last but not the least, our process automation solutions, which definitely add directly the productivity and efficiency to process industries in the core sector, whether it is a expansion, whether we deliver services to existing installed base, and also some new digital technologies that we are deploying and offering to the customer. There's an upcoming an uptick in the interest in those areas. So as we said, that we play a wider market segment stage, as well as we have a larger portfolio, continue to localize, having a lot of value-adding activities and expertise available in the country by our own colleagues. That adds up to the equation into sustaining the growth as well as continue to be profitable.
Okay, we are done with growth and profitable growth. And ABB's order inflow being up 35% in quarter 4, and the fact that they said that the margins that they've clocked in quarter 3 and quarter 4 are sustainable for a year, for the whole year, means that their profitability growth could be much higher than the top line growth in calendar year 24 relative to calendar year 23. But ABB is at one end, the market seems to be at the other end. and Jay Bala, founder and chief market technician at Cash the Chaos Johnson, to talk about the charts, Deep Bandyopadhyay Johnson to talk about the fundamentals. And gentlemen, we also need to slip into a break, so we'll make a very quick opening thing and then we'll talk in the second segment about details. But Jay, constructive or not constructive on the markets currently? You can also give us a view very quickly on ABB, which is trading at the day's high.
A little bit cautious on the markets, Neeraj. The markets are looking exhausted and tired. And if the Nifty Bank were to take out the January lows, I think it'll usher in a large correction for the markets. So watch the January lows as a sacrosanct level. And as far as ABB goes, my view was that Larsen and Toubro will be a laggard, and rest of the sector within the BSE capital goods will complete the up move. And ABB was expected to move, but this is the finishing move for ABB. I don't see much expansion from here. Probably around 5,100, 5,200 would be the maximum upside for the stock. But beyond that, I will be a little more cautious. The stock is still trending up, but I anticipate it to be an exhaustive move around 5,100 to 5,200.
ABB, all right, doing fine, but you have seen quite a crack in the markets. A struggle right now for the Nifty to stay above the 22,000 levels either. Sudeep, very quick take from you before we hit this break. What do you think is leading to the pressure? Are you seeing about profit booking, some nervousness, especially what I am spotting is nervousness in some of your public sector enterprises, your BHEL, etc., showing quite a bit of weakness?
Well, I think, definitely a bit of nervousness is there in the market as we speak. And I have been talking about this, valuation correction probably is required for a lot of these defense and, rail even PSUs. I think they're doing good work. There's no doubt about it. And there are a lot of potential. They are gaining orders, and they are in a significantly better position than what they were a few years back. But the valuation what was reached was a little unrealistic, and at least some amount of time correction is definitely warranted. So yes, that's happening, and that's bound to happen. Even if it doesn't happen in the next few days, there will be some more selling at some point of time or the other, whereby some correction is bound to happen as far as some of these scripts are concerned, like BHEL you explained. Other than that, I think there are no fresh triggers as we speak. Yes, there is a general election coming up, but beyond that, there are not many triggers at this stage, either positive or negative, hence a little bit of nervousness and profit booking.
All right, so some nervousness and profit booking, definitely in your oil companies, your BPCL, HPCL, all of them having quite a tough time. We're going to take a very short break, but when we come back, we look at what is contributing weakness to the market and where the opportunities lie. All that and more on the other side. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dream?
Nifty below the 22,100 mark, slipped about 230 points from the day's high. And what's contributing to the weakness? Well, Infosys definitely one of those key contributors. HDFC Bank also showing some signs of weakness, as is L&T, RIL, and then of course the others. You're seeing OMCs down and out. Broader mark is also cracking into that extent. Pull up what the micro caps and small and mid caps are doing, and you're definitely seeing more pain over there over the last few minutes. The Nifty mid cap 1.5% down, while the small cap is about 0.5% down. Jay Bala and Sudeep with us on the show today. Jay Bala, let me come to you very quickly on where you see opportunity, if at all, and what would be your top call at this point?
Yeah, I'm bullish on Ultratech, and I'm expecting this stock to continue to push towards fresh all-time highs. And as long as the stock can hold 9,500, that will still be within the parameters of a corrective move. And I expect the stock to hold up above that level and then push towards all-time highs towards somewhere about 11,000 and possibly 11,500. So I'm bullish over there, and I'm bearish on Titan. It looks like it's completed a short-term cycle from the nearby levels, and I expect the stock to correct somewhere close to 3,200. So the highs it saw last week, that'll be the stop loss for me. I think that's about 39.81, and expect the stock to correct somewhere close to 3,200.
Okay, so bearish on Titan, which has actually been a favorite. Remember, it was Bank Nifty expiry today, though the index is not doing too badly, all things considered. Nifty IT, though, showing quite a bit of pain. Sudeep, I just want to get your take. Are we seeing an impact of fear that interest rates cuts are going to be postponed? Could that also be what is playing out? Because IT stocks have been under pressure for the last couple of sessions at least, and the crack is even deeper today.
Well, I think definitely in US, once the inflation numbers came, the thinking changed from an immediate interest rate cut to postponement of the interest rates cut by Fed. Fed also took a stand where they wanted to wait and watch. So now I think by and large, they're not expecting any interest rate cut in US before June of this calendar year, as opposed to much earlier, few weeks back. So under the circumstances, obviously a bit of conservatism, a bit of risk aversion is creeping in. We have seen US bond yields go up. So FIIs are rather guarded, and you must have noticed also that FIIs have been selling in Indian market consistently for quite some time. They are bringing in money in India, but that's going in the bond. As far as equities are concerned, they have been selling. So I think overall, generally there is a bit of a pressure on the market with consistent and continuous selling by FIIs. As far as IT is concerned, again, I think, because FIIs hold a lot of IT stocks, when they are selling in India, naturally IT also gets sold. I think there is nothing specific to IT. If we see the commentary of the IT companies, by and large, they have been positive with what's happening as far as the economy is concerned in the US. And there is definitely economic recovery and expectation of that. Under the circumstances, I think next fiscal should be good for Indian IT companies, at least much better than the current fiscal. So there is no specific reason which I see for IT companies to correct, other than
in that case, anything that you would accumulate at this point among IT companies?
Well, we like HCL Tech, and I think HCL Tech can still be acquired at current levels. Amongst the non-frontline IT companies, we like IT companies focused on specific segments like travel and tourism. So a RateGain Technologies continues to be our favorite. Coforge continues to be our favorite. Persistent, which is focused on EV transition, that continues to be our favorite.
All right. So Persistent, HCL Tech, some of those picks. Stay on with us, please. I'm going across now to look at what are the volume buzzers of the day. Mahima is joining us for more. Mahima.
Yes, Tamanna. So the first volume buzzers is, of course, Campus Activewear, which is buzzing around 33 times its 30-day average, and this is because of a large trade that happened in pre-market today. Around 1.3% of equity changed hands. Around 40.7 lakh shares were exchanged, and this happened at a price of 245 per piece. If we talk about the intraday high, it touched an intraday high of around 12.5%. Moving on, we have Bajaj Consumer again buzzing in volumes because of large trades. 3 large trades took place in Bajaj Consumers today, where around 4.4% of equity has changed hands. Now this is big. Its major shareholders, if we see, are Nippon Life India, HDFC Mutual Fund, and Goldman Sachs, where HDFC Mutual Fund holds around 7.4%. The average traded price was approximately 243.6, and if we talk about the intraday high, it touched an intraday high of around 9.04%, and the volumes are approximately trading at 13 times its 30-day average. And then we have ABB, of course, on the back of earnings, where it hit upper circuit on the back of robust Q4 current year 23 numbers, and along with a strong order backlog growth of 30%, the order wins in the past couple of quarters continue to grow in double digits, and the management in the conference call has remained positive on overall outlook of business with new orders from renewables, metro side, and sees a ROC sustaining at a 21% level. And lastly, we have Epic Grill, where the volumes are at around 19 times its 30-day average, and it touched an intraday high of 11%. So these are the volume buzzers for the day.
All right. So, among those volume buzzers, of course, you have that sort of pressure coming in on the index right now. A slight dip below the 22,000 mark for the Nifty, barely holding on above. Let me just also move to the next stock that we can focus, and then we'll get a view from both our analysts on what exactly is happening. And I just want to talk a bit about Hindalco. Hindalco is also a stock which has slipped from its day's highs. It opened on a positive, definitely, and you're seeing that intraday chart because its US subsidiary Novelis is set to file a confidential IPO. It's good for the company, which is already got a lot of cash on its balance sheet. Phillips Capital note saying that perhaps they will use some of that fund for Vodafone Idea, though it's not clear what the valuation of that Novelis IPO is, how much Hindalco gets out of it, what do shareholders get, and what they will do with it. Nevertheless, that stock has now dipped a bit. Overall, weakness in the market, though, is also visible. Let me come to Jay now first on Hindalco, and also what are the Nifty levels that you're seeing, Jay, now that we've peaked below the 22,000 levels?
Yeah, see, 21,500 is a very critical support for Nifty. If that were to give up, I would think the markets have topped, and watch Reliance in congruence with that. 2907 is an important level. If the stock were to close below 2907, I would think the stock which index managers were using to keep the Nifty up, I think the distribution is probably done if the stock were to close below 2907. Hindalco, I believe, has registered a medium-term top, and it's correcting for the medium term for the move that it started from 2023 February. Some more downsides to work with, and if copper were to drop like I'm anticipating, I think that will also add pressure to the stock.
Sudeep, quick view from you on Hindalco.
Well, we like Hindalco. I think the results were, as far as domestic business was concerned, was very good. Utkal Alumina continues to be the engine which is moving Hindalco domestic business. As far as Novelis, the numbers were excellent. But what happened is Novelis is putting up a new facility, and that there's a massive cost overrun. They had budgeted about 2.1 or 2.2 billion for that facility. Now they have announced that it is going to take 4.1. So there's a significant cost escalation and also delay in commissioning of the plant. That spooked the market earlier. And I believe that this IPO announcement, or rather filing of the IPO with SEC, probably is to take care of this cost escalation to a great extent. Now, we need to know how much is the primary, how much is the secondary in this IPO. And once we know the secondary component, we will be able to in a position to comment whether Hindalco will use the money in what manner and not. But if it's a only primary, I think it is definitely going to be for covering the cost escalation and other usage for Novelis. And remember, Novelis, the projection for their realization is extremely good, and it continuously goes up over the next 2-3 years. That's the projection they have given. So everything was good except this cost overrun on the plant.
All right, so they could be raising funds to cover the costs for Novelis, which has seen a huge overrun on their Minute Pay project. And the mood definitely turning for Hindalco. But, you can't just say it's a Hindalco story, because look at what's happening in the markets right now. 173 points down, 230 points down from the day's high on the Nifty. We're taking a very short break. On the other side, we're trying to understand why OMCs are cracking. There is a report strategically which has a bit of a negative outlook. We're coming back with that and your top BTST picks after the break.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
how to decide which is the one for you. First, decide on the candidate.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Wobbly to say the least, but our guests have reiterated that it's important to figure out what the derivative position is looking like at 3 p.m. on the 21st when the markets are below 22,000. Agam is standing by to break it down for us. Agam, good afternoon.
Good afternoon, Neeraj. A very, very choppy day of trade at the moment, and specifically with respect to the Bank Nifty, with the way things have panned out. But notwithstanding the kind of sharp decline that we've seen in the Nifty in the last half an hour or so of trade, Nifty, in fact, has now once again started flirting with 22,000 on the lower end. In fact, we did briefly move below that mark before we saw it return about the 22,000 level, and we are seeing about 1% increase in open interest towards what looks like fresh shorts. And the Bank Nifty, of course, it's flat at the moment, but not without its fair share of choppiness through the course of the day. It's been a hard day to trade as far on an intraday basis, considering it is the weekly options expiry. Speaking of options, let's take a look at the Nifty options. Remember, earlier on in the session, we had maximum open interest in the 22,000 put, and that is completely dissipated even as the Nifty moves below and starts to test that level. So it's certainly turning out to be a good, very interesting day of trade, considering we're also looking at a lot of writing around 22,200 calls, considering we were there exactly yesterday. In terms of the Bank Nifty too, where again a lot of activity has shifted downwards towards 47,000, because that's the mark that we did test. And besides that, let's take a look at stocks then. And we're going to keep an eye on a handful of names. So a lot more shorts: Ashok Leyland, NMDC, and Jubilant Foodworks. PVR Inox and ABB, on the other hand, looking at longs coming through. Strong up move for ABP, of course, clearly the stock of the day. And in terms of stocks which are seeing unwinding, well, we do have longs unwinding in Tata Communication and GNFC, along with Vedanta. Gujarat Gas and Siemens, on the other hand, looking at about a short covering. But all in all, a relatively volatile day of trade for both the key indices.
Okay, thanks for that, Agam. So, that's the interesting piece, that there is choppiness. And, if you look at two ends of the market, there is real estate on one side, which is doing very well on a market like this, and pockets like OMCs, which are not. So real estate, for example, let me start with that. So Deep, good afternoon to you, Neeraj here. On a day like this as well, real estate stocks topping the charts, a bunch of them trading at fresh life highs. Is there merit in staying invested into a real estate investment of your choice?
Neeraj, good afternoon. I think, the way I look at real estate as we stand today is that the luxury real estate part has run its course. I'm not saying it is going to collapse or anything like that, but we have seen what we had to see. So the builders or the developers focused on luxury real estate probably will not see any major upside from here on. Whereas the mid-market and the affordable housing builders and developers, there is a significant upside potential there. And we haven't seen that yet getting played out. With interest rate, possible reduction of interest rates in the near future, we will see a significant pickup in that demand. So I would look at developers or housing real estate companies which have a mix of luxury as well as affordable and mid-market properties, rather than only looking at the top builders who are focused on the luxury real estate portion. That's broadly how I look at it. Now, amongst the real estate players, one company I think has been doing well, and I still believe can do very well, is Brokerage Properties. I think that's one company which I would like to buy even at current levels.
Reality is a positive story. OMCs definitely are not. Some of the pain coming clearly from the OMCs, HPCL, BPCL, and the energy pack overall with quite a bit of weakness. One of those factors could be an Avendus Spark note, which has turned negative on oil and gas sector, unequivocally negative. They're very clear. They're saying reduced rating on BPCL, sell on HPCL and IOCL because of global disruptions and quite a few other reasons. Mihika, in fact, joins us to break that down. What's making Avendus Spark bearish on this space, Mihika?
Yes, they've turned negative, reduced rating on BPCL and a sell rating on Hindustan Petroleum and Indian Oil. Now, global disruptions did lead to a spike in the diesel cracks and the gross refining margins, but the brokerage notes that this is not sustainable and the risk-reward ratio is now not favorable. Their math suggests that the gross refining margins could range in the $12 to $14 per barrel, and the decline in the high spirit diesel cracks will lead to the margins going to the $20 range, and this will later play out. They're talking about inventory across key markets like the US and Singapore, which are trading 10% higher in the last month. Europe diesel imports are also down on shutdowns and the Red Sea issues. And in terms of the impact of the Red Sea disruptions on the spreads and the cracks, the maximum impact has already been seen. However, the brokerage does see the impact to reside in the new term.
So a negative report there on the oil and gas sector. Red Sea disruptions definitely one of them. An interesting update on Saudi Aramco as well, just to understand what's happening in the crude space. They've actually postponed some of their capex, and an uncertainty is coming in on what crude demand is going to look like. Sudeep, I just want to come to you very quickly on the fundamental view on the OMC space. And frankly, there are conflicting reports out there. Just yesterday, there was a report re-rating it upwards, the entire space. So there are different views coming in. What's your take?
That makes the market interesting. Of course, there are different views. The way I look at it, I'm not negative, or I don't hold the view which Avendus is sharing. I believe that they both HPCL and BPCL do look good. There are multiple reasons. I think primarily they have significantly improved their performance, and they, to be very straightforward, the interference on their activities have reduced significantly, and that gives them a large leverage as far as market operations are concerned. Also, we have seen no interference by the government as far as petroleum pricing, product pricing is concerned before the state elections, and we believe that the same will continue even for the central government elections. And of course, the oil prices are also in a range which helps this particular non-interference. Under the circumstances, the way they are earning the margins at this stage, and if the prices are not reduced in the near future, I think we are looking at an excellent set of numbers from all oil marketing companies as well as the refining companies. So whether you look at the standalone non-marketing refiners like Chennai Petroleum or the other ones, or MRPL for that matter, I think they have performed exceedingly well in the recent past. As far as HPCL, BPCL, IOC is concerned, they are refining as well as marketing companies. And again, they have everything going for them. So we are positive on this entire sector. And we see no reason to have a sell rating or a bearish view on this.
Just a quick follow-up there, Sudeep, because you seem very sure that petrol, diesel prices will not be cut ahead of elections. For the 3 states, perhaps that is what happened. You know, with a kind of an election rally or an election push, which will leave no corner unturned or no stone unturned to ensure a good number of seats with a victory for the BJP, why are you so sure that petrol and diesel retail prices will not be tweaked?
Well, I think you have to balance it out, and government probably is looking at that balancing. At different points of time when the prices had gone up, the marketing companies and oil companies were not allowed to raise it to that level. So I think the government is allowing them a breather and tinkering with that when this entire Red Sea conflict is so hot. And at any point of time, there can be flare up in oil prices, may not be a prudent idea. Because if, at this stage, the oil marketing companies are making money, but if suddenly oil spikes up and they are not allowed to raise the prices, so they will have to be given a window of opportunity for making money so that they can cover that. I think these are the calculations which is working. And to an extent, I would say the body language and the way the government has been handling even the vote on account, I think they believe that they don't need to take any populist measures for the votes.
It's an interesting perspective. Very quick technical view, Jay, on some of these counters, HPCL, BPCL and IOC, all of them, quite beaten down today, with the rest of the market, of course, but definitely leading that pain.
Yeah, see, the rally for the OMCs that started from October of last year, that's done. And they are in for a short to medium term correction. I expect BPCL to drop somewhere close to 550 and HPCL to drop somewhere close to 450. And my thesis for Brent is that, along with equity markets correction, Brent is dropping below the 2022 low. So if that were to play out, I think that will be beneficial for OMCs in the medium term. But there is an alternate possibility. If Brent were to close above 84.75, 85.25 and sustain there, there's a serious risk for crude to spike to somewhere about $200. So that's not my primary thesis. But if that were to happen, I'm open to that possibility. But keep a keen watch on this. So in that case, it will have a debilitating impact on these OMC names.
$200. I mean, the trend has not really been in that direction, even with the Red Sea crisis, etc. But yeah, a bit of a bearish sentiment on those stocks. Stay on with us. We're going over to an exclusive story right now. It's the latest in the ongoing Paytm saga, where sources tell us which entities are vying for which slice of the pie as far as Paytm Payments Bank is concerned. Pragati Oberoi there with all of those exclusive details. Pragati.
Thanks so much for giving it to me, Tamanna. Yes, now ever since Paytm has shifted its nodal account to Axis Bank, everyone has been thinking that what happens to the other businesses of Paytm's, and that's exactly what we are bringing to you. Paytm Payments Bank is in our focus in this NDTV Profit exclusive. We're going to take a look at 3 main businesses or workings of Paytm Payments Bank. One would be the banking partner. Let's have this over on our screen for the benefit of our viewers as well. One would be the banking partner, the other would be the FASTag business, and the other would be the NCMC business. Now, as far as the banking partner is concerned, this would be about the UPI transactions, rather the back end of the UPI transactions. Sources have told us that Paytm Payments Bank is in conversations with a lot of banks, but these 3 banks, that's the Yes Bank, Axis Bank and HDFC Bank, are the front runners in becoming the banking partner with Paytm Payments Bank. And if or whenever either of these banks take over and become the partner, the VPA, that is the virtual payment address, which was at present of Paytm would also eventually change to that of the banking partner. Next, let's take a look at the FASTag business. Sources have told us that IHMC, or the Indian Highways Management Company, is the one that's been given the charge to drive the distribution of Paytm's FASTag business. Sources have confirmed to us that IHMC has divided 248 toll plazas of Paytm Payments Bank among 9 banks. Among these, the top banks have become HDFC Bank, Yes Bank, IDBI Bank, IDFC First Bank, Kotak Mahindra Bank, and 4 others. We are yet to get a clarity on the other names. Let's take a look at the NCMC business. Now, NCMC business, sources are telling us that while conversations are on with several banks, most likely the business or the front runner in this aspect is going to be the State Bank of India. While we are not yet certain as to what level of conversations are happening, we are yet to assess the impact as to where this business goes and to whom it goes. Now, let's also take a look at what other entities are doing. This includes the non-bank lenders, because they were in partnership with Paytm Payments Bank and rather Paytm as well. And there are other payments bank as well who are seeing this as an opportunity to capitalize on the merchants and the customers. If we take a look at the Airtel Payments Bank business, sources have told us that the bank is eyeing an integration of Soundbox, QR code and current accounts and trying to target those customers, because they think that rather than other players who already offer QR code or a Soundbox, but having the USP of current accounts can set them apart in this particular domain. They're also looking at secondary banking accounts. That's the strategy that Airtel Payments Bank is focusing on. Another thing that we have is the non-bank lenders. Like I mentioned before this, non-bank lenders were already in partnership with Paytm, but as of now they're still in a wait and watch mode, because they want to wait and understand as to when will Paytm start its lending. Let's also remember that after RBI imposed curbs on Paytm Payments Bank, in an analyst call, Paytm announced that for the timing they're halting on the lending partnership. So Shriram Finance may definitely go and talk to Axis Bank. While conversations have not yet happened, we are expecting them to happen very soon.
Yep, absolutely. Thank you for that, Pragati. A big story there with a whole set of exclusive details on what's happening on Paytm. A quick word from Jay and Sudeep on a stock which is stuck on the upper circuit. For the first several days after the story broke, it was on the lower circuit. Now it's quite reversed. Sudeep, fundamentally, is there anything really to look forward to as far as 197 shareholders are concerned? All of this is, of course, with the payments bank, but why is the stock on an upper circuit?
I don't think there is anything to get really excited about. I think they have a huge problem. They are just distributing the business amongst multiple other players so that there is an orderly transition the way RBI would have envisaged. I don't think this gives reason to really get excited about the Paytm as a listed script. They have a challenge. They have a huge challenge going ahead to rebuild stuff which they are losing out, margins and businesses which they are now giving away to multiple other players. I really don't recommend anybody getting into this from an investment point of view. I mean, trading, maybe yes, but as far as investment call is concerned, I think I will refrain from touching it.
Okay. 10 minutes or 8 minutes left for the market close. By the way, Jay, let's first get your closing idea. Then I have a question on the stock that you were very bearish on. But first, the closing idea.
Yeah, I like Shobha Developers, and it looks like it's got further higher highs to come through. So from a very short-term perspective, I would place a stop loss of about 1440 and expect it to touch about 1550. So bullish on Shobha Developers, and there's a conditional short on Reliance. If and only if the stock were to break 2907, I would go short, and probably that level is probably coming tomorrow, not today.
Okay, so tomorrow if it breaks, you said 2907, then you would go short. The timelines for these calls, Jen, is about 5-7 days?
Yeah, exactly. That's the typical timeline for this, and I should give that much room. It could come quicker, but it's ideal to give that much amount.
Okay, and just wondering, you had given a short call on Titan. Did I get your targets there? I didn't get your targets, because usually a very strong stock. The quarterly numbers for the jewelry companies haven't been too bad. The peers are doing well. What's the target that you have for this?
Yeah, I have an objective of about 3,200. Bullish on this on a medium term. Probably, it's an incomplete move from a say 2 to 3 months time frame. but sizable short-term opportunity here. Corrective target above 3,200. Could drop to even 3,100, but conservative to stay with 3,200.
Sudeep, the last few days, some of the aviation stocks have come off after the notes that came in around how the Jan passenger traffic has actually come off quite materially related to what it was. GMR Airports is sulking today. We've seen Indigo and a couple of others too coming off. If crude moves up, that's another problem maybe for some of these. What are your thoughts on this 3 or 4 scripts within this pocket?
Well, Neeraj, I've always been a little skeptical of airline stocks. Globally, I think very few airlines have consistently made money. Maybe only Singapore Airlines. And, we have too many variables. And I think things are in a flux at this stage. Yes, Indigo has been doing well for the last few months and there have been record passenger traffic. But, there are challenges. As you rightly said, the crude oil prices may go up at any point of time. There is a limit to the capacity and they have probably reached that. So to continuously provide, improved earnings quarter on quarter from the current level may not be feasible. And I will be extremely careful as far as airline stocks are concerned. GMR Airports is a good story, but I think they've reached a level where one needs to be a little cautious.
Okay. Sudeep, just one question. The numbers for some of the broking companies or asset management companies or a combination, right? I mean, Motilal Oswal trading at dirt cheap valuations while the growth is starting to come back. Angel One, exceptionally strong growth, platform business, giving a high dividend but is looking to raise funds. I couldn't for the life of me figure out why is it that a company which is reeling in cash, wanting to raise further cash? I mean, is it to take advantage of the higher valuations? And then some others too. My question to you, Radley, is that do you like any particular pocket of this asset management stroke broking business?
Like Motilal Oswal, you absolutely outlined the correct point there. It's available at a valuation which is much more reasonable compared to many of the peers. Now, Motilal Oswal has a combination of businesses. Angel One is a pure play platform. So Motilal Oswal, you get the multiple business and their positives also. And of course, the valuation is very reasonable. The other stocks I like is CDSL. But it's at a valuation which is the margin of error is very, very limited. But otherwise, CDSL is a good buy from a long-term investor's point of view. The entire financialization of savings, the upside, and also with insurance policies getting into dematerialized mode, the CDSL will be definitely a big beneficiary.
Absolutely. Just a few minutes to go before we close up the markets on a negative note. We've managed to stay above the 22, actually, no, you've dipped quite a bit, but you've managed to stay at least above the 22,000 mark, about a percentage down, 166 points down. My question, Jay, is what would you do with your set of PSU stocks? And let me zone in on a Coal India. Coal India has been showing quite a bit of pain after an analyst call saw the management really cutting their guidance and their targets. Do you think this is a level at which you'd want to accumulate or you'd wait for more?
Definitely, I'll wait for some more. Just like the OMC names, the rally for Coal India also from the August lows of last year, it looks done. And I anticipate a sizable correction of about 15% to at least come through for this. Bullish in the medium term, but there is a sizable correction, a corrective play that's possible here. Probably a drop towards 340 would make it attractive.
Okay, gentlemen, we leave it at that. Sudeep Bandyopadhyay, Jay Bala, appreciate your time today and your insights. Looking forward to talk to you next week as well. That's the view from our experts, but we are very close to market closing. And mind you, it's afternoon that has gotten a bit painful because we're now closing virtually in or around the low point of the day, above 22,000, but just around those levels. The mid cap and the small cap indices will also come up on your screen just to show you 1.27% lower for the mid caps and the small cap index about 0.77%. The market breadth doesn't look as bad, by the way. Just before we get to the heat map, the market breadth, well, it's about 1:3. So yes, actually the yawning gap and almost similar to how we were, about 10-15 minutes into the start of the trading day today. Bring up the heat map, and yes, the larger story is outside the index, but let me mark what's happened on the index. Tata Steel up about 2%, SBI, IndusInd, JSW, a handful of stocks. It's actually pretty similar to how it was when we started off. Just the fact that even the steel stocks have come off. Tata Steel is holding out for, but JSW and the others too have come off a little bit. And then overwhelming sense of red. But must say 0.8%, 1%, par for the course on any given day. BPCL closing in the lowest point of the day, and the likes of HP and IOC also are following suit. But must say that 4 out of the top 10 losers today are in the PSU space. I reckon the Nifty PSE ETF 2 could have taken a bit of a hit today, because I even see an ONGC out there in the list of losers. So therefore, very likely that the PSU ETF might have taken a bit of a hit today. But the real story outside the index, the kind of cuts and maybe some of the kind of gains for stocks like ABP.
Absolutely, Neeraj. You know what's also interesting to note is the slide back that HDFC Bank has done in just a couple of sessions. So whatever relief the market felt was coming in from the management speaking out seems to have retraced. And when your heavy hitters feel this kind of pain, so does the index and the broader markets, and that's probably what we're seeing. But you know, you're absolutely right that there are counters which have seen a lot of pain today, and many of them in the PSU space. And you know, if you pull up your Nifty PSU indices, you will see that pan out very, very clearly. Broadly, the Bank Nifty didn't do too badly. Yeah, those are some of your top losers in that index. Your BPCL, Bharat Heavy. Okay, BPCL and HPCL, etc. Your IOC, fine. A couple of negative reports out there, perhaps. But overall as well, you're seeing that phase. If there was one spot of green, I would say it's Realty, which has been holding up remarkably, really. And let's pull up the NSE Realty Index and its components as well. Sobha up nearly 7% today. DLF at one point in trade today hit its lifetime's high. Brigade, etc. All of them doing extremely well. A couple of stocks which have been on the radar. ABB, a company that Neeraj also spoke with. That management, good numbers, good results, and yeah, let's see where it's closed. ABB is closed about 11% up on a day when the rest of the market is definitely cracking. Should we really not mention Z before we close? I think we'll just have to, because look at the seesaw, down about 14% on that stock. And what is hovering around the company news-wise is frankly worse than even the deal being called off, because if SEBI is investigating problems on the balance sheet, that's going to definitely be an issue. So you've set for perhaps a weekday of trade. Neeraj, the question is, will you see some kind of recovery tomorrow? And maybe a lot of cues from the FOMC minutes, which will be out later tonight, India time. Yeah, and the fact that the US markets are coming back after a day of close, and they are not particularly starting strong, so what they do might have a big bearing as well, as they always do. But interesting day, maybe warranted somehow. Let's see if this continues tomorrow. But on that note, from Tamanna and me and the team that has put this show together, thanks so much for tuning in, and have a great evening.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dream?
Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. Today we're going to ask a very simple yet fairly complex question on the Mutual Fund Show. How do you choose your mutual fund scheme? And it may sound like a very basic question on the face of it, but the fact is that it's not. You have to keep so many things in mind, not just your own requirements, but also the various kind of schemes out there. Do you want to go active? Do you want to go passive? Do you want to invest directly? What's your fund manager's track record? What is the churn rate of that fund? What is the Sharpe ratio? Now, I'm joined today by Aditya Shah, founder of Hercules Advisors, who actually put out a very interesting thread on social media. And Aditya, that's exactly where I thought we should, add all of those points and amplify them on the Mutual Fund Show as well. I found that thread interesting because it laid down some of these basic questions with such clarity, and those are truly big ones. Now, let's start with understanding why it's become tougher now than ever to choose the right mutual fund scheme. Is it because of a whole explosion of choices as well?
Absolutely, Tamanna, you are bang on. Zerodha is coming in, Sampo has come in, Helios has come in, and a whole host of mutual fund houses are coming in. So the problem really is there are thousands of schemes available, just like medicine. You don't know which scheme to select, what to look at when you are selecting a mutual fund. So there is a thorough process that I have devised for all our retail audiences that I put out yesterday, where you need to look at the fund manager's track record, churn ratio, Sharpe ratio. These are all some of the important factors that you need to really look in. Generally, what retail investors really do is, no, we don't want to go with a regular plan. We want to do a direct plan, and they end up choosing up the wrong scheme. And the cost of choosing the wrong scheme is tremendous over a longer term. So you need to go through a fixed process when you are selecting a mutual fund. The process, as we go on, we will discuss. So yes, it is becoming more and more difficult as explosion of mutual fund houses as well as mutual fund schemes come in, and you need to have a well laid down process about how you select a mutual fund.
All right, so let's start with the process, and that's thank you for that context, because it's truly not as simple as it seems. So the very basic understanding would be that active versus passive. If you're a newbie or relatively newer investor going for a passive fund, it's safer. If you have a bit of experience going for an active fund, but it's not as simple as that, is it?
Yeah. So the first basic differentiation that you need to do is an active or a passive fund. A passive fund is a fund that tracks the index, in India, the Nifty index or the Nifty Next 50 index. And a passive fund has an active fund has an active fund manager, where the active fund will try to create an alpha over the index. So what you need to really do is, you don't know whether an active fund or a passive fund, which one will outperform. So what you need to do is you need to create a portfolio where you have both active and a passive fund. You can decide the proportion of active or passive fund. 50-50 is fine, 60-40 is fine, but that's your call. But you cannot miss both the boards. You have to have both the boards inside your portfolio, a passive fund and an active fund. An active fund, the drawback of an active fund is there will be some years when they will underperform. but the upside is there will be some years when they will outperform. So a mixture of active and passive fund. If you are really very young, you need to be very aggressive on the active side of it because you are taking a call that a good fund manager can outperform. As time really goes on, as you get older and older, passive funds should start to dominate your portfolio and the proportion of active funds should really come down in the portfolio.
What is your cutoff for young and old? I mean,
yeah.
you know, because you have to go by this statistically. And you could be someone who maybe, Aditya, you will not define as young, but who is relatively newer to investing.
Yeah. So how I define young and old is up to the age of 35, when you are able to take huge risk in the market, I define it as young. From 35 to about 55, I define it as a middle age where you are accumulating wealth. At that point in time, your mutual fund scheme should already have been decided. And now you should be doing a disciplined and a consistent SIP into all your equity schemes per se. And after 55 is really old when you are trying to wind down your equity mutual fund investments. And then you are moving on to a debt product or a fixed deposit where you need to create by the time you are 60 and you retire, you need to create a fixed flow of money into your kitty for your retirement purposes. So at the time when you are really very young, active funds, in my opinion, should start to dominate your portfolio.
Okay, the other interesting aspect I found in the process that you've mentioned is whether you go through an advisor and invest in a direct fund or look at a direct fund yourself. At what point can you make the judgment, okay, I have enough information, enough knowledge to invest in a direct fund?
See, what really happens is only 1% of the total public should go and invest in a direct fund, but it is the exact opposite. People are governed by the fact that we are able to save expense ratio, so we want to go and invest in a direct fund. That's not how people should approach it. People should approach it in such a way, are you able to understand what the fund manager strategy is? Are you able to understand the churn? Are you able to understand what is the Sharpe ratio? Are you able to track the mutual fund 6 monthly and see how the fund manager's performance is? If you are able to do all of these things, then you should be moving to a direct plan. If you are not able to do all of these things, then you have two options. Those two options are, one, you could go to a SEBI regulated, SEBI registered investment advisor who could charge you some bit of money and then still put you in a direct plan. If you are able to do that, you will be able to save a lot of expense that you have got. The other way around is you can go to a mutual fund distributor and he will put you on a regular plan. He will look after all the portfolio that you have got and suggest as per your risk profile about how you want to go ahead and invest. So these are the two options through which you should be investing. Don't go straight away and invest in a direct plan and invest in 20 schemes because you don't understand the market. What you have to really do is either go to these two branches or straight away pure play, just invest in an index fund. There is no regular plans in index funds. Just pure play invest in index funds. But for active funds, you need to compulsorily have an advisor who understands the market, understands the fund manager, and understands the scheme properly as per your risk.
Aditya, a couple of terms you mentioned, and I think it's only correct that we spell these out for our viewers. And whether you are going through an investment advisor or yourself, I think these are things that you should keep in mind. One is the fund manager's track record. You talked about the Sharpe ratio. What is that? The expense ratio. How much should it be and where should you look for that information, as well as churn? Let's quickly go through these 3 or 4 concepts.
So a mutual fund fact sheet is a very, very important aspect of a mutual fund scheme. Every month, all mutual fund schemes publish this fact sheet. What do you find in this fact sheet? In the fact sheet, the most important thing is the fund manager and a fund manager's name. So you identify your fund manager from the mutual fund fact sheet. The portfolio of the scheme that you are investing in, the top 10 to 15 names of the mutual fund portfolio, which comprise about 60 to 70% of the holding, can be found there. The next important thing is the churn ratio. So what is the churn ratio? A churn ratio is how much the mutual fund manager is buying or selling in a year. The transactions. Some mutual funds have a churn ratio higher than 100%. So what that means is at the start of the month, the portfolio that they entered with, they don't have that same portfolio at the end of the month and they are buying and selling constantly. What we need to really see is mutual funds where the churn ratio is really low. The fund manager is investing for the longer term and not churning way too much just to show the performance. So lower the churn ratio, the better it is, the better the mutual fund is being a long-term investor. These statistics do not need to be calculated by the retail investor. These are readily available in the mutual fund fact sheet. The next important point that you need to monitor is Sharpe ratio. While evaluating a mutual fund, you just don't need to look at the returns. You need to look at the risk-adjusted returns. What that means is the return that is adjusted for the risk that the fund manager really takes. A Sharpe ratio higher than 1 is really very beneficial for investors. It means that the fund manager is taking lower risks than the index while generating higher returns than the index. So always look for Sharpe ratios which are higher than 1, and those mutual funds over a longer period of time, if they are able to maintain a Sharpe ratio of higher than 1, is really very beneficial for the investor. The last point that you need to look out for is an expense ratio. Expense ratio is the fees that the fund manager is really charging for managing your money. For a direct plan, the SEBI has standardized all of these expense ratio. On a direct plan, the expense ratio varies from 0.4% of the AUM to 1.2% depending on the AUM of the mutual fund. On a regular plan, it varies between 1.6% to as high as 2.5%. So you need to see where your mutual fund is. Higher the AUM generally, lower the expense ratio is. But higher the AUM, the fund manager also finds it's really very difficult to deploy all of his money. So all of these 3-4 parameters can be found out within the mutual fund fact sheet, and all mutual fund houses and all mutual fund schemes publish this every month and can be found on the mutual fund schemes website.
This sounds like I said, this is a simple question, but the answer is not that simple. These are things that we very usually overlook. So I think it's important that you're highlighting them in such a clear and simple fashion, Aditya. Let me now come to the process. At the start of this conversation, you said that there is a clear process that should be followed. And is that something that you have codified? What would be that process as per you?
So this is a process that I have developed after 12 to 15 years of investing myself, as well as advising clients. So the number one thing that you need to watch out is the mutual fund manager who is managing your money. We have ace investors like Shankar and Naren who work with ICICI. We have Rajiv Thakkar who works with Parag Parekh. We have Mr. Prashant Jain who was with HDFC Mutual Fund. So you need to look at the track record of these ace mutual fund managers. They will have 10 to 15 years of track record where they have demonstrated that they can create returns. You need to look at the portfolio and the style of investing. Some of the mutual fund managers exhibit momentum kind of an investing. Some of them do value investing. Some of them do a small capish type of investing. So you need to identify what is the mutual fund manager's strategy. And most likely, most retail investors would not be able to identify this. So for this exact reason, a distributor or a SEBI registered advisor is important. They will be able to identify the mutual fund strategy. Why this is very important is because every mutual fund manager will undergo a process of outperformance and underperformance. So during periods of underperformance, if you understand the strategy of the mutual fund really well, you will stay invested in that strategy and you will not try to look for the next best performing mutual fund. So point number one, understanding the mutual fund manager as well as his strategy is really very important. Point number two is look at those metrics, the churn ratio, the Sharpe ratio, the expense ratio, and the AUM that the fund manager is really managing. Then the last point is you need to look at your own risk profile. When you are really very young, you are allowed to invest in the small cap side of the market. But as you grow older and older, the risk tolerance of going towards the small cap side of the market really decreases, and you need to move towards the large cap side of the market. So the last point is look at your risk profile, and according to your risk profile within each category, try to come out to a best, a good mutual fund scheme.
Aditya, I think of all the things that you've mentioned, the risk profile one may be, my guess is what is being followed the least. because looking at small cap fund returns, everyone wants to get those returns, and everyone wants to take benefit of them, whether they are, as you're saying, young, old, pre-35, post-35, doesn't matter. Look at the kind of investments coming in thematic funds. Look at where the money is coming versus what you are saying. Do you see a large divergence right now?
Absolutely. Retail investors have a herd mentality. So what they will try to do is they will try to chase the best performing fund.
Time for a very short break, but thank you so much, Aditya, for laying out so clearly the process that investors should follow while picking the right mutual fund scheme for themselves. On the other side, we are going to be answering your queries, so stay tuned. I'm going to be joined by Anant Ladha, founder for Invest Aaj for Kal.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the category.
Don't listen to anyone and everyone.
Welcome back. You're watching the Mutual Fund Show. Now, in this section of the show, we answer your questions that you've sent us to speak on this and answer some of your queries. I'm joined by Anant Ladha. He's founder for Invest Aaj for Kal. Thank you so much, Anant, for joining us. Let me jump straight to the first query we have sent by a 24-year-old who says, my income is 8 lakhs per annum and I can invest 30 to 40,000 rupees a month. I aim to achieve my financial goal of creating a fund worth 30 lakhs in the next 5 years. It's from Aditya Tarade. He says, currently I have invested 5 lakh lump sum in Tata Banking and Financial Services Fund. So what funds would you recommend to me? I'm comfortable with 100% equity exposure. Looking at the age, perhaps that's a good, mindset. Anand?
See, going 100 high, firstly, very happy to be part of this show. Looking at the age, looking at his aggressiveness, his portfolio is quite balanced, I should say. But but his purpose is to reach a goal of 30 lakh by an age of 35. I think with an investment of roughly around 26,000 per month, and his present lump sum investment of 5 lakh, if he manages that fund properly, he'll be able to reach his goal very comfortably at an CAGR of 12%. Now what he can do is, for his balance SIP, which he want to do, he can frame some other goal. Probably he want to buy a home, a car, a vacation, or maybe plan for his retirement well in advance, and he can do proper planning and start his investment separately and in a proper way, keeping a goal in mind. Having a goal is very important, and if you feel that you have some extra money which you can save for another goal, it's always better to map it to that goal and plan it accordingly.
All right, so that's good advice there. Let me quickly take the next query, and I'm trying to take as many as I can, as fast as I can, because we want our viewers to see their questions on the show. Zaid has written in, he's 28 and says, I currently have SIPs of 10,000 rupees a month in equity funds. He's mentioned his current holdings as well: HDFC Defence Fund, that's 3 lakh rupees, UTI Innovation Fund 3 lakh rupees, SBI Energy Opportunity Fund 2 lakhs, and HDFC Technology Fund 1 lakh. He also has a 50,000 rupee investment in the Axis Small Cap Fund. So he says, my stock portfolio is worth 27 lakhs with 38% returns, and I can invest an additional 50,000 rupees. My goal is to retire by 35. What should I do? Zaid, first of all, what a goal to retire by 35. You have to think about what you will do if you retire by 35. But having said that, very impressive portfolio, don't you think, Anand, at this age and with the kind of investments?
So he has taken a lot of sector funds and a lot of sector calls, and I'm very happy that it's working out for him. And he wants to retire by an age of 35. There is a very interesting principle known as FIRE. Financial independence, retire early. According to that principle, if you want to achieve a state of complete freedom, at an age when you are planning to retire, what will be your expenditure for per annum? At that age, you have to calculate that first and multiply it by 50. That is the amount of corpus you need to have before thinking of retirement. For example, if at an age of 35, his annual expenditure is maybe 10 lakh rupees, then he have to multiply 10 lakh by 50. If he has that corpus of 5 crores, then he can plan for retirement. Otherwise, he should probably revisit his goal and plan accordingly. Presently, he's working a lot of on a lot of thematic funds to give his portfolio a bit of stability and overall exposure. He can probably add a few multi-cap fund and maybe a large and mid-cap fund, which will give his portfolio a bit of stability as well. I know his theme have been working out well for him right now, but it's always safe to have some defensive bets also, and then and maybe some index bet also. For example, he can add Nifty 50 equal weight fund in his portfolio, which will give stability to his portfolio, so that his portfolio is properly diversified and taken care of even during difficult times.
All right, very quick question and answer, because I have little time left, but I don't want to let Harshit's question, just go to waste. 28 years old, SIP of 12,000 rupees a month. He's mentioned his fund categories. I'm not going to read them all out because they're on the screen as well. But he wants a 12 to 15% CAGR in the next 7 to 8 years. Now, you have that detail with you, Anand, so I will not repeat it. It's there on screen as well. What is your advice?
Firstly, very happy to see that he is investing a good amount of money in flexi cap and large cap, and he is accepting that in 7 to 8 period horizon, 8 years of horizon. Having good exposure in these cap is better. Probably instead of large cap, he can move to an index fund. And instead of Nasdaq 100 FOF, he can probably have S&P index fund, which will give him better exposure of foreign markets. Rest, I feel his portfolio is well balanced. And if there is no Six Sigma event, probably he'll be able to get a decent 12% CAGR on his portfolio with his given time horizon.
All right, great quick answers over here. Thank you so much, Anand, for joining us on the show. That's all the time we have. But do send in your queries to us on the Mutual Fund Show. That WhatsApp number is on the bottom of your screen, and with the detail that will help our advisors give you the best way forward. That's all the time we have for today, but stay tuned. A lot more coming up on the other side of the break on NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show.
Nifty and Sensex snapped the 6-day gaining streak. Broader indices fall for second day in a row. Most sectoral indices close in red. NDTV Profit exclusive. Paytm Payments Bank in talks with several banks for banking partner. NCMC Business and Fastag Business sources told NDTV Profit. Strong outlook for ABB India as margins hit a new high and the stock surges over 10%. Exicom Telesystems will float its 329 crore rupee IPO with fresh issue of equity shares on 27th February and an OFS up to 70.42 lakh equity shares by promoter Next Wave Communications. Farmer protests in Delhi intensify as farmers form human chains at the Shambhu border, demand a law on MSP. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, we bring you the market news along with national and international headlines in this 4 p.m. show. But before we delve deep, let's take a quick look at how the markets fared during the day. My colleague Neeraj Shah joins in with a quick wrap of all the D Street action for you.
Well, the markets had a bit of a dull day today. Maybe given the global cues not that supportive and the fact that we've been hitting new highs. So a bit of a pause or a bit of a corrective move, but closing above 22,000 if that is any solace. The bank Nifty led by HDFC Bank maybe sulking, but SBI doing okay. Kind of fared a bit better than what the index, but the main index did, and courtesy SBI and some others. But the mid caps and the small caps, and the mid caps in particular, had a large corrective move, so 1.25% lower. Small caps are okay, and as a result of which the market breadth looked a bit adverse. 1:3 in favor of the declines at close, 582 to 1401. So nearly 1:3 in favor of the declines. Now, get the heat map from the Nifty first and just show you what happened at the large cap end of the market. Some metal stocks did okay, the likes of JSW Steel and Tata Steel, and a bit of gains for IndusInd Bank and State Bank of India. But the losers, and a lot of PSUs there today. So BPCL was down about 3.73%, NTPC down 3%, Coal India 2.8%, Power Grid 2.78%. Hero has a tactical sell call by Morgan Stanley. This stock is down as well. OMCs fell because Avenda Spark, for example, has come under the note when they are negative, and therefore if you saw what BPCL, HPCL or IOC did, there's a large corrective move that we saw in some of these stocks. So grinding lower today and ending at the lowest point of the day, which is actually a bit of a worrying sign from a trader perspective who's long. But be that as it may, maybe people turning a bit cautious because of high crude prices or what have you. But these stocks, which have run up very strongly in the recent past, saw a bit of a corrective move today. What also corrected today was aviation, for example. Some of the aviation-related stocks, SpiceJet was down 3.5%, GMR Airports was down nearly 5%. Interglobe had about a slightly corrective move as well. So these two came under a bit of pressure. PSUs by and large came under pressure today. So it was not just the oil marketing companies. If you look at the PSE ETF losers list, you will see BPCL, there you have on your screen, you will see BHAL, NMDC, Power Finance, Oil India, REC. So a lot of moves coming in there. The lone star, to my mind, which did really well was ABB, and which had a big strong move today on the back of results and the commentary that the management gave, up about 10% at close, 10.6% on close. So really strong show by this one in an otherwise faltering market.
That was the market wrap for you. Now on to the latest in the ongoing Paytm saga, and this is another NDTV Profit exclusive for you. Mind you, we've been bringing you latest updates on Paytm and the entire Paytm Payments Bank issue, mostly at the forefront of the news. Now in the latest, sources tell us which entities and mostly banks are vying for which businesses of Paytm Payments Bank. Now, depending on what sources have said, we know that conversations are on at three main fronts. Let's quickly bring those up on our screen for the benefit of our viewers. Now, the three main fronts that they are looking at are the banking partner, FASTags and NCMC. Sources told us that the banking partner would be for UPI transactions. They also said that the three banks that are the front runners for this, or that the banking partner bid, while conversations are also on with several others, are Yes Bank, Axis Bank and HDFC Bank. These are the three banks vying for becoming the banking partner with Paytm Payments Bank. With this, whenever the banking partner changes, the VPA, that is the @Paytm domain, would also change once the new banking partner comes in. Next, let's bring the FASTag bit on our screen as well. Well, most banks are planning to go for the acquirer side of the FASTag business, and the distribution of this is now being driven by the Indian Highways Management Company. So the 248 toll plazas that were given to Paytm Payments Bank are now being divided among 9 banks, and some big names include HDFC Bank, Yes Bank, IDBI Bank, IDFC First Bank and Kotak Mahindra Bank, among many others. We're yet to get a clarity on what or which the other banks are. For the NCMC business, let's quickly bring the NCMC business on our screen as well for our viewers. While conversations are again on with several players, sources told us that the State Bank of India may be the front runner for this business. On the other hand, if we look at players eyeing this as an opportunity, we also have Airtel Payments Bank. Sources told us that the bank is looking at the integration of Soundbox or QR code and current accounts, because the company thinks that that is one space where it can really capitalize on and give that offering to its users. The company may also be looking at capitalizing on a secondary banking account. Next in this come the non-bank lenders who had partnerships with Paytm. Sources told us that those like Shriram Finance and Poonawalla FinCorp are mostly in a wait and watch mode, because largely they think that while they are okay to work with Paytm and Paytm Payments Bank in the future, they want the dust to settle till there's more clarity from the regulator on this. That was the NDTV Profit exclusive for you. After Paytm, let's move on to another big story of the day, which is Byju's. Now, Byju's says that its $200 million rights issue stands fully subscribed. Sorry, apologies for that. But the founder has urged all investors to participate in this particular issue. We have a colleague joining in with more on this.
We have accessed a letter that Baiju Ravindran wrote to its shareholders. This came in late last night, but Baiju has said that the rights issue worth about $200 million has been fully subscribed. But the caveat here is that not all investors have taken part in it. So in the letter, Baiju has basically urged all investors to actually plow in more money and take part in the rights issue. He has also said that at this point, investing in the rights issue may seem like a Hobson's choice. So for those who don't know, it's basically Hobson's choice basically refers to the illusion of free choice. So it might seem like it's mandatory or compulsory to participate in Baiju's rights issue, but he said it's the only way to sort of prevent permanent value erosion. He also said that the rights issue will help preserve and build greater value for all shareholders. And he placed commitment on the fact that he has always placed his interests aside when dealing with Baiju's. He said that the $200 million will take care of all the liabilities that the company is currently servicing, as well as future growth capital. What else was interesting in Baiju's letter to the shareholders was that he will appoint two non-executive directors on the board. Now, the board is currently run entirely by his own family. It only consists of his wife, him, and his brother. So, and also the fact that they will be doing an FY23 audit that's set to close by this quarter. So, interesting developments at Baiju's coming in that we'll continue to track.
Well, indeed, a big update coming in for Baiju's. Let's also take a quick look at primary markets. Now, primary markets sure have been busy with a lot of companies taking a call to go public as well. First, in the EV space, now we have Hexacom Telesystems, which has filed for an IPO. My colleague Saloni brings us all the details on this.
Right, Pragati. So Hexacom Telesystems is going to launch its IPO next week. It's going to be open from February 27 till 29th. It's the first by a pure play EV charging solutions company for that matter. And the issue comprises of a fresh issue of rupees 329 crore and also an offer for sale by its promoter Next Wave Communications, which is of about 70.4 lakh shares. Now, to understand the promoter holding, Next Wave Communication holds 76.55% stake. This is obviously pre-IPO, which will change post the IPO, and also HFCL, which is part of the promoter group and which is also a listed company on the stock exchanges, owns about 7.74% stake and is not looking to sell any stakes through the IPO. Now, the proceeds from the share sale will be used for setting up production lines at the company's Telangana manufacturing unit, and they're also planning to use the proceeds for investment in R&D and repayment of debt, as well as supporting working capital requirements. Now, the business, if we talk about, as it's an EV charging solutions company, along with that it has two verticals. One is EV charger solutions and also the power solutions for that matter. So we'll be, the price band is not announced yet, expected to come out tomorrow. So we'll be bringing you all those updates as well.
Thanks, Saloni, for bringing us those updates. Let's move on to the fintech space once again. According to the Fintech Association for Consumer Empowerment, fintech companies doling out small value loans has continued to rise and cross the 50,000 crore rupees mark. My colleague Mimansa joins in for more on this.
Yeah, hi Pragati. So small value loans dispersed by fintech companies continue to rise in the underserved regions, primarily tier 3 cities and beyond. This is according to a report by FACE, a self-regulatory body for fintech companies. As of September 2023, the outstanding value of fintech personal loans stood at rupees 55,353 crore. Fintech loans are rising on 3 metrics: ticket size, bureau vintage, and risk chain. So nearly half of the sanctioned loans are coming from borrowers with ticket sizes less than rupees 50,000 and bureau vintages of more than 5 years and mid-low credit risk. While average ticket size for fintech lending is rupees 10,000, the ticket size is higher in the urban areas. Overall portfolio quality is also improving for urban and female borrowers as of September 2023. This is what the FACE report has highlighted. The report has also highlighted that the share of mature borrower base is rising in fintech lending, lending, the share of mid-low credit risk borrowers increased to 59% in April to September from 36% in FY19. One interesting point to note here is that in rural areas, the share of digital loan borrowers is increasing, but it is also a function of migration in the urban areas, which means that migrants settled in urban areas, they're availing fintech loans, but they submit their permanent home address in the rural areas. So states like Bihar, Himachal Pradesh and Uttar Pradesh have a much higher percentage of rural fintech lending, plausibly as migrants from these states in urban areas access fintech loans.
Right, thanks so much for bringing us those updates from that FACES report. Now, Government of India has recently approved an 8,500 crore rupee worth outlay for a coal gasification project. Our colleague Vikas Srivastav had the chance to speak to the Ministry of Coal's additional secretary about the new scheme.
The Government of India has approved a scheme with an outlay of 8,500 crores to support viability of coal gasification plants in the country to achieve Atmanirbhar in a large number of chemical products in the country which are not being currently produced, and we are import dependent. With a twin objective, we have abundance of coal, and we want to use that, and we also want to find a diversified use for coal other than for thermal power production and steel making. And also we want to ensure that the country is becoming more developed.
So government has this plan of getting 100 million tons of coal gasification by 2030. Now you have given a timeline of 5 years even for demo plants. So by that logic we are going up to 2029. So do you think that 100 million ton is obtainable or achievable?
See, we are not giving, that's a demonstration plant is another category for small plants. But the larger projects, we are giving maximum of 5 years. I know it all depends between 4 to 5 years. If people can actually do 4 years. Now we also have, the Coal India is going to set up a couple of projects, and the private sector if it comes up. I think we will be having anywhere, we may not be achieving 100 million ton by 2030, but we should be using large amount of coal for coal gasification.
Well, now on to a quick update on retail sales. Now, retail sales were sluggish in January as most categories witnessed minimal growth. And this is according to the Retailers Association of India. The sales increased by 5% compared to the same period last year. Categories other than jewelry, food and groceries saw somewhat growth. A survey by the association showed that the sales of consumer durables dropped by 1%. And that's also for the benefit of our viewers on our screen as to what the January retail data has to show us. Now, my colleague Neeraj Shah also spoke to Sanjeev Sharma and TK Sridhar of ABB India about whether the gains in the execution that the company saw in calendar year 23 are here to stay.
As we have been interacting for a number of years, only recipe we have is to stay consistent with what we do, which is to continue to grow and localize our 18 divisions, continue to expand in multiple market segments which are growing quite well in the country, and continue to go into new geographies with a focus on localization so that we are competitive and can reach out to the most customers. So I think that's what we have been very consistent with over a period of time, and added to that, operational efficiency shows up in our results.
Yeah, and I have questions around that for Sridhar, but Sanjeev, just a follow-up to this. Order inflows, right? Because that's what everybody's looking at a point of time wherein private capex is moving a bit, not moving a bit, largely funded by government or largely followed by government. But your order flows for Q4 surge. Q3 was 14%. That was par for the course. You've done 35%, if I'm not wrong, in Q4. Now, what is this? Is this a trending piece? Are you seeing more signs of private capex coming to the fore, which is aiding your flows, and is this something that is likely to sustain, if not the exact number, but the mood into calendar year 24?
So Neeraj, as far as our books are concerned and our focus is concerned, most of our customers are industrial customers. And most of our customers are also the value adders in the market, which is serving different customers and the market segment. It could be our customers who are the contractors to the government, or they could be supplying some machinery and equipment to infrastructure projects, or it could be going into industry directly. So all these segments have been doing well. As far as we are concerned, in quarter four, we did have a large order, wherein we had an order from the railways for our traction equipment. So that's into the mix of quarter four. But otherwise, as far as the base orders are concerned, I think they continue to track well for us.
That was ABB India's management for you. It's time for a short break, but please stay tuned because we have lots more lined up for you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching The Reporter. Now let's take a look at another big story, the India-UK FTA. Now, in an effort to finalize the India-UK Free Trade Agreement, an Indian delegation led by Commerce Secretary will reportedly be visiting the UK between 21st and 24th February. With India expected to go to the polls in the summer of 2024 and the UK is slated for the second half of the year, the deal gains precedence for both the countries. Let's quickly go to our colleague Janani for more details on this.
Quite right, Pragati. Now, an Indian delegation is said to be in the United Kingdom as of now, trying to finalize and iron out the differences that have been ongoing in the India-UK Free Trade Agreement. Now, 14 rounds of this negotiations have already begun. This is the 14th round. It began on the 10th of January. And this meeting particularly gains precedence considering how he said both countries go to polls. For India, the moral code of conduct could be imposed any day going forward. So this timing is really crucial. Another mitigating factor, of course, is the fact that the Indian team also had a high-level meeting with the Prime Minister reportedly last week. So this has given a perception that things are in fact concluding or reaching a stage of finalization. At this point, it's important to also understand what are the big asks from both the sides. Now, India is looking to have greater visa access for its skilled professionals who are there on short-term assignments. There's also a demand for lower duty exemptions when it comes to leather, textile, and apparel. And also, India has been asking that the social welfare contributions that are given by Indian professionals when they're on short-term visits be exempted, considering that they are not staying for a longer period to see these benefits accrue to them. When it comes to the UK side, they're looking for duty exemptions on automobiles, on chocolates, on dairy products, and also on Scotch whisky. These are some things that we're hearing. We're also getting to hear that perhaps UK would be seeking for greater market access for UK firms in the sectors of insurance and banking. We'll have to await more details on that. But if anything, this meeting and this free trade agreement gives a chance to talk of non-tariff barriers, such as the CBAM or the Carbon Border Adjustment Mechanism, which will come into effect in 2026. So whether India gets a duty exemption or not, just as much as important that is, so is the discussions on non-tariff barriers like the CBAM. So we'll stay tuned to that story and bring you more as we know better.
All right, Janni, thanks so much for bringing us those details. We have another big story for our viewers now. Farmers from multiple states get back to their protests. The Chalo Delhi March, or the Chalo Dilli March as they call it, heavy security is deployed across the national capital to prevent any disturbances during the protests. Tear gas shells were fired this morning at the Punjab-Haryana border. Drones were also seen flying above the farmers during the gathering. My colleague Aishwarya Jain from NDTV brings us a ground report from the Singhu border.
Well, from today morning, there were appeals and counter-appeals being made from both sides. From farmers, it was requested early in the morning that the police on Shambhu border should remove the barricades, and they would like to peacefully march towards the national capital. On the other side, it is the government of India who had once again appealed to the farmers to maintain peace and should open the dialogues once again. It was Union Agriculture Minister Arjun Minda who tweeted it out and said that after 4 rounds of inconclusive talks, now he welcomes another round of talks. That is the 5th round in which he is ready to discuss about the MSP, about the FIRs that were registered against the farmers earlier, and also about crop diversification and certainly about stubble burning. And soon after that, we saw at Shambhu border, farmer union leaders gathered and they had a long meeting which again went inconclusive. And now what we are hearing is that farmers unions have decided that they will start marching once again from Shambhu border to the national capital. But at the borders, both at Shambhu, at the Punjab-Haryana border and at Singhu border, heavy police deployment can be seen. There had been multi-level barricading which had been put forward by both the police forces of Haryana and Delhi, and they are not being given permission to enter into the national capital. Just behind me are these visuals which clearly describes the story, as there have been multi-level barricading as well as the shipping containers, the concrete barricades and rapid action force Delhi police personnel deployed in large number. We have been told more than 2,000 police forces have been deployed, and very senior police officials from Delhi police have arrived over here at Singhu border, who are very closely monitoring the situation at Shambhu border of what's happening. As the action unfolds, whatever happens next, the action will begin from here as well. So it depends on how the farmer union leaders will march towards the national capital when the permission had not been given.
Well, that was the ground report from the Singhu border. But we wrap the show with some somber news. Eminent jurist and senior advocate Fali S. Nariman passed away at the age of 95. Fali S. Nariman had argued several landmark cases, including the NJAC verdict. Now, in June 1975, he stepped down from the role of the Additional Solicitor General of India to protest against the calls taken by the Indira Gandhi government to declare an emergency. Nariman had also voiced criticism regarding the recent judgment in Article 370 case. We also mourn the loss of another great icon, an icon whose voice resonated in millions of homes across the nation, Amin Sayani. The maestro behind the timeless Binaka Geetmala has left us at the age of 91. Born into a family steeped in literature, Sayani's journey began on Radio Ceylon in 1951. His style, bridging accessibility and information, endeared him to the nation. From its inception in the 50s to its revival in the early 2000s, Binaka Geetmala was a cultural touchstone, and as of now, we bid farewell to the voice that will echo through the time. That's all that we have for you on The Reporter, but please stay tuned to NDTV Profit as we bring you all the latest news and updates.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody...
Welcome, you're watching the small and mid cap show on NDTV Profit. I'm Harsh Saita, and with me we have Pankaj Kumar, who's the director of production at ONGC, with us to give us more perspective on this. Welcome to NDTV Profit, sir.
Thank you so very much, Harsh. Very good morning to you and Maima.
Right, good morning, sir. Sir, first off, I want to try and understand, before I move on with regard to the news and the real announcements that have come in, I want to ask you about Krishna Godavari. When has production started? I believe December 23 is when production has started. Could you give us more color and some perspective on that? And second is production will start to increase, of course, over time. So where should it normalize at? Currently, you are at 12,000 barrels, and you also have some natural gas coming out. What's the sense with regard to where that will normalize at?
Yeah, Harsh, to correct yourself, the oil production we started from 7th of January this year. In fact, the FPSO, the floating production storage and offloading unit, that arrived Indian waters last year. And then we were to commission a lot of facilities subsea, because the wells are as deep as 600, 700, 800 meters of water depth. So those wells were to be connected to the FPSO and commissioning was to be done. And after that, we started production from 7th of January. Currently, we are producing around 12,000 barrels of oil per day from that, the 4 wells which we have connected to the FPSO right now. In case I can give you a little background, we started gas production from this block in March 2020, when the deepest well, which is in the range of around 1,440 meters of water depth we opened. And thereafter, we opened 2 more gas well from the same field, U field we call it, in the same range of water. And currently, the block as a whole, we are producing around 1.7 MMSCMD of gas. You asking how to ramp up and when to ramp up. So as we are speaking, the offshore activities are on full swing. We are in a process of installing the process platform over there, and we expect it to be ready somewhere around June, July of this year. Once the platform comes, we'll be ready for export of gas, additional gas, which will be generated at FPSO and from the more gas wells which we are going to open. We expect to take oil production to the level of around 45,000 of barrels of oil per day. And the gas cumulatively should go up to around 10 million meter cube per day. That's what is expected from this KG-DW and 98/2 NEL block which we are developing. I hope I'm able to answer what you wanted.
Right, Mr. Pankaj. Mahima this side. Since you mentioned about KG Basin, I believe total of 45 wells so far have been dug. How many of these were successful so far in terms of oil discovery? If you can just guide us through that.
Yeah, Mahima, actually, in the exploratory phase of this 98/2 block, certain wells were drilled, which led to, almost 10 small discoveries, which as a cluster, we are saying cluster 2 fields of 98/2 block. In fact, whole of the block area, which was originally given to us, was around 7,600 odd square kilometers, which was divided into 3 cluster 1, 2, and 3, depending on the water depth from north till south. So cluster 2 fields we are developing. In this cluster 2 fields, we drilled 26 development wells. Exploratory keep aside. Now from 26 development wells, 13 are oil producer, 6 are gas producer, and rest are water injector. So currently we are producing from 4 oil wells and 3 gas wells. The water injection probably we are going to start today or tomorrow, but not all the 7 which are going to give addition to these 4 oil wells. Rest, as we open the wells, we'll keep enhancing the production and enhancing oil, gas, and water injection all. So that is the scenario in terms of the well.
Sure, sir. Now, with regard to, I'll switch focus to CBG, which is compressed biogas. Now, with regard to the JV, what kind of revenue are you projecting, and from when does this revenue come on stream for you?
Harsh, this CBG, in fact, we intend to develop almost 25 CBG plants currently. So we started scouting the market, how to go, because we needed somebody joining us to develop all these facilities, all these infrastructure, market, this kind of a gas. We yesterday announced 2 joint ventures with 2 different companies for CBG development. The focus with one company is municipal waste. The focus with other company would be the agro waste. Already the companies, we are in a process of bidding to acquire municipal waste CBG plants. One bid is already submitted, and the second bid very soon this company would be submitting. Currently, since the company is not yet fully formed, so ONGC is taking lead on it. In fact, we are creating a subsidiary of ONGC also for this purpose, which will be named as ONGC Green Limited. We already have got the approval from Government of India, and rest of the formalities are underway. And ONGC Green will be looking after all our business with respect to the alternate energy, whether it is CBG, whether it is LNG, whether it is solar, wind, or whatever new comes in. In fact, last year, in a interview or in a call, media call, ONGC as a company has announced to go become net zero 2038. So, making progress to achieve those numbers, this ONGC Greens was being formed, and with that, these JVs are formed. Let's see if we win the bid, then of course the revenue, etc., will come. We'll probably come to the market with further details as and when it progresses. I think this time may not be good enough to, give me any number at this point of time.
Right, sir. So, also regarding your merger of 5 companies in Imperial Energy Limited, which is a subsidiary of ONG Videshi, how will this impact ONGC India overall? And I suppose there were some issues with respect to collections that ONGC Videshi was facing in Russia. So, do you think this will have some kind of relaxation in terms of that?
Our overseas assets, they are always managed by ONGC Videsh, which is a separate board-run company. Yes, we have assets in Russia. The biggest one is Sakhalin and Imperial. When there were issues with respect to Russia, sanction and all, some disruption was there with respect to development activities in Sakhalin. But the production has already been resumed to, pre-disturbance phase, if I can say so. And OVL is in continuous engagement with their partners in that those 2 assets to sort out the rest of the issues which are still there. But we have already normalized the production. So I would say company has progressed a lot in that direction to resolving the issues. And now there should not be any further issue with respect to these 2 assets.
Okay, and just one more question. Currently, the gas eligible to the is eligible to a 20% premium pricing, which approximately contributes 3 to 4% right now. And do you see this going upwards of 3 to 4% in terms of production? What is the target that you're aiming at? And also, with respect to your rights issue of HPCL, if you can just throw some light upon that as well.
Right, Mama. I'll take one by one.
Yeah.
See, you are asking about the gas. With respect to gas, if I can say the Kirit Parikh committee report, they had mentioned the gas price as 10% of the dated Brent. 10% of the dated Brent, but capped at 6.5. Then ONGC started engaging with the government of India because every year we are operating in the mature fields in India. We see almost 6 to 7% decline in our natural production. So we need to add fresh production, maybe through fresh wells or drilling of more wells, some exploratory efforts. So we keep on adding new gas to it. As we are adding new gas to it, and with the such prevailing oil and gas market, high oil prices, services cost high, the cost of additional gas is also high. So government has agreed to give us 12% of dated Brent for the new gas without a cap. So that means when there will be no cap, or they may cap it at a very higher value, which is way above than 6.5. So that will give us more revenue for the additional gas. Year on year basis, I'll be replacing the existing gas, say by around 6 to 7% with the new gas, and I'll keep getting more revenue for that gas. So that much I can say on the gas front, which you asked, I think. And for next question was the right issue of HPCL. I think this is little sensitive at this point of time, and I should refrain commenting on this. That's my perception on this issue.
Right, we appreciate that and appreciate you being candid with us. So it's been a pleasure getting all of that perspective with regard to ONGC. Thank you so much for chatting with us, giving us and our viewers those views. Thank you so much.
Thank you. Thank you so much, Harsh and Mahima. ONGC is positive, will give, continue working for energy security of the country. That much I can assure you.
Yeah, we don't doubt that. Thank you, sir. Thank you so much. It's a pleasure speaking with you.
Thank you, dear.
That was, of course, Pankaj Kumar, who's the Director of Production at ONGC, speaking with us exclusively with regard to a whole host of things which are playing out on ONGC. Now, time to slip into a very short break. Take a quick breather. More on the other side. We've spoken with Systematics Group. We've spoken with the Senior Vice President, Institutional Equity, Pratik Tholia. Stay tuned for that chat.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching the small and mid cap show here on NDTV Profit. You know, a couple of sectors in terms of how they've done in Q3. A large chunk of the companies in these sectors are within the mid and small cap. Pretty much all of the companies are in the mid and small cap. And we've picked out textiles and sugar, at least for the discussion today. We've called in Pratik Tholia, who's the Senior VP at Systematics Group, to try and dissect some of the trends going into Q4 and what we can take from Q3, what should we expect from FY25 on both of these sectors. Welcome to NDTV Profit, Pratik.
Yeah, hi. Good morning. Thank you so much.
Right. Pratik, if you can speak to us about how textiles is doing, how it has done in this quarter, what has the drag been, especially in international? How should one look at it in Q3 in terms of the numbers?
Yeah, so for textiles, I think Q3, if you see on the volume front, we've seen significant pickup happening across, whether it is garmenting or whether it is even yarn or whether it is the home textile sector. So all of them have seen, pickup on a YOY basis. Even sequentially, there has been some improvement that we have noticed, or especially on the yarn front. So things are now, coming back to normal as far as volumes are concerned. However, because cotton prices have softened on a YOY basis, so that impact we are witnessing on the realizations of the end product. So garment realizations have come down. Some of the textile